Note. Hello and welcome to Power Breakfast on CNBC-TV18 in the Mumbai News Center. I am Hormas Patakia and these are the headlines we are tracking for you this Thursday morning. The S&P 500 and the Nasdaq hit a record high in a truncated session despite weaker than expected private payrolls data for June. Minutes from the Fed's June meeting indicates that despite the progress on inflation, it will not cut rates until there is greater confidence of it breaching the 2% mark. Asian markets trade with gains on a strong handover from Wall Street. The gift Nifty is also suggesting a higher start for the Indian markets. Brent crude rises above $87 a barrel as U.S. inventory falls, signaling an uptick in demand ahead of the 4th of July Independence Day holiday. Fears that Hurricane Beryl could damage oil installations along the Gulf Coast also push prices higher. The Uttar Pradesh governor has constituted a 3-member judicial inquiry commission to look into the Hathras stampede. The police file an FIR against the organizers of the religious congregation, but the FIR does not name Narayan Sakar Hari, the self-styled godman who was at the center of the event. And polls predict an unprecedented victory for the Labour Party, with voting set to get underway in the UK later today. A minister in Rishi Sunak's cabinet has already predicted a landslide for the Labour Party, but Keir Starmer says that the Tories are adopting a voter suppression tactic by talking up a Labour landslide. And on this Thursday morning here on Power Breakfast, let's first take a look at how the Asian markets are faring. It's a positive start across the Asia Pacific considering the handover that they had from Wall Street. The Taiwanese index now trading with gains of over 1%. The Hang Seng is trading with gains of 0.5%, but the focus point is on the Japanese indices because the Topix, which is the broader market index there, that has hit a record high in today's trading session. So it's a positive start across the Asia Pacific. Global cues by and large are very positive. Pull up the gift Nifty as well, and that too is indicating another gap up start for our own markets. The implied open suggesting a 97-point uptick at the start of trade for our own markets. So highly likely that the Nifty may open at yet another record high this morning, as it closed pretty close to that record high level yesterday as well. But from Asia, we move to the US markets, where the S&P 500 and the Nasdaq rose in an overnight session to post a record high as data pointing to a softening economy raised hopes of the Federal Reserve cutting interest rates in September. Now, the Dow Jones closed slightly lower, was an underperformer pressured by selling in United Healthcare and consumer stocks as well. CNBC's Contessa Brewer gets us a wrap of all the action on Wall Street.
Markets ended the shortened Wednesday trading session mixed, with the S&P and the Nasdaq closing at fresh records, while the Dow finished down slightly. The Dow shed 24 points, the S&P climbed by 28, and the Nasdaq gained 160. A potential deal for Paramount Global back on the table. Sources tell us David Ellison's Skydance Media has reached a preliminary agreement to buy Sherry Redstone's National Amusements and merge it with Paramount Global. The resurrected deal, which initially fell apart a few weeks ago, would see Redstone receive $1.75 billion for National Amusements and have Skydance acquire roughly half of Paramount's controlling shares for $4.5 billion. Paramount's special committee is currently reviewing and voting on the new deal, and this comes just a day after we learned media mogul Barry Diller was showing some interest in the company. The Labor Department reported Wednesday initial claims for unemployment edged higher last week, up 4,000 from the week before, and private payrolls increased by 150,000 in June, according to a report from payroll firm ADP. That's less than forecast and the lowest total since January. ADP also found wage growth slowed to a nearly 5% pace from a year ago. That's the smallest increase since 2021. That's what's happening here in the U.S. I'll send it back to you in Mumbai.
Now, the U.S. Federal Reserve officials at their June meeting indicated that it will not be appropriate to cut interest rates until they have greater confidence that the inflation is moving down to the 2% target. CNBC's Megan Casella is here to give us the key highlights from the Fed minutes.
We heard from the Fed that they did see modest further progress toward 2% inflation in June. They emphasized it would not be appropriate to lower the target rate until they had greater confidence that inflation was moving toward 2%. Some of that is what we saw in the statement. It's what we've heard from Chair Powell. Most see the policy rate as restrictive, but there was some debate and some uncertainty over just how restrictive rates are. Fed also said employment and inflation goals are now in better balance, leaving monetary policy, quote, well positioned to deal with risks and uncertainties. They said they're prepared to adjust policy if risks emerge or in response to unexpected economic weakness. When we look at the outlook a little bit on the inflation outlook, several participants said if inflation persists or rises, the Fed may need to raise rates further. The Fed also observed longer-term inflation expectations remaining well anchored, so they say that underpinned disinflation. They think that's still moving forward. On economic growth in the outlook, a majority viewed economic growth as gradually cooling. Many participants saw the rise in credit card use and delinquency rates as a, quote, significant concern. A few saw fragility in commercial real estate as a downside risk to economic activity. On the labor market, some interesting debate here. The Fed saw reduced tightness in the labor market. They listed decline in job openings, a lower quits rate, reduced hiring, and slower wage growth. Several participants emphasized that further weakening in the labor market could actually lead to higher unemployment, and they say that that's in contrast to in the past when we've just seen reduced job openings over the past couple of years. Some participants said the labor market would need careful monitoring now that the dual mandate is back in better balance. But participants generally believed that further gradual labor market cooling may be required before they have that confidence to cut rates.
And let us now also listen in to what the experts have to say about the June Fed minutes, the June payrolls data, and the overall outlook on the U.S. economy.
You know, the neutral rate, if you looked at the last 5 years, hasn't budged in the SEP. It's basically been 2.5% with a range of something like 2.4 to 2.6. And then all of a sudden, the top end of the range started to blow out a little a year ago and then really expanded over the last 3 months, top end of the range now being 3.5. So I'm going to dig through these minutes. It's hard to read them while I'm on with you guys, but I'm casually looking at it and looking at the headlines, and I think it's a healthy discussion.
I think the market is in a sweet spot in terms of where the rate cycle is. So, I have some models that indicate that the bond market, the 10-year yield, is at around fair value, 4.25 to 4.5. That's pretty much where it should be based on where the forward curve is and where nominal GDP has been averaging. The Fed, of course, is at 5 3/8 with a bias to ease, and it has prudently been holding off on that because it's much better to wait too long than to go too early and then have to take it back. And the economy doesn't seem to be, hanging on for dear life, waiting for those for those rate cuts to happen. But certainly the core PCE number from a few weeks ago certainly gives the Fed a little bit more margin to maybe launch that first rate cut, in the coming months.
It's been a very modulated cool down. The labor market is striking the right note at the right time to be consistent with that gradual easing that's consistent with the 2% inflation target. The concern, and this is one concern we have, is how concentrated these job gains are. The leisure and hospitality sector is carrying 40% of the job gains this month. And so while we think that this is a gradual cool down that we all expected, I'd like to see the hiring be more broad-based than it is now. Leisure and hospitality, the labor market more broadly, has really helped the Fed. It's helped the Fed be patient. It's kept its pace and then gradually cooled again at the right time.
That's all we have on the global market action so far, but how will all of these overnight cues impact our own markets? We have our research team joining in with how the trade setup looks like and the stocks that are likely to be in news today. First up, Sudarshan gets us all the market cues we need to watch out for. Sudarshan, good morning. A very good day yesterday. Looks like the trend is continuing today as well.
Exactly. So if I can sum up the market move of last few days in one line, it can be said it's a one-way traffic, and seems like that we are set to welcome Indian cricket team with another day of record opening. Now, talking about Wednesday's move, it was a record close for major indices. Sensex crossed 80,000 for the first time, and gain of last 10,000 points from 70,000 to 80,000 has been the fastest ever. On market capitalization front, India remains the fourth biggest stock market with market cap now approaching rupees 450 lakh crore. What's interesting in the move of last few days is we are seeing a basket buying. Instead of few stocks from one sector, we are seeing buying in almost all the names. The week had started with a big buying in IT with an expectation of a strong earnings, and now after HDFC Bank's shareholding details and a few quarterly updates, we are seeing a similar pattern in banking names. Take a look at the delivery buying in the banking names that were top Nifty contributors yesterday. For HDFC Bank, it was nearly rupees 7,000 crore, highest single delivery buying that bank has seen in the last 4 months. And this was reflected in FI flows for yesterday as well. FIs bought shares of more than rupees 5,000 crore in the cash market, while sell figure for DIs was less than rupees 1,000 crore. And this higher trend market up move is expected to continue today as well. GIFT Nifty is indicating a start at record high for Nifty, and currently it's up more than 100 points. We are seeing support from global cues too. On Wednesday, we saw S&P 500 and Nasdaq hitting record highs. Even US 10-year yield has slipped below and is now back below 4.40%. Also, Asian markets have opened higher. Japan's index Topics is at a record high, and in the cues to watch on global front, US market is shut for Independence Day. Keep an eye on FTSE as UK general election begins today. Talking about stock-specific reaction, we should see stocks reacting to their business impact. Some of them are Bajaj Finance, L&T Fin and Bandhan Bank. Also, keep an eye on telecom companies and new tariffs come into effect today.
Only apt, right? Because the entire country is cheering for the Indian team to arrive. So why not the markets? Sudarshan, thanks a lot for that update. Now over to Vamakshi, who would list out the stocks to watch out for in today's session. Vamakshi, good morning. Plenty of business updates, I guess.
Well, absolutely, Hormaz. A lot of business updates. Let me first start off with the one that came from Bajaj Finance. They reported a growth of almost 31% on a YOY basis in their AUM, and their AUM now stands at 3.54 lakh crores. Deposit book also saw a good uptick of 26%. The customer franchise has also seen an uptick and it now stands at 8.8 crore customers. Bandhan Bank reported a nearly 22% jump on a YOY basis in its loans and advances. It was up nearly 1% sequentially. Total deposits have grown at a much faster pace as compared to the loans and advances. It's grown at almost 22.8%. While on a sequential basis, however, it has declined 1.5%. The CASA ratio has declined to 33.4%. Suryoday SFB is the next one we will be watching out for. Gross advances were up 42% YOY, 4% sequentially, but the disbursement saw a sharp downtick, down nearly 26% quarter on quarter. But nevertheless, on a year-on-year basis, they were up almost 46%. Total deposits saw an uptick, which was largely in line with the advances. They were up 42% YOY, and the CASA ratio has declined to 17.7%, but the asset quality has improved, and gross NPA now stands at 2.67% for the company. L&T Finance reported good growth in its retail disbursements. They were up almost 33%. The retail loan book resultantly saw an uptick of 31%, and now the retailization percentage now stands at 95% as compared to 82% a year ago. Vedanta also reported its operational update for the first quarter, and in this quarter, total aluminium production was up 3% YOY, flat sequentially. Mined metal production was up 2% but was down nearly 12% sequentially, and saleable metal production was up 1% but down 4% sequentially. GE T&D India has received orders. It's received an order worth almost 64 million euros from Grid Solutions France, and it has received another order worth 26 million euros from Grid Solutions Middle East. And lastly, let's also focus in on Brigade Enterprises. They've signed a joint development agreement. This is for a residential project spread across 8 acres in Bengaluru, and the GDV of the project is expected around 1,100 crores.
Vamakshi, thanks a lot for that update, and we'll keep all of these stocks on our radar. And lastly, Nigel Johnson with cues from the FNO space. Nigel, good morning. The weekly expiry today, but it's been one-way traffic for the Nifty.
Well, that's right. Things have been looking good. The only problem yesterday was we made the high of the day in the first hour, and after that, we couldn't get past that. So that could be a bit of a worry. But looking at the GIFT 50, well, we're going to be gapping up with a gain of closer around 100 points odd. What transpired yesterday? Well, on the Nifty, we had a mild short covering that we saw. While in the Nifty Bank, there appeared there was fresh long positions that were added. And that one will have to lead the way from here on as well, given its weight and given the way that, in fact, it bounced up and traded, ended with a gain of closer around 100 points. What did the FIs do? Well, it tallies with what we saw on the Nifty as well as the Nifty Bank. It appears they added long positions, particularly on the Nifty Bank. Well, there was some short covering, as that chart is telling you on the screen. And in a matter of a month, just take a look at the way the things have changed. Well, just a month or so ago, the short positions were at around 84%. Now, that's turned around, and in fact, now you have the long positions at around 84%. So that graphic plate, in fact, is telling you the story, the way the markets have turned around. And from being net short by close to around 3.5 lakh contracts, now they're net long more than 3.5 lakh contracts out. So that's the big swing factor. And the FIs and the clients, well, they've done a bit of a switcheroo, so to say. Because the clients earlier were long, the FIs were shorts. Now you have the FIs that are long, while the clients are net short on the index. What about the other positioning that we're looking at on the Nifty options chart since today's the weekly expiry? Two strikes were fairly active. It appears there's a short straddle taking place. At the same strike, you ride the call as well as the put. Pocket roughly around 150, 180 rupees going by the premiums that we saw in the last few sessions. And the broad band will be 150 plus 24,300, 150 minus 24,300. So you get the broad expiry range that we're looking at. You'll have to say that once we get past that level, if in fact we break out of that range, then the markets can go anywhere. But for the time being, it appears the street is positioned for that range. Back to you.
300-point range, then we'll watch out for that on the weekly options expiry for the Nifty. Nigel, thanks a lot for that update. But time for a short break here on Power Breakfast. Up next, UK goes to the polls today. We get you the latest on the election. Stay tuned. Back on the other side.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18.
Welcome back. And Great Britain goes to polls today to decide who between the Conservative Party's Prime Minister Rishi Sunak and opposing Labour Party's leader Keir Starmer will take on the reins of the country. The polls are suggesting that the Labour Party is likely to come into power with a huge majority. If successful, my colleague Sanjay Suri filed the story on the battle for Westminster.
British voters are taking a decision today who they want in here at 10 Downing Street. If the opinion polls are right, Rishi Sunak is out and Keir Starmer is in. But of course, no more opinion polling now. It's time for the real polling. Over the space of 15 hours, from 7 a.m. until 10 p.m. local time, an estimated 46 million voters in a population of 67 million will be eligible to elect 650 members of parliament. The average size of a constituency is about 70,000 voters, and of course, not everyone votes. At the top of everyone's mind, as declared, three issues: the economy, immigration, and the National Health Service. Rishi Sunak's record on all three is dubious amidst contested claims. Labour says the government has failed, the government says it hasn't. Sunak has not proved particularly popular, but then Starmer is not exactly Mr. Popular either. This is turning out to be a choice that will make a winner of the one less unpopular and the one untested. The British are quite bored with 14 years of a single party. That boredom could be decisive today.
Could be decisive today indeed. Sanjay Suri, thanks a lot for that update from the UK. Now on to France then. The latest polls show that the country's far-right party may actually fall short of the majority in the upcoming runoffs. Pollsters had earlier estimated that Marine Le Pen's National Rally would win up to 300 seats after the first round of votes last weekend, but the latest poll suggests that the right wing could only clinch up to 220 seats. Now that is falling short of the 289 seats required to control the National Assembly. Now this comes after efforts from the centrist and the leftist parties to block Le Pen's party. Now more than 200 candidates had backed out of the races. this week to give other mainstream candidates a better chance of beating someone from the far right. Now, the runoffs will take place this Sunday, the 7th of July. And time for a short break here on Power Breakfast. Up next, we get you cues from the commodity space. Stay tuned, we'll be right back.
Streaming live 24/7 on YouTube.
48% is being given by domestic contributed, 52% comes through from export. I would like the ratio by and large, will remain same, but I wish, as far as the domestic is concerned, it tilts, towards domestic. I'll be happy if domestic is 53, 54, 55, and as far as the exports are concerned, that is, 45, 50 or whatever it is. So we do around 45% in chronic and 55% in acute. Obviously, as far as chronic is concerned, the margins are better, and company will keep on, focusing on that.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as
Welcome back, and as promised, Manisha Gupta is now joining in with all the updates from the commodity space. Manisha, good morning. What are you picking up today?
Hey, Harmal, thank you for that. Well, today's a day when all of the commodities are trading in the positive. We have Brent crude prices trading at a 2-month highs, and this is after the U.S. inventories have declined by 12.2 million barrels in the previous week. So that tells you that the on-ground demand in sense of 4th of July and summer driving seems to be picking up. Also, the hurricanes in Gulf of Mexico, the prolonged conflict between Israel and Hamas is continuing to add to the premium here. But overnight, and the Asian markets right now, it has been good going for the metals as a sector also. So you have a decline in US dollar and treasury yields, and that has been supportive, taking the gold prices to a 1-month high. Silver is trading at a 2-month high. You have iron ore prices trading at a 1-month high as well, with 2% gains overnight. Copper has continued to gain for a 4th straight day today. And we also are looking at aluminum prices, zinc prices trading in the positive. So it started at a very, very strong day for major commodities.
Very strong day indeed. Manisha, thanks a lot for that update. And from commodities now to more national news, and more developments have emerged in the Hathras stampede. A 3-member judicial committee has been set up by the Uttar Pradesh government to run a probe into the stampede that killed 121 people in the Hathras district. The Chief Minister Yogi Adityanath has handed strict instructions to officials to prepare the standard operating procedures, and permissions for such events would only be granted only if the minimum conditions were met. Additionally, the Uttar Pradesh police has filed an FIR against the organizers of the congregation, but the FIR does not include Baba Narayan Hari, also known as Sakar Vishwa Hari Bhole Baba, as an accused. And the T20 World Champions are finally home after being stuck in Barbados for nearly 3 days due to the Category 4 Hurricane Beryl. The champs touched down in New Delhi earlier this morning and were given a grand welcome from supporters and well-wishers. Team India will now make their way to the Prime Minister's residence for breakfast and will then leave for Mumbai later in the afternoon. The team will also have an open bus parade in the evening, where they will proceed from Nariman Point in Mumbai to the Wankhede Stadium for a felicitation ceremony where they'll be awarded the 125 crore rupee cash prize announced by the BCCI. Happy and joyous moments indeed for our champions and of course for the crores of cricket fans across the country. But with that, it's a wrap on this edition of Power Breakfast from me and the team that put this show together. Thank you so much for watching. Bazaar Morning Call takes the action forward.
%, 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs.
If FIs would buy, markets would rally. If FIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today. Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIs would buy, markets would rally. If FIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
All right, well, those are visuals of the winning India cricket team in Delhi. They've touched down in Delhi. I mean, it's going to be a big day here, a day of celebration, a day of jubilation. They're in Delhi, but they will be here in Mumbai, and they'll land here in the afternoon. They'll be traveling all the way from the airport to, of course, the Wankhede Stadium. There is a open bus parade, which has been organized in town, which is the southern part, the southern tip of the city here in Mumbai. And of course, there is a small ceremony at the Wankhede Stadium itself with BCCI officials, etc. So, it's going to be a big one. 4 p.m. onwards, we of course will show you visuals through the course of the day in terms of what is happening. But 4 p.m. onwards, we're going to be telling you, we're going to be kind of sort of covering live all of the action which is coming through. Guys, morning.
Morning. Guys are with us now. I mean, I like this. I love this whole AI and AR, right? Almost getting that same vibe and feel, even without being in Delhi. So, yeah, I think it's going to be fantastic momentum.
The world champions are back and, look forward to the parade later this evening as well. So, as Prashant, you took us through that, what's going to be going on, you get your goosebumps. We are champions, and the manner in which we came back, fighters. I loved it.
Absolutely. And, well, as I said, it's a full day's worth of program, both in Delhi and here in Mumbai, and we will sort of get you coverage of all of it as the day proceeds. But we got business on hand. We got to look at what the market is going to look like as well, because we've had a real good breakout yesterday. So let's actually begin what you need to know in terms of this trading setup this morning. So yesterday, the Nifty decisively broke above the resistance level. Resistance zone, really, which is, of course, the previous high and slightly above that as well. We'll get to specific levels in a bit, but it was a decent, good breakout which happened. Now, overnight markets have been pretty positive. You have US markets which rallied after yields fell, right? And why did yields fall? I mean, the changes are on your screen. The Nasdaq was up about 0.8, S&P 0.5% higher. Yields were down 7 basis points. I'm talking about the US 10-year, and that is on the back of ISM Services Index, which actually was weaker than expected. So that essentially is those are the changes, those are the numbers which came through. Dollar index was down as well to about 105.31 levels. The thing is, weaker data in the US is not necessarily great for stocks. It's actually bad for stocks. But what comes before things turn sour perhaps is rate cuts and expectations of rate cuts. And rate cuts are positive for stocks, not weaker data. So, we are somewhere in the middle of trying to decide, what comes first. Whether the Fed will be able to respond before the data really turns sour and the real economy really starts to hurt and we'll be okay. Or it's going to be the other way around, in which case, it'll be bad for stocks as well. So we're in that muddle, we're in that go-through kind of phase. Now, tonight, US markets are shut. So there's not very much activity out of the US later today. But tomorrow, you essentially have the jobs number, the jobs data, the monthly big jobs data, which will come through. And I think it'll be closely watched because we've had Fed officials, Fed Chair Powell earlier this week coming through and essentially saying that we're in a period of disinflation as opposed to the first quarter when data actually surprised on the upside. So the jobs number tomorrow, I think, becomes important. Just to sort of circle back to levels here, as I said, we decisively broke above the resistance zone of 24,174 to 24,236. The immediate target for the Nifty, we're in a up and up kind of a phase. And of course, now we got to look at extension numbers. The immediate target is 24,566. That is the daily upper Bollinger Band. And above that, you basically you need to take a look at the equality level. You look at the last move and then kind of sort of assign values on an equal basis on the upside. That gets us to about almost 24,900 levels. But step by step, 24,566. And then, of course, you look at higher numbers from there on. On the way down, we should not break the recent low of 24,056. That should not go. In any case, we're putting quickly a lot of distance between that number and where we're at. Bank Nifty also broke above the previous high of 53,181. Immediate target again is the daily upper Bollinger Band, which is 53,818. So we left off at 53.90 or so. On the way down, supports will come in at the 40 hourly, which is 52,552. Again, because the gaps have been so large, especially for the Nifty Bank, I mean, from last traded price to the support level, there is a bit of distance which has emerged. I just want to leave with one number, which is the FI positioning in index futures. That's now jumped to an even higher level. There was a bit of a drop yesterday compared to day before yesterday compared to the prior day, but yesterday we are back to a new high, which is about 3.78 lakh contracts long. So positioning is one-sided, but for now it is definitely working. The GIFT Nifty will come up on your screen indicating what the start is going to look like. Another 9,500 points or so. So, galloping ahead.
Absolutely, and that's been the way for, I think, global markets. Us here in India, the Nasdaq. This morning, the Topix in Japan has hit a fresh all-time high. So it's just up and away for global equities. Just for us, I mean, to add to what Prashant has said, we also had the Fed minutes come out yesterday, but the minutes were released after the markets shut. The markets had shut earlier than usual because of the 4th of July holiday. And they're essentially reiterating what we already know, what the Fed chair himself has been saying, that we need more data to get more confidence to see that this move down in inflation, that's sustainable, and that sustainably it will come down to 2%. So that's what the Fed minutes said. There was some, divergence between how the members are voting, but in a nutshell, that's the summary. Just to talk about the actual numbers on the weak data that we got out of the US, we had weak labor market data and weak ISM services data. So on ISM services, the gaps are quite a bit. That's why I'm just putting up the numbers as well. The services PMI came in at 48.8. That's even below 49. The estimate was 53.5. So that's the extent of the miss. And the ISM services business activity, again, that was below 50, whereas the expectation was 61. So therefore, the miss was very large, and therefore we got that reaction in yields and in the dollar as well. And add to this, the private sector payrolls report, because the non-farm payrolls number comes out on Friday. The ADP number was out, and that was also a miss. The addition was about 150,000 jobs, which is lower than May. May was 157,000. And this number is also lower than estimates, which were at 160,000. And all of this put together led to that down move on yields, as Prashant mentioned, 6-7 basis points down. The dollar was on the back foot as well. So that also happened. By the way, the only thing positive in all this is oil, because oil had rallied up to 87, above 87. But this morning, Brent is showing some red. It's about 0.5% lower. So that's the only positive coming out, from our perspective in terms of the negative data that we had. Now, coming back home, the buying yesterday was powered by a lot of FII cash market numbers as well. The kind of buying that we're seeing in banks and in HDFC banks. So numbers are on your screen. Almost 5,500 crores of FII buying. Domestic institutions were on the sell side. They sold off close to about 1,000 crores. And I guess when we're talking banks, maybe business updates will keep the momentum going as well. Lots of them have come through, and some are mixed. Bandhan is like, for instance, a little more negative than the others. But then you have a Bajaj Finance to look at today. Yesterday's poster boy was HDFC Bank. My sense is this could be the one for today, at least as we start off, because those numbers are looking extremely positive on the business update side. Nigel.
Well, just one word on the FI numbers, right? The flows, as you said, they were positive, but going by the kind of delivery you saw in HDFC Bank yesterday, actually, net, they weren't big buyers in yesterday's trading session, ex of HDFC Bank. And I'll tell you what, we're missing the FI shots in the system. Otherwise, this market would have been well and truly on its way to around 25,000 odd. But let's run you through the top cues for today. Global cues are positive, mind you, because you have yields that are lower, you have the dollar index as well, that's softer, and that bodes well for us. In addition to that, you have, the US markets that are shut, so no shocker coming in today. And then the street takes note of the jobs report, that numbers that come out tomorrow. Today, we have the weekly expiry that plays out on the Nifty as well, so expect some volatility in the second half of trade. The only fly in the ointment is that Brent crude prices have moved up to around $87 per barrel, and that's getting a little bit uncomfortable with the inventory is going in lower and demand as well bouncing back. So that's a bit of a problem pocket, but we've seen in the past, it moves to around $90 and then it comes down. So hopefully that's the case even this time around. Yesterday, we had some bit of short covering that we saw on the Nifty, while on the Nifty Bank, there were some long positions that were added, and that perfectly ties in what the FIs did. They added more than 25,000 long contracts and they covered close to around 5,000 short contracts, which takes the total long positioning to around 84%. And in a matter of a month, what a big change we have seen in the FI positioning. Just a month or so ago, you had them being net short on the index. And now, in fact, they've moved to being net long on the index. And in percentage terms, if we can get that number as well up for you, from being net short, to the tune of close to around, the ratio earlier was 84% in favor of the shorts. Now they're long with 84% of their positions on the long side. So that's really something that you should take note of as well. Well, moving to the client positioning, the FIs as well as the clients, they're on opposite sides of the spectrum. So the FIs are net long, while the clients now are net short with close to 2.5 lakh contracts on the short side. Moving to the options data, since today you have the weekly expiry that plays out, the 24,300 call as well as put were fairly active. And you get a sense that there's a short straddle that plays out here. That's, you write the same strike and in fact you pocket the premium. And the premium you pocket is around 150 rupees, which brings us to the levels. 24,150 on the downside, 24,450 on the upside.
Right,
Nigel, you have to get the throat ready. You have to cheer, scream and shout, right? 5 p.m. onwards, but I'm sure it'll be better by then.
Some water and it'll be well. Well, let's get you some money market views here. Parul Mittal of Standard Chartered Bank says that the USD INR traded in a tight range between 83.35 to 83.6 to the dollar as dollar inflows after inclusion of Indian bonds and major global bond index were offset by exporter selling at the end of the quarter. He expects the pair to trade in a narrow range in the near term as the local banks are likely to stay active. He expects the pair to trade between 83.25 to 83.65 to the dollar in the coming week.
On bonds, Parul says Indian bond yields have traded range-bound despite the rise in global yields, likely driven by stronger local demand-supply dynamics. He says market would take cues from the union budget and progress of the ongoing monsoon session in the near term. She expects the 10-year benchmark bond yield to trade in a range of 6.97 to 7.03 in the near term.
Well, we have a lot of stock-specific action track for you today. We get to that in just a bit in our special Top 10 segment. Look at Bajaj Finance, Vedanta, L&T Finance, ITD Cementation, Marico and Brigade Enterprises. All of them will be reacting to positive news flow. On the flip side, Bandhan Bank, Saryoday SFB, Cello World as well as Bharat Forge will be reacting to negative news flow.
Okay, well, lots of stocks here, which we will talk about. Dean Kim is head of global research product at William O'Neill & Companies with us. Dean, great to have you with us here. Thank you very much. And let's talk stocks. What else, right? I mean, it's a market for all kinds of stocks. And, so just a quick word on the Nifty. I think we've taken out the earlier highs. And I was sort of putting numbers, which is the daily upper Bollinger Band, which gets us to about 24,566 straight away. I mean, if you want to look at targets, etc. I mean, your thoughts there. And then stocks. And let's start with power names there. PFC, REC, IREDA, and a whole bunch of names there in the power sort of ecosystem. Go on, Dean.
Yeah, in terms of I look at the Sensex, all-time high at the moment, very strong breakout. When I look at Indian earnings overall, if I look at Sensex earnings, we're at 4,000. And, if you put a 20 multiple on it, target would suggest 80,000 and we're almost there. However, market always looks forward. And when we look at the next fiscal year, we're at 4,300, which is about 8-9% higher. So it wouldn't be unreasonable to expect high single-digit performance going forward. There's a lot of good things happening at the moment in India. Oil prices pretty stable. U.S. dollar is pretty stable. Overall, the emerging markets are performing well. And on top of that, you have a lot of demand for Indian bonds now as part of the JP Morgan Emerging Market Global Index. So that's going to have a trickle-down effect in terms of lowering yields for India. That's going to improve the cost of borrowing for companies. And that's going to translate into higher business activity and potentially higher earnings for next fiscal year. So on the back of that, the market continues to widen in terms of breadth. You mentioned some power names. The one I see is CESC as part of utilities, very good breakout. But besides that, there's a lot of other names like basic material, cap equipment, consumers, financials, and so on. So breadth is pretty wide.
Dean, hi. Great to have you on the show. I want to ask you straight away about banks because we've got these big moves that have finally begun. And I remember our last conversation, I think, if I remember correctly, you were looking out for the 1600 level on HDFC Bank. Now, stocks moved above that. Lots going on over here. So in terms of banks, what would your top trades be here?
Yeah, I think my top pick would be HDFC Bank. Clear breakout from a long base, very powerful breakout. When you look at HDFC's earnings for this year, it's sort of single digits, but then you look at the next fiscal year, it's going to grow 20%, which is back to their normal sort of trajectory in terms of earnings growth. And like I mentioned, India has one of the highest GDP growth rates expected amongst sort of larger economies, and you factor on top of that yields coming down, cost of borrowing is going to come down, and that's going to lead to more demand for loans in the economy. And I think HDFC is in a really good spot to benefit from that. Then you have other private sector banks. Of course, ICICI is the bid extended. IndusInd Bank is making improvement, and then Kotak Mahindra. That one is almost ready to break out from sort of a double bottom base. So we're keeping an eye on that one. And Federal Bank has already broken out and performing well. So really, I think it's the larger cap bank that's going to benefit going forward.
All right. Hi, Dean. Good morning. The only fly in the ointment is these Brent crude prices. They were well behaved at around $80 per barrel. Suddenly, Brent is moving closer to around $87, $88 per barrel. What's your view on that? As you said earlier, I think that you believe it's still well behaved, but that's ticking up. And we saw the big drawdown in inventories overnight. It appears demand is coming back as well. Your view?
Yeah, I look at the NYMEX price. Right now, we're at 83 or so. There is resistance at around 84, which is a recent high for NYMEX. And after that, there is a gap to 87. Should it come down, there is some support at 82, which is the rising 10-day moving average. But I think we'll have to see how it goes. I think a lot depends on where inventories are. From my last review, I think inventories were fairly high, but that may start to dwindle or deplete. So I think we have to keep a close eye on oil.
Okay, all right. Thanks very much for joining in, and it's great getting that perspective from you, Dean. I was just reading last night. JP Morgan's chief global market strategist, right? He's apparently leaving.
Oh.
And I'm only mentioning this is because he, along with a bunch of other people, are the only folks on Wall Street who've been expecting Wall Street, the S&P and NASDAQ to fall almost for the last 1.5 years. Now,
Marco, I think.
Krovanik, but a well-known guy, and he's been at JP Morgan for 19 years. I'm not sure if that is the reason, but I read the story and it said, it's just
the call is not working.
Yeah, you look at all of the others. People have been just scrambling to raise price targets, trying to justify AI, whatever, raising P multiples. It's just the market we're in, and we've got to sort of flow with the times, especially if you're in the advisory business, right? You can't can't not do that.
Like they say, right? Don't stand in front of a moving train. This is what it's been for the longest time now.
Yeah. No, tells you something about the force out there in the market, not just here, but in the US. Actually, US and India, I think the two best performing markets, if you go back the last 3-4 years, actually post-COVID, two biggest sort of best performing markets in the world. We'll take a quick commercial break here. We come back and we talk about the top stocks to watch out for. Our research team will be joining in with that.
way to celebrate our own 25th year, with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today. Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
It's coming on the back of a period of hikes, which was unprecedented, facing shocks that I tried to describe yesterday over dinner, and followed by a period during which we held rates untouched, and during which we were restrictive enough to actually see our medium-term target reach that 2%, which is our objective. And most recently, we have seen in our round of projections, which are really important, September, December, March, and June, we've seen that 2% target with an oscillation of 0.1 about it at the last quarter of 2025.
Dr. Saneen, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness? Or do you think it's also a cultural issue where, one of the statistics or reports that I was reading indicated that we just don't feel the need to brush more than once a day?
It's not a question of need.
Welcome back. So the setup has been looking good. Global markets are in a nice shade of green, and the expectation is that momentum is going to continue here as well. That's what the GIFT Nifty has been indicating. Now, what about stocks? Yeah, there we go. The implied open is almost 100 points higher. In terms of stocks, we've got our team standing by with the CNBC-TV18 list of top stocks to watch today, guys. Good morning. Abhishek, I think it's been all about financials. Yesterday, we were, talking about HDFC Bank. I guess today a lot of commentary will be centered around Bajaj Finance. Tell us about the update.
Well, if you take a look at the Q1 numbers that they have given, the new loan growth is perhaps on a sequential basis the best that they have had in 8 years. So the new loans are up 10.4% YOY, but they are up 39.4% sequentially. So the new loans have crossed the 1 crore mark in this quarter. AUM growth is pretty robust at 31% YOY and about 7% sequentially. Now they have guided actually earlier for 26 to 28%. So this is much better than their own guidance as well. Deposit momentum remains strong at 25.5% YOY and 4.3% sequentially. Liquidity in the balance sheet continues to remain robust. So the liquidity is at 16,200 crore, which is up 27.5% YOY and about 3.2% sequentially. The cross-sell rate has improved. So that means their ability to sell more loans to the same customer has improved to 7.38% versus 5.55% in the previous quarter. Back to you.
All right, Abhishek, thanks for that. Well, I'm looking at Vedanta. They came out with their operational update as well. And for Vedanta, we already have Hindustan Zinc's numbers that came out yesterday. But we look at the oil and gas division as well as the aluminum division. Both of them are the larger names in there. So in the oil and gas business, well, they are guiding for better times, but that's not yet reflecting in the numbers. So that's one point. But the aluminum business, that's going to be the driver of earnings from here on. And that's the one that's done pretty okay. Mild growth is what we have seen on the top line. The other numbers, that's the lead, zinc, as well as silver. We already had it via Hindustan Zinc's numbers. But I'm going with green because normally this quarterly numbers is not a big mover. And you have the dollar index that is softer, which is good for base metal prices. And we had silver that moved up overnight. So that could be another kicker for it. So that's why I'm going with green on Vedanta. Numbers more or less flattish or par for the course. But going back to Abhishek, L&T Finance as well came out with its quarterly update. Tell us more.
They have given the retail business update, which remains strong. So retail disbursements are up 32.5% YOY, and they have declined by 1.3% sequentially. The decline is largely seasonal in nature when you compare to Q1 to Q4. Farm finance disbursements are up 24% sequentially. SME finance, that disbursements declined by 19%, and acquired portfolio declined by 74% sequentially, but more largely to do with seasonality. Retail loans are up 31.5% YOY and about 5.5% sequentially. Disbursements to AM ratio has declined to 29.9% when compared to 35% in the previous quarter. Back to you.
All right, Abhishek, thanks very much for that. ITT cementation, there is some very interesting news flow here. Nigel, tell us more.
Well, ITT cementation, Prashant, they've come out with an update and they're saying that the promoter entity could look at a potential divestment of the asset. Take a look at the stock price. Last 1 month, it's up close to 35% approximately. And the last 1 year, it's more than doubled. So the street was sensing that there is something going to happen. And now on the BSE, they've gone ahead and they said they're looking at a potential divestment of the company. The promoter entity holds roughly around 26% stake in the company. And at current prices, well, the promoter entity's stake will be valued at around 46,000 crores odd. The management had joined us earlier on CNBC-TV18 and they're guiding for very, very good times. Revenue growth of 20%. They're saying legacy orders are behind them, and that's why they're looking at margins of around 11%, which is a bit of an uptick. And they're saying they're looking at overall more exposure to the international markets as well. Give and take everything, the PAT estimates that we've got from Equaris, they're estimating that from around 270 crores that they did in the past year, they're saying that that number goes to around 470 crores. So the stock opens up in the green. But I don't know whether it could be a bit of a topping out process because the stock has already rallied in anticipation of some news flow, the kind of rally that we've seen. Second part is that the promoter entity, I was looking at a few articles, their balance sheet is not in the best shape, going by that. And how much of the good news is in the price? It's a 10,000 crore market capitalization company, estimating 470 crores of PAT in the next year, that's FY26. So not cheap. So going with green, but sustaining that green will be important.
Okay, so we're going to watch out for ITT cementation as well. Let's head back to Abhishek. More business updates. There is Suryodaya SFB and there's a Bandhan Bank as well, which is maybe looking a little wobbly, Abhishek.
Well, to begin with Bandhan Bank, on a lighter note, it lost Bandhan with its customer in this quarter, especially with respect to deposits. So deposits are down 1.5% sequentially. In that, the CASA deposits are down more than 11% on a quarter-on-quarter basis. So CASA ratio has declined massively to 33.4% when compared to 36% in the same quarter last year and about 37% in the previous quarter. Advances growth 21.8% YOY and about 0.7% sequentially. Collection efficiency has seen some hiccup over here. So emerging entrepreneur business, their collection efficiency has declined, leading to overall decline in collection efficiency as well. Suryodaya Small Finance Bank, again the CASA decline is very high on a sequential basis. Deposit momentum remains strong at 42% YOY and about 4.6% sequentially. CASA in absolute value is down 8% quarter on quarter. So the CASA ratio has declined to 17.7% when compared to more than 20% in the previous quarter. AUM growth remains healthy at 41.8% YOY and about 4.5% on a sequential basis, and they have seen marginal improvement in their asset quality as well. Back to you.
All right, Abhishek, thank you very much for that. Marico should be the next one in focus. Mangalam is here with details. Mangalam, morning.
Good morning. So there are two stocks. You're watching Marico and Kaya. It's a very, very interesting development that is taking place out here, where Marico and Kaya have entered into a collaboration agreement where Marico will handle sales and marketing of Kaya's 75+ products outside of Kaya's clinics. Remember, Kaya sells some of its skincare, dermatology, etc. products in the 70+ clinics that they have around the country and in the world as well. But this deal will unlock the untapped growth potential of Kaya's products outside of those stores, and with Marico's distribution, etc., it would be an important, imponderable whether there are takers for Kaya's products outside of their stores itself. The key to track here is commercial terms of this agreement, because Marico will be handling the sales and marketing for these products along with distribution. What do they get in return, and what is the increased sales that comes in for Kaya from this itself? From the looks of it, it looks like it is a bigger positive for Kaya than Marico, because for Marico it will be just another product that they will be selling, but for Kaya it will be a product of theirs that will be selling to a bigger, higher distribution channel. So that's a big positive. And if you look at the last 1 month chart of Kaya, that would tell you that something was definitely taking place in the stock and in the company. And as a result of which, now we were awaiting this news to come by, and that has indeed come by. There is an agreement for Marico to sell some of Kaya's products outside of Kaya's own store universe.
All right, Mangalam, thanks for that. Well, going back to Abhishek. Abhishek's picking up some information on Cello World. Abhishek, tell us more.
Well, sources tell CNBC-TV18 that Cello World has launched a QIP, and that QIP size is about 730 crores. 86.54 lakh shares is on offer. Now, the indicative price is about 852 per share, which is at a steep discount of 11.3% to yesterday's closing price. However, it is at a discount of 4.9% to SEBI floor price. So, the lock-in period is 90 days, and the BRLMs to the issue includes Motilal Oswal, Jefferies, as well as JM Financial and Kotak Mahindra Capital. Back to you.
All right, so QIP at Cello World. Got it, Abhishek. Thanks very much for that. Let's head across to Sonal. She's looking at Brigade Enterprises as well as Bharat Forge. Why is that, Sonal?
Well, let's start with Bharat Forge because North American Class A truck order data is out, and it's been disappointing data this time around. It is a decline of 33% on a month-on-month basis and 6% on a YOY basis, and the total units sold has come in at 13,100 units in the month of June. But this number is at a 14-month low, and this is the first decline that we've seen in a long time. So going with red on Bharat Forge. For Brigade, they've gone ahead and signed a joint development agreement for a residential project, which is spread across 8 acres with a development potential of 1.2 million square feet. It has a gross development value of 1,100 crore rupees. So watching out for this stock as well.
Okay, all right, got it. Thanks, Sonal, very much for that. And with that, let's quickly recap our list, the stocks to watch today. Positive news flow around Bajaj Finance, Vedanta, L&T Finance, ITD, Cementation, Marico and Brigade Enterprises. The ones that have negative news flow are Bandhan Bank, Suryodaya Small Finance Bank, Cello World and Bharat Forge. Okay, and with that, let's head across to Manisha for a roundup of all the commodity market action. Manisha, good morning. More than anything, I think it's oil prices that have been making headlines heading around 87. But what do you have your eye on today?
Oh, well, absolutely. 87 is a 2-month highs for the Brent crude prices there. And we have seen a very sharp decline in U.S. inventories to the tune of 12.2 million barrels. It also has to do with the hurricanes in Gulf of Mexico and the prolonged conflict between Israel and Hamas, which continues to keep prices higher. In any case, for this current quarter, it's going to be about the summer driving season in the U.S. You also have deficit concerns coming in for this quarter. And the prices that the global banks and brokerages are putting are much higher than $90 for this quarter. So that's something to watch out for. But in the meanwhile, you have the metal prices also trading quite positive. Overnight has been a strong gain of anywhere between 2 to 3% across metals. This is after the U.S. Numbers have been slightly weaker. Markets anticipate that first rate cut could happen in the month of September. And then it's also going to be about the China plenary meeting in July that would lay out policy plans for a longer term. And the markets are anticipating that there would be more support that you could see for property and infrastructure. That would mean more demand for metals. That is where this strength is coming in from.
All right, Manisha, thanks a lot for joining and giving us that quick update. For the time being, we'll slip into a short break. On the other side, Deepan Mehta of Alexa Equities is waiting for us. We'll do some fundamental analysis with him.
It is absolutely required. It's a mandate that you should brush twice a day. In the morning to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth, and the biofilm contains bacteria, especially bacteria like strep mutans, which is what causes cavities. So, and of course, gum disease has different bacteria, but there is a whole bacterial biofilm that happens in the teeth. So if you don't remove that biofilm, then the bacteria will remain there and they will act on the gums and, of course, on the teeth. And so the gum disease and the dental caries both will be a factor if you don't remove the biofilm. So it's extremely important, especially at night, because when you've just eaten and then you go to sleep and it has time to act.
Is it more of a rural problem? Is it also as prevalent in the urban population?
So I would assume, looking at the stats, that the rural problem would be slightly more because also availability of toothbrushes, toothpastes and other oral health aids is much less than in the urban areas. But awareness, and as Sunil said, awareness and knowledge has to be imparted so that people will be more, able to do what they have to do.
Well, the smiles are a little wider this morning, and that's because the boys are home after being crowned world champions. Well, the team arrived in Delhi just a couple of hours back, and this after being stuck in Barbados for nearly 3 days due to that hurricane that was playing out over there. But the champs touched down in New Delhi early morning today. They, of course, have a very long day ahead because they have to meet the Prime Minister, then they have to fly down to Mumbai, and all of us here in Mumbai are waiting for that big victory parade. But for now, let's go across to Abhimanyu, who is in New Delhi. He's been following all that action. Abhimanyu, hi, morning. I think you're at ITC Maurya, and that's where the team is staying?
Well, exactly. The team is currently inside and it's slated to leave for PM Modi's residence at around 10 a.m. and post that it will return to ITC Maurya and will go to Mumbai around afternoon. However, of course, there is an expectation of huge crowds out there, so there is a security entourage not just outside the reception of the hotel, but even outside the periphery of the hotel, and they're not allowing any visitors inside apart from the ones who have already checked in or who have already made bookings. Now, speaking of the fervor, there's a slight drizzle going on out here, and it's very thankful to know that this drizzle, of course, did not turn up when the matches were taking place. Of course, we have had a World Cup which was struck by several weather events, and there were several matches which were washed out. But thankfully, the crunch matches which India had played in, there was no drizzle, and the matches, of course, yielded results. So that's, of course, a big relief, and not just for the fact that this was the last World Cup of several top players of the Indian cricket team. Of course, it was the last T20 World Cup, after which Ravindra Jadeja, Rohit Sharma and Virat Kohli have said that they are not going to play T20 internationals anymore. It makes the victory all the more special, and it is expected that the reception, of course, for the cricketers would be even more special once they arrive in Mumbai. There is no public event planned in Delhi so far. Of course, there was a lot of fervor online over the fact that why no public event was planned in Delhi, because the fact is that had that too been planned, even that would have attracted a lot of crowds, since even in the day of the victory, or rather the night of the victory, the streets were buzzing, and even places like India Gate had noticed teeming crowds. So a huge fervor currently present in Delhi with presence of the Indian national cricket team, and they are going to head to PM Modi's residence around 10 a.m. When the PM is going to congratulate them in person.
Oh, yes, absolutely. Abhimanyu, thanks so much for that. Yeah, that is a beautiful looking screen. I mean, behind you, the backdrop behind you, Delhi is looking beautiful to welcome the champions with that slight drizzle today. And yeah, thanks so much. And we'll take it over in Mumbai. But guys, I think that's a fair debate. It's always a great Mumbai-Delhi debate, right? Because Delhi is not getting to sort of really touch base with the champs in person. They just have to, like, look at it on screen and then wave goodbye as they head out for Mumbai.
As someone from Delhi and Bombay, I'll reserve my comment. Right in the middle of it.
I think it's fair.
Oh, I think it's fair. Huh? This says the Bandra boy. Okay. All right, guys, let's come back to the market, because this excitement is going to play out through the course of the day. But we also have to negotiate the market. Deepan Mehta is with us from Elixir Equities. Dipan, I don't know. I mean, if you want to start with cricket, go right ahead because it's a high, right? The market's on a high. Banks are firing. We have the team coming back home. Real feel-good morning this Thursday.
Yeah, good morning. Thank you for having me on your show, Surbi. Yeah, I think it's a great morning. Also, markets all-time high, economy doing exceedingly well. We are entering the earnings season with a lot of hope that corporate earnings also will be much improved. And after so many years, decade and a half, we have got the World Cup back. So a lot of reasons to celebrate. And I think let's just bask in this glory while we can. And then, of course, there are problems afterwards, but we'll deal with them later. But for the time being, I think these are great times for the country. And I always said that, being in the right place at the right time makes all the difference. And I think that's what our generation is. We are in the right place at the right time.
All right, Dipan, got that about, that. But let's focus on the markets then, Dipan. And I wanted to ask you about ITD cementation. If I remember correctly, I think this was a stock that you were positive on, a while ago. Now they've come out with this update where the promoter entity is saying they could potentially look at selling their stake. The stock is up 35% in the last 1 month or so. Valuations as well, it's not very, very cheap. And I'm wondering who's willing to sign that check of around 5,000 crores to buy out the promoter's stake. If it opens higher, what would you do with it?
Yeah, good morning, Nigel. I think they'll find many buyers for that stake. It's a very well-managed company, exceptional track record, qualifies for a lot of projects, difficult projects on the marine side, on the transportation side, especially building metros. And it has a diverse loan book as well, so a lot of earnings visibility as well. And a very rich, I would say, human resources asset is what the company holds. So I think whoever is looking at buying the company will be getting a company which can grow continuously for several years. I would rate it amongst the best capital goods or engineering construction company. But of course, my views are a bit biased because we and our clients are invested in it. So that's a matter of disclosure. And yes, I think valuations are high compared to historical what we have been paying as a price to earnings multiple. But this is one company, if you notice, the corporate governance standards have been very, very good. And they have not got into many of the other issues which some of the other engineering construction companies have got into, like using their own capital to get into projects business, like bidding for hybrid annuity models or build, operate, transfer models. So they've kept their balance sheet quality and the return ratio is also pretty much intact. So very positive on the company. And let's see what actually turns out in terms of who the new owners are, if at all.
No, I asked you that because you were in early. I recall I did a interview with the management at their office in November 2022. And, you were tracking that quite closely at that point of time. So you're saying you'll hold on to that position and you believe there'll be ample amount of buyers. Got that, Dipan. Let's talk about a couple of other big stocks then. We had a few updates that came in. L&T Finance, you had Bajaj Finance as well that came out. Anything you liked in particular?
Well, I think both L&T Finance and Bajaj Finance reported quarterly numbers which are more or less in line. Very impressive that even at such high base they are growing as they are. And Bajaj Finance in particular, it has kept its NPAs pretty much under control. L&T Finance has had its issues and challenges with NPAs and collections. But Bajaj Finance, the collections have been pristine. And one small sentence in Bajaj Finance's release, which I really liked, is that the digital loans, which had been curtailed, now they can go ahead and start releasing those loans as well. So the sort of minor compliance overhead which was there on Bajaj Finance, that also has completely cleared up. Valuation-wise, it is very reasonable. I think BFL and L&T Finance are going at valuations which are well below their, I think, 3-4 year averages as well. And in markets like this, when you want to look for companies with valuations that are attractive and still growth is intact, I would go with both of these companies. I think a measure of disclosure, we and our clients are invested in it.
All right, Deepan, coming back to you with more questions in a bit. But Anuj is here with how he's looking at the setup this morning. Anuj, good morning.
Good morning, Prashant. And it's the same as last, as yesterday. The market making higher lows, the Nifty that is, and a simple trade of just staying put and trailing your stop is working. I mean, I think it's just the longest trending higher low that we have seen. It started from 24th June when we had the market test a crucial level and made a hard bottom, 23,350, then 23,560, then 23,670, then 23,805. And then the next four graphics would come up for you, 23,985, 23,992, 24,056. And yesterday's low was 24,207. And by all account, going by SGX, by the GIFT Nifty, today we're going to open with a cushion above this 24,207. The other key point yesterday was HDFC Bank. Delivery volume of 6,900 crores in HDFC Bank. And that translated into FI buying of 5,400 crores, largely because of this. And there were other banks as well, which did well. I know the Indian market is now like the Indian cricket team. Someone or the other is raising the hand and, taking it past the closing line. And, every day, something or the other is taking leadership. Yesterday, it was banks. Coming to levels now on the Nifty, we are in blue sky territory. So the levels to watch are mainly from the option side because you have the expiry today. 24,400 and 24,500 calls have the highest open interest. So that's the zone, 24,432 to 24,512. In terms of support, it always is about yesterday's close and yesterday's low. So 24,286 and 24,207. I think the Bank Nifty yesterday had a massive expansion. That's something to keep an eye on. 53,256 is the all-time high, which we hit yesterday. And then 53,500. And on the downside, the support comes in at 52,800 and then 52,500. And for the quote of the day, I really have to go with the man of the day, perhaps, Rohit Sharma. Of course, it's going to be grand welcome. And that's the quote: believe in yourself and your abilities and the world will believe in you. Failure is just an opportunity to learn and grow. And that is important because, just 6 months back, he had that heartbreak of losing in the World Cup final and to carry himself from there and to win the World Cup. So that's the quote of the day.
Very inspiring, Anuj. Thanks very much for that. So that's a setup, and that's, of course, a little bit of self-help in that sense, which we all need sometimes every day. Well, let's get back to Deepan, and we have a management waiting by as well, which we'll get to in just a bit. Deepan, morning. Thank you for joining in. Prashant here. By the way, sort of beautiful setup behind, beautiful home. Congratulations.
Thank you. It's even lovelier in the monsoons because it's greenery all around. Thank you very much for your compliment. Yeah.
Just this entire PSU, actually within PSUs, right? Yesterday it was a wide variety of names. Mazgaon, there was, Cochin, Cochin Shipyard, that is, so 2 defense names. There was IREDA, which is up 20% this week. We had the management with us earlier on Monday. There was Hoodco, Moil, Nigel talked about Moil yesterday. And the RECs, the PFCs of the world. What do you like in this space? I'm reading a couple of notes on, there was a Reuters story about the government asking sort of companies to, sort of put in orders worth some, I think it was what, $20-30 billion over the next 3 years because you got to get capacity up and running, and we're falling short of power capacity. And I'm talking about the coal side here. And of course, whatever is happening on renewables is happening. Stocks have run up quite a bit, but as the Bernstein analyst told us, over the next 3 years, we'll add 2x the capacity that we added in the past 3 years or so. So it's a big runway in that sense. What do you like here, Deepan?
So I think in terms of valuation, PFC and RAC really are the cheapest, and they are trading at valuations, I think, at or about below the PSU banks. And I think their growth rates should significantly move up from this year onwards. Already last year was pretty decent. But there's a problem in terms of earnings volatility in both these companies. But if you're able to get past that, then I think there is a case for P multiples to move up over there. And when we are discussing this entire PSU basket and the way these stocks are moved up, of course, I think the performance has significantly improved across the board, across all PSUs in all the different industries. But there's also the aspect that their share capital is very tight and very concentrated, and the floating stock is extremely low. And what has happened is that a lot of portfolio managers and mutual fund managers have a lot of stocks of these PSU companies. And as and when they're getting more funds in, it's not that ideas are popping up every now and then. They're going back to the same ideas, allocating stock to the same companies which they are already owning. And then when even small quantum of buying is coming in these counters, we are seeing an even exaggerated up move because of low floating stock. So one should keep that in mind. As also the fact that a lot of PSUs are trading at extremely expensive multiples, especially defense companies, shipbuilders. So investors should be mindful of that. And I would like to avoid all PSU stocks where there is a high degree of overvaluation, which is why my choice is for maybe PFC, RAC, or some of the PSU banks, if at all.
Okay, got it. Deepan, stay on. We'll have more questions for you in just a bit, but we also need to quickly connect with our first corporate of the morning. ESAF Small Finance Bank is the one that we're looking at now. Now, this stock is down about 23% in the calendar year so far. The bank reported a weak set of numbers in the fourth quarter as well. Let's talk about trends and how the first quarter and the rest of this year could perhaps shape up. We have Kadambilil Paul Thomas, MD and CEO of ESAF Small Finance Bank, joining in. Mr. Thomas, thanks for being with us. I think the one big concern for the street is the deterioration in asset quality. And I'll just quickly go over the numbers for the benefit of our viewers. I mean, in the fourth quarter itself, your gross NPA ratio moved from 4.16% going up to 4.76%. So that was a marked deterioration. If I look at the absolute numbers and sequentially in the last financial year, in the second half, in absolute terms, the gross NPAs went up quite a bit. I mean, they almost doubled. In fact, more than doubled. So what is the latest now on asset quality? You're getting growth. The first quarter is also showing good momentum in the business. But what about the health of the book?
Yeah, as we discussed in our earlier meeting, so we had in the second half of the last financial year, we have faced some challenges in certain geographies, mainly in the coastal areas, so in the west coast areas and in some districts in Tamil Nadu. So we have taken steps to overcome that. So as you know, our microfinance portfolio entirely was managed by our business correspondents. So we have taken a strategic decisions to take over majority of the business. 74% of the assets were managed by our business correspondents. So we have taken over the management directly. So we have created a separate vertical within the bank. Micro banking, a channel has been created. So direct bank will have direct control. So the concentration on BC has come down to 36%. And one single BC was managing 54% of the asset. So they were having challenges in getting people. So they were having challenges in managing attrition. So we thought that bank will directly to manage the concentration risk also we have brought down with this. So in the next 2 quarters, we are confident that we will be able to bring back to the asset quality back into place. That is our
Sir, just a couple of more questions on that. You've said a couple of things. A, you're saying that there are specific markets like Tamil Nadu where you saw stress. Could you elaborate on the nature of this stress? I don't know if is this just rural, seasonal? Is there something more to it? Or is it linked to your banking correspondence? And again, some more rationale about why you decided to take over that business. Is that why there was asset quality stress building up? And just share a level. If you're at 4.7% GNP as of the end of last year, how much will it improve? I mean, how can it come to, say, 3%, less than 3% by the end of this year?
See, it is both actually. It is cyclical and seasonal. As you know, there was stress in the coastal segment among the fishermen communities because of the climate change related issues they are having, and the very high attrition in the business correspondence also resulted because as you know, this is a very high touch model. So the staff continuity play an important role. So that is why we have taken up these steps because as a bank, we will be able to attract more talents instead of as a BC attracting talents. So we are working on this, and by end of next year, our target is to bring down to less than 3%.
And this was a promoter group entity, this banking correspondent?
It was a promoter group entity, ESAF Multi-State Agro Cooperative.
And now the bank has decided to take over the business. And
already taken over. From July 1st, the bank is directly managing the micro lending business operated through the banking outlets. So we have taken over the staff also, 5,176 staff who are associated with the micro lending activity in the BC. They have joined the bank. So now bank is directly managing that part of the business.
Okay. So unfortunately, we have a little less time on the call today, so we could not go beyond this core issue of asset quality and this new development at the bank. But maybe we'll do a longer call next time to understand business momentum. Definitely look out for a longer conversation to get more details. But thank you for today. That's ESAF Small Finance Bank. Important developments over there in terms of the business aspects. Them taking over their largest business correspondent business, which was actually a promoter-run entity. All right, we'll take a break on that note, come back on the other side, and we'll get to our technical experts, get some trading views going for the day.
Offences against Rafah since the 6th of May, over 1 million people have been displaced once again, desperately seeking shelter and safety.
Jewelry which has been installed in Asia. It's located at the Seeps facility in Mumbai, which is a plug-and-play facility for manufacturers and exporters of gems and jewelry who can significantly save time, cut costs and add to their cost competitiveness as far as manufacture and export.
Welcome back. There's 3 minutes to go for the pre-open session, and it's going to be a good start. The GIFT Nifty has been indicating a 95 point higher start, and we're still there. Let's get you specific trading ideas now. So we have Mitesh and Sudarshan who are with us. Gentlemen, good morning. Good to have you with us here. I mean, I think we've been in a similar kind of market for the last couple of days, right? Higher start and then higher close, higher close. Mitesh, start with you. How are things looking, and what would you recommend on the indices? We'll get to stocks in just a bit. Yeah.
So, Prashant, my sense is that I think we will possibly have a gap up opening as the GIFT Nifty is indicating. The pivots on the extension basis which you have got are around 24,450, 24,500. We might open around that area. I think I would want to take some profits on long positions and see if we have the strength to get past 24,500. Otherwise, there's a chance of a dip happening. So the first idea is to see post the gap up. If there's no continuation, then take some profits.
Okay. Got that. As I said, we'll get to stocks in just a bit, but let me get Sudarshan in. Sudarshan, morning. How are things looking to you this morning?
Well, things are looking up. The cricket team is here. Delhi is seeing rains, which is very rare for us. So I think we'll be long in the market. Lifetime new highs are to be bought into, but there's a difference. The Bank Nifty had a big rally yesterday. It's a good idea to avoid that index. Focus on the Nifty today. Buy every dip.
Buy every dip. That's saying it as clearly as it gets. Gentlemen, stay on. We do want to discuss stocks with you as well. Take a break and we'll be right back.
concerned. The facility has an atomizer which can be fed with any metal ranging from titanium to gold. Subsequently, the feed passes through a sieve machine which standardizes the amount as well as the portions of the metals which have been atomized. Subsequently, they are kept in this 3D printer in which the desired shape and size of the jewelry is manufactured in a time much lesser than it is used in physical labor. Also, the government is advertising this as a plug-and-play facility to ensure that manufacturers and exporters not only save time but also can get a better finish by ensuring that machines which otherwise would involve capital cost for several manufacturers and exporters would be saved, since this is a plug-and-play facility which is provided by the Government of India. In Mumbai with video journalist Ajay Dabholkar, this is Abhimanyu Sharma for CNBC TV18.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and
Welcome back. So it's expected to be a positive start, and we've got our technical experts with us. Let's go to some stock ideas as well. Mitesh, hi, morning. So what would you work with? And also throw in a word on Bajaj Finance, because that's the one we're really watching out for today.
Yeah. So I think, on the stock side, I have all buy calls, given the fact that we might see a gap. A lot of stocks are showing promising patterns. So Adani Ports is a buy with a stop at 1490 for targets of 1555. Bharat Electronics is a buy with a stop at 309.5. Look for targets of 325. And Power Finance Corporation is a buy as well. Keep a stop at 522. Look for targets of 550. And Reliance, after a big breakout and 2 days of pullback, this could be a stock which could see some continuation on the upside. So keep a stop at 3080. Look for targets of around 3160. Coming to Bajaj Finance, I actually like this stock. I think it's gone through a big underperformance phase, much like HDFC Bank. I'm not saying it's going to reverse like that, but I'm waiting for a closing about 7330, 7350. I think once that happens, we should at least see a trading rally to about 7600.
Okay, got it. So those are Mitesh's picks. Sudarshan saying buy every dip. Got that view, Sudarshan. What about stocks? What do you like?
Well, Tata Consumer is an opportunity to buy. Yesterday it had a big up day. So wait for a consolidation, intraday dips somewhere. Look to buy with a stop under 1110. SAIL Steel Authority continues to be in the buy list. Buy with a stop under 144. I have an intraday short just to balance it out. Balkrishna Industries is an intraday short with a stop above 3200. You don't have to take the trade. LTTS is another buy from the IT space. Buy with a stop under 4950. Primarily stay with the bulls.
No, absolutely. And point well taken. Mitesh, do you have a running trade on a recommendation on Castrol? Big mover this week.
In fact, good move as well. I think, Castrol, the long-term charts are very good, and it went through some kind of a consolidation when it started to decline from levels of 230 to about 180, 190, which was in April, May. And I think that entire correction is over. And yesterday was a fresh breakout. Now, I would want to see this stock head towards possibly levels of 300 plus in the next few weeks. And therefore, it remains a buy. If somebody wants to buy a fresh, then maybe, you would want to accumulate it slowly. Buy some now. If you get a 7-8% kind of decline, add more and keep a stop below levels of 220.
Right. The other one is lesser talked about. I mean, actually, Castrol itself, it's a BP company and it's a big company, market leader, etc. We don't talk about the space. But in closing yesterday, we were talking about this data center opportunity and how some of the some of the products which Castrol is coming up with could be useful there. There's another company called Savita Oil Technologies, small company, again, never discussed. But I was looking later, the stock was flat, at about 230 or so. It ended about 7-8% higher. That's, I think, is it yesterday's chart? I think we should have, I'm not sure if this is the one, but yeah, 597 at close yesterday, ended about 7.5% higher. Not sure if that is the price, but yeah, interesting space, and we'll discuss this more with some on the fundamental side as we go along. Gentlemen, thanks very much. Good to speak with both of you here. Appreciate it. Chandan Taparia is with us. He's derivative and technical analyst at Motilal Oswal Financial Services. Chandan, good morning. Good to have you with us here. It's up and away. How do you trade it though? Tighter and tighter stops?
Good morning, Prashant, Shulbi, Nigel. Thanks for having me. Yes, market is up and up. And we have seen that bulls are dominating and commanding. Nifty has been making high-rise, high-lows from last 7 trading session, where even the previous day low is not breached and base of the market is shifting higher. We have seen that supports are gradually shifting higher. It made a new record high at 24,309 and Sensex made a new milestone of 80,000 marks. So market data and internals are positive, and we believe that till Nifty holds above 24,000 zone, overall bullish undertone could continue to take the index towards next leg of rally of 24,750 to 25,000. So continue to be with bullish strength, use any small decline as a buying opportunity. However, we have seen a surge in the FI's long short ratio to 88%, but we believe that liquidity in SIP and DI is in continuously supporting the market. So till it holds 24,000, no need to worry about the market setup and sentiment. Stay long and be with the major trend of the market. Looking at the Bank Nifty index, it made a new lifetime high at 53,256 after the consolidative move of last 5 trading session. Here also supports are shifting higher. Major trend is positive. Until it holds above 52,500, we are expecting a further move towards 53,500 to 54,000. Now looking at the stock wise, first that is buy on HAL. We have positive view on the Nifty CPSE. Nifty CPSE index has given a consolidation breakout of last 10-12 days and given the highest daily close. Major trend of the sector is positive, and here we like most of the counter from defense and shipping name. So here we are recommending to buy on HL as it has given a consolidation breakout of last 10-11 days with surge in the trading volume. So recommending to buy with support of 53.50 and expecting an up move towards 58.20 in the counter. Second trading idea, that is buy on Oracle Finance, OFSS. A major trend of the positive, we have seen a tremendous recovery in Nifty IT index in last 1 month. And OFSS is one of the strongest counter. Just couple of days back, it gave a breakout from its pole and flag pattern. And after that, momentum and follow-up buying is clearly visible. So one can buy OFSS as built up is clearly visible on the long side. One can buy with support of 10,200, looking for an upside move towards 11,000 in the counter. Last trading area, there is buy on Power Grid. We have positive view on most of the power and power finance name. Power Grid has seen the built up of long position. We have seen some coal unwinding and the put writing. We have seen better rollover, which also indicate the bullish stance in the counter. Technically, it has given a breakout from its box pattern. So one can buy for an upside move towards 352 with support of 329 levels.
Okay. All right. Got that. Thanks very much. Those are some of the FNO ideas that we can go with. With that, let's move on and put the spotlight on the FMCG sector. We've got Kaustav Pavaskar, DVP Fundamental Research at Sharekhan, joining in, looking at, of course, trends in the consumer space. Kaustav, good to have you on. So I think the whole expectation is that even in the last quarter, the commentary had started turning positive, and a lot of the managements, including Dabur, I remember categorically, that started talking about pick up on the rural side of things. So now, as we're getting into the earnings season, first of all, let's take a general view. What is the volume growth that you're expecting across the staples universe?
Good morning, Surbi, Nigel, and Prashant. So last post the quarter 4 results, we have heard from most of the management that they are expecting, recovery in the rural market, and they should see that helping volume growth to gradually pick up. We believe that this quarter volume growth will continue to remain at low to mid single digit. In terms of improvement, I guess there would be improvement considering the base what we have seen in the quarter 1 of FY 2024. in terms of demand, there is not much bit of improvement in the demand. We believe that recovery, actual recovery in the rural market to start from second half of the year, because monsoons are still yet to see a pickup. It is still 10% lower than what expected. July, August are expected to be good. We are expecting some bit of incentives coming in the budget. So if monsoons are good, if we see some incentives coming in the budget, I think that augurs well for the rural market, and we should see good pickup. If even the agri production is good, if monsoons are good, I think that should see a turnaround in terms of demand in the rural market, and that will help mass consumption to improve. So second half of the year we should see rural recovery to be much better, and that will really add to the volumes of the consumer good companies.
All right. Hi, Kaustubh. Good morning. Good to see you. And Kaustubh, I want to ask you about Tata Consumer. That was one of the biggest gainers on the Nifty yesterday, if not the biggest gain. And it didn't really participate in that post-election rally that we saw. But yesterday it came to the party. What's the call on the stock?
See, we have a buy rating on the stock with a price target of 1,315. I think Tata Consumer is one of the preferred pick in the space. We have seen its food business doing extremely well. The company is focusing on filling its gap in its food business. They have done acquisitions in the recent past, which are integrating well and adding value to their overall portfolio. We should expect its core beverage, that is tea and tea business, domestic tea business, to continue to grow in low single digit in terms of volumes. I think there the pickup will be very slow. International business is also doing reasonably well, but important is the food business, which is doing extremely well for the company. And whatever acquisitions they have done recently, I think that will really drive the growth for the company in the medium to long run, and also it will help the profitability to improve in the coming years. So I think that will really add value to their earnings, and we should see a consistent kind of earning growth for Tata Consumer Products in the coming years.
Tata Consumer. By the way, guys, I remember an interesting update from Marico yesterday. CLSA on Marico, saying that there's a lot of undercutting in their core business, in the the hair oils business, because of in-house private brands. And you see that if you're going to supermarkets in Mumbai, particularly some of the chains that are run by the Tata Group. So there's a lot of serious competition coming in for your parachute hair oil itself. Coupled with that, obviously today's news is the deal with Kaya. So Kaustubh, just very quickly, your thoughts, if you've seen the contours of this Kaya-Marico deal. I don't know if you cover Kaya, but just give us your thoughts on Marico for sure.
Yeah, so Marico, if we the premium personal care portfolio, it is a focus area for Marico, and they are adding more and more products into this space. So the collaboration with Kaya will definitely help them to expand their portfolio. The premium personal care portfolio has an annual run rate of around 750 to 800 crores kind of revenues, and the management is quite a bit on this particular space and its food business, because both these businesses are expected to grow at a CAGR of 20%. And also in terms of margins, these businesses are once there is a certain scale up, I think this business are going to be having much better margins. So obviously in the long run, we should expect these businesses to add to their profitability. And I think premium personal care, we have seen that even in terms of demand, this particular category is doing well. We have seen the numbers of the listed players in this space, where these businesses are doing extremely well. So I think for Marico also, they should continue to see good growth in premium personal care business. And Kaya products now coming into food, I think they have a good portfolio, which will help them to see a good scale up in this business.
Okay, all right. We'll leave it there and speak with you again once the numbers start to come through. Appreciate you joining in with that quick chat. Well, Lupin should be in focus today. Sud is here to tell us why. Sud, morning.
Morning, Prashant. So we have a positive note coming in for Lupin. Kotak Institutional Equities has double upgraded the stock to add from sell, and target is raised to 1805 from rupees 1400 per share, indicating an upside of 11% from current levels. And it's on the back of positive surprise that Kotak Institutional Equities is expecting in US sales. It says company is well poised to surprise positively on street's estimates in the US in FY25-26, and US sales will surprise positively despite baking in a sharp decline in albuterol sales over next 2 years. And company has a bunch of products lined up to ensure limited earnings dip in FY27 after strong FY26. And on the back of this, Kotak has raised FY25-27 EPS estimates by 3 to 16%. So keep an eye on Lupin.
All right, we will do that. So thanks very much for that. You know, this double upgrade, we'll talk about that.
The double upgrades.
But 24,340 is where the Nifty is starting at. We got the market open on our hands, and I think we got the Sensex, which is up 0.25%, 80,152. So these are good start. I mean, it's not a 95, 100-point start up, but I like that. I mean, it's 100-point start, and then you wonder how much more. But 50-point start, you can imagine. One being up a little bit more from there. So 24,341, 345 on the Nifty. You got the Sensex, which is 80,170. And I think the Bank Nifty is on your screen. It's up about 70 points. We're at about 53,164 on the Nifty Bank. So these are sort of first rates on indices, but it's all about stocks. So let's get this rolling.
Absolutely. Well, the one that's cooling off is actually HDFC Bank. That's the reason why the Bank Nifty is not fired up too much after yesterday's up move. But the other banks are actually doing quite okay. ICICI Bank is the leader on the Nifty right now, 1.5% on the higher side. Axis is finding some green as well. Bajaj Finance is the big one to look at, and that update is looking great. 31% growth in the AUM. The street likes that, but it's not getting a very huge, thumping, resounding up move. It's a more measured 0.5% gain that we've got going on it. Some of the IT stocks are really supportive. So that's good news for the index. HCL Tech, TCS, and Lupin, yeah, the double upgrade that Sud was just telling us about, that's working well for Lupin. So it's a good-looking screen. You've got some auto stocks like M&M that are finding more traction. IT, as I said, is positive. Banks beyond HDFC Bank are positive, and Lupin is reacting very well to that upgrade that's come in from Kotak Institutional Equities. 0.25% higher on the index. That's pretty much it. I mean, Shriram Finance is cooling off, but it's had a fantastic run. So there's a bit of a cool-off that's evident today. Kaya, look at that. That's what I think Mangalam was indicating, that forget Marico. For Marico, it's just, okay, they're selling one more, set of products. But for Kaya, they're getting a massive distribution reach with this tie-up with Marico. That's a stock 10% higher.
Well, that's right. A few more names that are moving up. ITD Cementation, as we said earlier, the stock has already run up, anticipating some news. The stock was up 35% in the last 1 month or so. The promoter entity now has come out and said we could potentially look to divest our stake. For the time being, the stock is down closer to around 3%. Why is that? The promoter entity itself, their balance sheet isn't in great shape. You have the stock that ran up 35% in 1 month, and the market capitalization is 10,000 crores. Even if you assume that their profitability goes from 270 to 470 crores, it's not cheap, trading at more than 20 times odds. So ITD Cementation has seen some profit taking today. Kaya, as you said, Marico will handle the sales and marketing of Kaya 75 products outside Kaya Clinic. So, that has the potential to unlock some untapped growth potential of the brand. So that's another stock that's moved up. Suraj Estates, the stock is now up close to around 6%. In the last 1 month or so, the stock has moved from around the 350 mark to around 550 mark. Nuvama has come out with a note, and they are quite positive on the stock. So explains why that one's up close to around 7%. Cello World, well, they have a QIP that they have announced, as Abhishek told us, source-based information. So that one as well is flying away in today's trading session. Good-looking screen, but the Nifty Bank is a relative underperformer because it seems yesterday HDFC Bank has hit a bit of a near-term peak at around that 1,800 rupees odd mark. Near-term peak would be a little bit of a harsh word, but it seems some bit of resistance at higher levels after the kind of run that we've seen.
No, just one more stock to mention, Walkard. Yesterday it was up 7%. This is really something you can't ignore. Again this morning, 6.5%. I'm not sure what's happening. No, immediate reported corporate development, but
there was that molecule. I think Ekta had interviewed. I think it was Mr. Habil Khurakiwala recently, a couple of days back. And there's that molecule which is, the reports are that it is doing very well.
It's met the primary endpoint, the first stage of, I think.
It's apparently very meaningful, and that's a trigger. So from 600 rupees late June, it's now at about 950. So that's the extent of the move that we've seen. One-way move on walkout. Look at the volumes as well. Almost 500,000 shares traded this morning. What else? So Inox Wind is up 5% this morning. I think it did well yesterday. Stocks is at about 150 rupees. There is Skipper Limited, which is up about 4%, 383 on Skipper. There is GE T&D, which is up 5%. I think that's a daily circuit. Voltamp is up about 2 1/3. So some sort of, flavor in terms of that power theme starting to come back. Can't be very far away. Skipper, I think we mentioned 5 1/4%, 5 1/3% higher at this stage. Of course, the biggest volume-led gainer is Hoodco with a 5% pop. So that continues its sort of one-way, uninterrupted move that we've been tracking. On the way down, I think a few other names apart from HDFC and ITD, which we discussed. GM Breweries had a blistering rally and is down about 4%. Just pullbacks, basically. D-Link India, again, blistering one-way rally, about a 4% pullback this morning. Shakti Pumps, more than a blistering rally. It's down about 5%, 40-50 on Shakti Pumps. Exicom is down about 1%. Gujarat Gas is down about 1%. M&M Finance is down about 3/4. Astral is down about 1.25%. Avas Financial is down about 1% as well. So, we're just starting with many of these stocks. Volumes are a little thin, but I'm sure they'll pick up. It's been a very, very vibrant screen with the large volume-led gains across the board. We'll welcome in Ashwini Agarwal now. He's founder and partner at Demeter Advisors. Ashwini, always a pleasure having you with us here on CNBC TV18. Thank you for your time. The markets continuing to rally on, Ashwini. And let's just start with power as a space. And what would you advise viewers to buy? Because, the fundamentals are there. When we approach a sector like power, which was down in the dumps, it takes a lot longer for people at large to get convinced, right? Well, this is the real deal. But we had the Bernstein analyst with us yesterday who was talking to us about how there is a real need to add twice the capacity over the next couple of years than what was added over the last few years. And a lot of the ordering will take place with Indian companies here. A lot of the financing will be met by Indian companies. Just your thoughts here, Ashwini.
Morning, Prashant. Thank you for having me here. So you rightly pointed out that, this is a sector which was down in the dumps, and it's taken a while for people to kind of realize that there is a real opportunity out here. And I think what many of us miss is the fact that the amount of time we all spend on social media or looking at our Instagram pages or Facebook, whatever else you're doing, YouTube videos and so on and so forth. And these engines, they're trying to curate the content for you using artificial intelligence engines that in the background. All of this consumes a whole bunch of power. And the data centers in the United States already account for, I'm told, about 8% of the power consumed in the United States. And I would imagine that it would be no different from what will happen in India, or what's probably already happening in India. So obviously the demand for electricity is growing at a very rapid clip in India, in addition to connectivity that has been brought about by the government, and demands for air conditioning, home appliances, and what have you. So yes, it's a situation. We all missed it, or at least I can say I missed it 3 years ago, 4 years ago, to look at this broad trend. So, and your question is, what does one do now? I think, maybe some of the large utilities is a way where valuations still appear to be okay, but in a lot of the distribution space or distribution infrastructure, machine manufacturers, in my view, are now trading at multiples which are kind of very demanding in my perspective. So I think, I'm looking at the past saying I missed it, but I'm not likely to do anything about them at this point. Because valuations are quite punchy. Yes, there'll be earnings growth, but we must remember that, at the end of the day, when you're paying a very high multiple, you're paying for multiple years of cash flow, and you're paying a fancy exit a multiple as well beyond your visible horizon of 3 years or 5 years. And these are cyclical asset creators. So, you might have a very good run for 3 or 4 years. And after that, what the question will arise again. So, yeah, I mean, momentum is there with good reason, but I'm not the one to participate here.
Okay. I guess it takes a brave heart to say that in this market, Ashwini. Great to be speaking with you because it's a complete out-and-out, good morning. It's an out-and-out momentum market, right? And that's what we've had for several months, in fact, over a year now. So, okay, maybe you're not going to ride this power wave or, some of these high flyers, but then what else? Where else would you? Because the thing with this market is that wherever there is relative value, those pockets have been testing investors' patience. Whether it is, let's say, FMCG stocks or even banks up till recently. So what are you looking at?
So, Surabhi, great question. And, let's go back to, the two big bull markets in my lifetime, at least, which is 2000, 2008, and partly, let's say, 2017. Okay. Now, in 2000 rally, if you had purchased, any of the industrials or any of the banks, even as the IT stocks were having a roaring bull run, you would have come out way ahead on a 3-year basis or a 5-year basis. Okay, if you look at the returns between even 99 to 2004, forget 2000 to 2004, you would have come out ahead if you had bet against the crowd. Similarly, in 2007, which is a year before the market peaked, if you had bought pharmaceuticals and consumer names, you would have come out way ahead on a 3 to 5-year basis. What I'm trying to say, and it's it's how at least I think, that it's very important to kind of let go of what is trendy and what has momentum and look for value. And value lies in cash flows and value lies in relative valuations. So this is the time to actually be buying large caps. Like you mentioned, several of the banks have barely done anything. A lot of the insurance companies have barely done anything. And these valuations are reasonable. I mean, they're not expensive. These are market leaders generating a ton of cash. So, why not buy these companies? There is bottom-up opportunity in several industrial areas, in consumer stocks on a bottom-up basis, which look good. Pharmaceutical, healthcare looks good. So all I'm saying is that, look, when the market is in such a frenzy, you've got to do two things. One is look for out-of-favor large caps, market leaders. And number two is dig deeper, but be very careful where valuations on a historical basis are trading at significantly above long-term median historical numbers. That's what I would say.
All right. Hi, Ashwini. Good morning. Good to see you.
Morning,
that's an interesting point you make. What about the other large cap part of the index? That is the IT space. Suddenly you're getting these sound bites that maybe Q1 is going to be the quarter from where we see an uptrend. There's plenty of interest and the stocks are not trading particularly cheap. If I get the number correct, the IT index itself, all the stocks out there, they're trading at around 28 times, which is a 20% premium in comparison to what they've traded on, say, for the last 5 years or so. And it's at a big premium in comparison to what the Nifty is trading at as well. But your view on the tech space, there seems to be plenty of interest out there and the street is bracing for positive surprises.
So, Nigel, I've been watching the IT sector for the last 2 years, hoping to build a conviction to be able to buy. But each quarter has come and gone, and I haven't been able to build the conviction. I mean, if you read between the lines, the amount of effort it takes to grow revenues and to grow margins is just stupendous, and it's not happening. It's happening in a few pockets, maybe 1 or 2 stocks, and it's happening in the smaller companies, but it's not happening with the leaders at all. So I'll wait to see what this quarter delivers, and if the commentary meaningfully changes. Like you pointed out, the stocks are not cheap; they're expensive, and growth is not for certain. So if growth is not visible, and I'm being asked to pay multiples which are higher than what they have prevailed on a 10-year basis or a 20-year basis, then I question if that's the fair thing to do. So as of now, I'm out. We'll be watching the June quarter results with a great amount of interest, as I have done over the last 8 quarters, and found that I should stay away. Let's see what happens.
I would. So the question is, what do you like, or do you like cash right now?
No.
Ashwini.
Prashant, like I said, okay, look for frontline. There is opportunity in banks. There is opportunity in insurance companies, both in general and life. There is opportunity in pharmaceuticals, healthcare. There's opportunity in a whole bunch of mid and small caps, but you got to dig deeper. All I'm saying is that what the 2000 and 2008 crash have taught me is that if there is a certain bubble forming in a certain area of the marketplace, you can never say how large the bubble is going to get. But you are better off out early than waiting for the top. That's all that I'm saying. So I'm saying that, look, I'm not the one to be investing in power or energy or defense or railways at this point in time. But there are other opportunities. So, yeah, I mean, one does have some cash allocation in the portfolio as always. But it's something out of ordinary right now because, the whole environment is quite positive for India. So to expect that the market will correct and everything is very expensive, that's not fair. That's not right. But there are pockets, and I think I'm quite candid in sharing, where I find those pockets.
You use the B word, Ashwini, the B word, bubble, right?
Yes.
I think most people are very hesitant in using that. It's been, kind of circling in my own head as I look at the market, because I don't think in our careers, I'm sure Prashant would concur that in our careers that we've seen this kind of domestic money pumping in the market on a daily basis, right? So I don't know, when we talk about risks ahead for the market, and I don't want to be a bear over here, but just asking the question, is there a domestic liquidity bubble in the making, and is that a risk?
Yeah, that could be a risk. Surbhi, if you go back and look at the history of markets in Japan and the markets in the United States, when 401k started to participate in the equity market, it led to decadal long bull run. Similarly in Japan, and valuations became really, really expensive before they fell off. So I don't know how large this bubble will get. So you're right. I mean, there is domestic investor, there is demand from provident funds, from retirement funds, from pension funds, from insurance companies. Even if investors are not directly allocating, even where investors are not directly allocating, their savings are being put to work in the equity market via these indirect assets that they own or they have a right to receive in the future. So you're right. There is a huge amount of money flow, but we are also starting to see a fair amount of paper flow. Earlier in the show, you were talking about ITD cementation. I don't have the stock, I don't own the name, but it's interesting that the promoters want to sell shares. Over the last week, you see the number of block deals that have happened where private equity players, promoters, and various other people have sold down because, markets are expensive, even in their view, because they must be looking at their own business saying, look, it's not worth what the market is willing to pay for it from a long-term perspective. So we are better off taking some cash home, de-risking, or whatever you call it. So my point is exactly the same. My point is that, yes, there is a huge amount of liquidity flow, and we cannot, for the life of us, estimate how long this will continue and how high the market will go. But on a relative basis, the only sensible way, in my view, to play this is to buy areas which are not expensive, which will participate in the economic growth. But, you're staying with market leaders, you're staying with somewhat out of favor stocks. So, if the chips were to fall, you hurt less. That's all.
All right, Ashwini, thanks a lot for stopping by and filling us in with your take on the markets as well as stocks and sectors that you do like. Well, time to move on then. Let's focus on Eicher Motors. The company reported double-digit growth in the CV sales. Do note that this is the second consecutive month of higher sales. To discuss the demand, the trends on ground, we're joined by Mr. Vinod Agarwal, the MD and CEO of Volvo Eicher Commercial Vehicles. Hi, Mr. Agarwal. Good morning, and thanks a lot for joining in. Well, tell us about this growth. It's looking quite good. Double digit is what you've done. For the remainder of this year, what kind of a number can you guide? Are you looking at mid double digit? Is it going to be low double digit or high double digit growth in terms of volumes? And are you outpacing the industry? If yes, by how much?
No, if you look at our track record, for last few years, we have been outpacing the industry consistently. So our strategy is to continue to outpace the industry. And the reason for outpacing is that we have a very strong product line and our network is becoming stronger and stronger. Now, the second thing is how is the industry situation. As far as the commercial vehicle industry is concerned, I would say first 3 months of this year have not been as good as we would have liked it to be. However, going forward, my expectation is that the industry will do well because now the stable government is in place and there are continuation of all the economic policies. That's what it looks like. Now we are looking forward to the budget and we expect that the investments in infrastructure will continue to remain strong and there is very strong replacement demand lined up. As of now, the customers want to replace, but for the time being, even though they are holding up little bit because of the monsoons, therefore we are expecting that the industry will definitely do very well starting from September onwards, and then festive season, and we are expecting good monsoon. Rural economy also is expected to do well. So therefore, overall CV industry, we are expecting it will do well in the balance part of the year. And of course, our strategy will continue to do better than the industry.
So what does the industry grow by then, sir? You know, you said that you would like quarter 1 to be better, but you're optimistic that things improve from here on. So what's the industry growth then that you're working with?
Hopefully, it should be double digit or near double digit, or you can say a little bit higher than the double digit.
Okay, and you will grow at what? 1.2, 1.3, 1.5 times what the market grows?
No, it's very difficult to give the exact number, but just wise to say that our strategy is always to do better because we have a lot of room for growth. If you look at the heavy-duty trucks, our market share is still around 9% only. So it's a huge market and there is a huge room for growth for us.
You know, Mr. Agarwal, hi, sir. Morning, Surabhi here. When I saw your numbers, I double-checked. I read them again. And the reason is that you're the first among your peers to show this kind of growth on the CV side. None of the other companies, Tata Motors, Ashok Leyland, all of them have been either absolutely flat or slightly lower. So which is why I just want to go back to the basics and try and understand where the growth is coming from. I mean, is it from certain regions, which is the state or which is the segment? Just trying to understand if this is a flash in the pan or if this is sustainable. Give us some more color on ground on, you know, what's gone into this June number and what makes you confident.
If you look into the segments, I think currently the buses segment is doing extremely well. Overall, bus industry, it has grown in first quarter by 35%. The second big growth is coming from exports. Exports seem to have bottomed out now. As you know, till last year end, the exports were dropping significantly and as compared to the earlier peak of 18-19. But this year, quarter 1, the exports have gone up by 31% as far as the overall industry is concerned. Our exports growth has been more than 50% in first quarter. So we have done relatively better in exports. We are doing well in buses, even though our bus industry growth is little bit lower than the industry. But overall, we are doing very well in bus segment also. If you look at the heavy-duty trucks and light and medium-duty trucks, there the growth rates are very, very subdued. Their heavy-duty trucks are almost flat. There is not much growth. That's why I was saying quarter 1 is not as good as we had expected it to be. Similarly, light and medium-duty trucks also, there has been very, very marginal growth for quarter 1. So we expect that these heavy-duty trucks and light and medium-duty trucks, they will grow much better in the balance part of the year, especially from September onwards. So as far as we are concerned, we have done better.
Why do you feel that, sir? Why do you feel that? Because that's been the industry's Achilles heel. Heavy trucks and even medium-duty trucks are simply not picking up in the heavy-duty commercial vehicles, despite the fact that this is a very vibrant economy, right? Economic growth, there's no complaint over there. So what makes you confident that things will change from September?
I think the fundamental is the economic growth. If all of us believe that the economy is growing, and the economy last year has grown by 8% plus, and this year also all the projections are that it will grow 7 to 8%. And if you believe in that the government is going to spend 11 lakh crores in infrastructure, then if the infrastructure spend happens, then you need trucks. So therefore, the tippers, construction trucks, heavy-duty trucks, and better roads, then migration to the tractor segment.
Sure.
That will be good. So it's fundamental
Sure.
factor.
So just to come back to your own business, you said that in the first quarter, your exports have done very well, and that's where the growth is coming in from. So as a percentage of the total business, how much were exports in FY24 and how much will they be in this year, FY25? And also what impact does that have on your margin? Because in Q4, your margins had come down. I mean, year on year, there was a drop in margin. So now with exports picking up, I just want to understand how that affects the margin profile.
Exports overall still are much lower because with the drop in the overall export segment till last year, the exports, which used to be around 15% of our turnover, last year it dropped to almost 5 to 7%. And now from that low base, it has started growing. So therefore, I would not say that the exports are still contributing the large numbers. Large numbers are still coming from heavy-duty trucks and light and medium-duty trucks and buses. But of course, it's a good thing that the exports also have started growing. As far as the margins are concerned, you have rightly said we are at a EBITDA margin of around 8% last year, and our objective is to improve on that, and we are working on it.
All right, let's get a couple of numbers going then, sir. You know, your exports have grown, as you mentioned, and you're quite candid about that. In the last year, if I look at the financial year, actually exports were down 24-25% on a year-on-year basis. Absolutely. And now on that low base, it's seeing a recovery. And so on that low base, what kind of a growth can you see? The previous year, you did around 4,900 units. For the last year, you did around 3,700 units. So on 3,700 units, could we see a growth of at least around 50%, or does it double? Because it's a very, very low base and the first quarter has done well. So what do you end this year?
First quarter growth is 50% plus.
Yes.
If you look at the Bangladesh market has started growing. Nepal also has started growing. And Sri Lanka, we are expecting that after elections in October, there should be positive traction. They will lift the ban on import of trucks. Middle East is growing very well. Africa is also growing. So therefore, all export markets where India is exporting, I think they are expected to do better. So therefore, we would expect very strong double-digit growth in the full year.
No, double digits, so that's going to be you're being very conservative there.
So it's very difficult to
should we work, sir? Sir, should we work with the number of closer around 6,000 units for the year? You did 5,000 in FY23. So for the year,
at the peak level, we were at 10,000.
Correct. Correct.
Yes. So reach 10,000. So that's what I'm 10,000. We have to first reach 10,000. Then of course we have to grow much beyond 10,000. That's our aim. Long-term goal.
And 10,000 in FY25 or FY26?
Let's hope that it happens faster.
Okay.
So that's on exports. Now let's combine it with the overall business, domestic business as well, which is, like you're saying, bus demand is good. So given that things are looking up and the first quarter has gone down well, give us a picture for the full financial year in terms of total volume growth, top line growth, and you just told us that you're looking to improve margins this year. By how much?
Look, first if you look at the numbers, last year we had sold 85,560 full year.
Yes.
Which is growth of 7.5% as against industry growth of 3.9%. So last year we were all-time high, and this year quarter one we are doing well, and then hopefully we will grow on 85,560. So there, of course, it's anybody's guess. It can be near double digit or more than double digit. So it will depend how much the industry grows. As I mentioned, we are expecting the industry to grow by a double digit. If industry grows by double digit, we should do better than that. And that will be the growth on overall 85,560 of last year. As far as the margins are concerned, the good thing is there is a lot of, you can say, the industry is conscious that the discounts are not good for the industry, and everyone is working on it. Everyone is trying to cut down the discounts, which is a good sign. And we are also working on how to improve the price management, how to do the value selling. So with that, our aim will be to continue to improve the price management. And based on that, of course, the margins should improve. How much it will improve, it is very difficult to say.
But so the aspiration, like, I mean, you mentioned that you're going to try, but how much it will happen, we can't say. But what is it that you're aspiring for? 100 basis points, 200 basis points? What's the target range?
You know, Mr. Agarwal, just to add, Mr. Agarwal, last year you improved by around 50 basis points. You know, it was at around 8%, that compares with around 7.5%. So you think that you can replicate that because the growth is going to be a little bit better than the 7.5% that you did last year. So do you think another 50 basis points would be par for the course, give and take everything?
No, that there will be operating leverage because when the volume goes up, the fixed costs don't go up in the same ratio.
Yes.
So therefore, there will be some improvement because of the operating leverage itself. And then there will, if we are on top of it, if we are able to do better price management, then I think the margins should do better than last year. I will not like to put a number on it, but of course, the objective is to do better.
Okay, and you gave us the number for heavy duty trucks. I think your market share is around 9% that you mentioned. Yes. What about on buses?
On buses, in light and medium duty buses, we are at around 25%. And in bigger buses, we are still at around 8-9% only.
Okay. All right, sir. Great conversation. But before we let you go, we are running up to a very important event. All eyes on the budget in July. So what is on your wish list for the finance minister?
Of course, we are expecting that the focus on infrastructure investments will become even stronger. In the interim budget, the allocation was 11.1 lakh crores. We are expecting that that should even go up further. The second expectation is that there should be some boost to the rural economy because if you look at entry-level passenger cars or entry-level two-wheelers, there has been stress in that, and that entry-level demand comes from the rural markets. So we expect that there should be some boost to the rural economy so that rural consumers, they start coming back more and more. And with good monsoon or better monsoon this year, hopefully rural economy should do better. So therefore, we are expecting the government should focus on the rural economy more. And then, of course, we are expecting that there should be more, you can say, incentives for the electric vehicles because migration to electric vehicles is very important. As of now, migration is happening, but it is very slow. So therefore, some continuation of the incentive scheme like FAME 3 or any other incentive, we are expecting that there will be incentives on the electric vehicles and there will be some incentive on the scrappage of vehicles. Because as of now, the scrappage scheme is there, but of course, to work it effectively, I think some incentive is required from the government so that the scrappage scheme works effectively. So that's what our wish list from the fiscal budget.
All right, we'll leave it there, sir. Good speaking with you, Mr. Agarwal, and we'll chat again. Appreciate you joining in here with a lot of that perspective. I just want to take a look at the market now, which is rallied to the high point of the day. We are up 100+ points. And this is, what we were talking about in the morning, right at word go. When you start with a 100-point gap up, you're left wondering what next. But when you start with a more modest 40-50-point gap up like today, I mean, you can see the market heading a little bit more higher. And that is exactly what we've done from where we started. So 24,384, very close to 24,400 now. And there is, significant follow through after yesterday's breakout. Yesterday's price action was important because we took out this resistance zone in a decisive kind of a way. Lots of newer stocks into the mix as well. Mazgaon Dock, like clockwork, by about 10 o'clock, Mazgaon Dock occupies the first position with volume-led gains. So Mazgaon at about 49.19 is the number one volume-led gainer right now, and it's followed by Cochin Shipyard. So the shipbuilders, are on a rocket. 7% in Cochin Shipyard as well, 2,600 plus. Coming through there. Hudco is still there. It's just been relegated to the number 3 position in terms of volume-led gains. There is Skipper, which is up 6%, very large volumes. 390 on Skipper, 6.25% gains. Atul Auto has had a fantastic last few days. Atul Auto is up another 4.5% right now. There's a small name. I mean, they do basically animation works for a lot of Hollywood studios, etc. I'm talking about Prime Focus, based out of Mumbai. 15% on Prime Focus. Stocks at about 155. I'm not sure what's going on, if there is any news flow or something, but it's really been a stock which has not done anything for years. So coming up with volumes for this point right now. And then what else? I mean, you go down the list, there's more stuff, but then volumes are a little lacking. Suraj Estates, I think we mentioned that in the morning, 6.5%, 7% gains there. So this is the bulk of the big volume-led gainers, and a lot of these names are new. They were not in the mix at 9:15 when we sort of looked at what everything is doing. ITD is now down a full 7.25%. ITD cementation, that's at about 533 coming through. Policy Bazaar, I mean, you know, one common thing across the board, of course, is what is down is basically all down because, you know, there's been a very sharp run-up in a very short time span. But otherwise, I mean, you know, there's not very much volume on what is going down. I can spot 5 or 6 names which have got decent-sized volumes. One of them is HDFC, the other is ITD, GM Breweries. Apollo Tyres is down 1.5% on some volumes. I mentioned Policy Bazaar. There is Bharti Hexacom, which is down about 1.6, 1.7% as well. But that's about it. That's a short list of, you know, decent volume-led losers as well. We'll take a quick commercial break here. We'll come back and we'll continue talking about markets, but we'll also have a special exclusive conversation with the MD CEO at Star Health, the largest standalone health insurer, and that's coming up in just a bit from now.
Welcome back. Well, let's turn our attention to Star Health Insurance, and the company expects doubling of its gross written premium in the next 4 years. They also aim to have the largest health insurance book. In fact, my colleague Yash Jain caught up with Anand Roy, the MD and CEO of Star Health Insurance. Let's listen in to what he had to say.
We have guided for a doubling of our GWP in the next 4 years' time, from 15,000 crores to 30,000 crores. We took 17 years to get to 15,000 crores. We hope to get to 30,000 crores in the next 4 years' time. The ask is that the company has to grow at 18% year-on-year CAGR, which is the ask to get to this number in the next 4 years' time. We have delivered that performance in the past, and we believe that the strategies that we have in place should be able to deliver that numbers in the future also. So as we speak, for the current financial year, we have a target of around 18,000 crores that we have set for ourselves, as against 15,250 crores, which is a 18% CAGR.
What is the kind of growth that you expect on the retail side? What would be on the group side? Just to understand that which portfolio will deliver in a stronger way to the number that you're speaking about.
Absolutely, and Star has been known in the market for its retail franchise. We have created a lot of in-depth retail distribution as well as products and the customer base. So retail will continue to be our key growth driver. We are not going to lose our focus from that. But having said that, we look at group as a great opportunity where we are not significantly present right now, and we believe that there is a long headroom for play in that segment for us. So we have evaluated the group business, and we see that the small and medium enterprises, the SME segment, is a sweet spot where we believe that we have the distribution, the service capabilities, and that is the area that we would like to focus on. So currently, retail to group, our the mix is 92% retail and 8% group. we would believe that as we go forward in the next 4 years' time, it will slightly shift towards, maybe an 85 to 15 or an 80-20 kind of a mix. This year, we hope to get to around at least 1,000 crores in group business. Last year, we did little lesser than 500 crores. And by the end of 4 years, we should be at least 4x that. We should grow at 100% every year after that.
For FY25, where do you expect your combined ratios to be? And since you're speaking about the next 4 years till FY28, what will be the guidance that you would want to give the street on the combined ratio side?
Yeah. So this year we are guiding, I would not say guiding, we are aspiring internally to improve our combined ratio by 100 basis points this year. And we believe that that improvement will come from, both a mix of operating expenses as well as on the claims expenses, So we expect a 50 basis point improvement in both OPEX and claims. That's what we are, targeting for this year. As we go forward, Star Health actually has the best expenses of ratio management in the entire SAHI space, at least so to speak. And with the technology investments that we have made and with the productivity improvements that we expect to achieve, I think our OPEX ratios will keep coming down by 50 bips every year rather.
Correct.
And we hope to add that to our overall combined ratio improvements as we go forward.
Yeah. Okay, so about 200 basis points in 4 years.
Yes.
And about 50 basis points in FY25 itself for reduction. Okay, now I want to take the reference of how the company performed in the fourth quarter and understand a few things. If you look at the monthly numbers also on the premium collection, Star's numbers and the industry average, there's been a difference of about 100 basis points or 10%. If you're growing at 18%, the industry is growing at 28%, similarly with those numbers. What I want to understand from you is that with the kind of size and the base which Star Health has, should one assume this difference of about 100 basis points to continue, or would you actually look to close this gap also with the industry average going forward, and how soon going forward would that happen?
So we aspire to grow faster than the general insurance industry, okay? And that's our internal aspiration, where we believe that the industry should grow at maybe mid-teens and we should grow at 18% and that's our aspiration.
This 10% difference, since you say that we don't want to chase growth blindly, would that continue?
Absolutely. And see, you have to look at the scale of business. When we were at that scale of 5,000, 6,000 crores, we were also growing at 30-40%. Okay, so today the scale of business, today Star Health is actually number 7 in the overall general insurance pecking order. If you take out the 4 PSU companies, we are actually number 3. And we are doing a monoline business. All others are doing general insurance business. So I think, we have reached a scale which is substantial, and to grow at that scale with a reasonable and profitable, model is something that we want to achieve.
How soon do you, expect yourself to have the biggest health insurance portfolio in the whole sector?
I think, the way we are growing and the opportunity which exists in the market, I think we should be able to get there sooner rather than later. I would not like to put a timeline to that, but I think the 4-year agenda that we have set for ourselves, I think we will achieve that, that's what we are trying to see.
If you look at the numbers for FY24, the underwriting performance as well as the operating performance both suffered. Your underwriting performance was down by about 50% on a year-on-year basis, FY24. Same was the case with the operating profitability. What is coming in the way of you improving your underwriting and operating profitability? And do you expect a turnaround on both these parameters in FY25?
Absolutely, we expect a turnaround, and as I've told you, we expect that both of these parameters on loss ratio as well as on the OPEX, we are going to improve by 50 bips. On the underwriting side, see, we one of our large products, we took a price correction, okay, and that price correction, for it to play out, it takes about 24 months time, and I think so that will reflect in this year's performance.
Okay.
But I think, at an underwriting level, the company is very focused on making sure that, the company is profitable, and we have actually taken some calls to exit some businesses where we were seeing that the underwriting performance is not up to the mark. In certain markets, we went slow, and that is why we sacrificed a few basis points in terms of market share. But that was done strategically to make the company more robust for the future, rather than, taking those loss-making segments forever.
Life insurance was something that looked very interesting to you. Do you still hold that view of seeing life insurance industry as a attractive space for Star Health Insurance? Once approved, let's say composite insurance license, how long would it take for you to enter that market and roll out your product? And third question, when you enter into life insurance, would you only focus on selling protection products, because that's something which will complement your current business in the best way possible?
Yeah, absolutely, Yash. You know, the discussion on composite has been going on for a long time now, and we believe that, you know, it is coming to some level of maturity now, and let's see how quickly it comes to the market. But we are keeping our powder dry, right? We want to be prepared for whenever this new regime comes into play. We have had our internal strategies and internal discussions and surveys done with our distributors, with our team members and all of that. We believe that the protection model of life insurance is something which is a very close adjacency to our business. We hope, I don't want to give a number to that, but I think we should be the first to go to market with the product.
Another question related to composite insurance license. Would you apply for a fresh license with the regulator, or would you look at acquiring a company which already has a license and has certain amount of business and distribution?
It's a good question, and this is something that we are discussing. Of course, we'll have to discuss with our promoters on these strategies. We are in the talks right now, but we will let you know at the right time, Yash. I think it's too early to comment on that right now.
All right, well, that's the management of Star Health in an exclusive conversation with my colleague Yash Jain. We'll take a quick commercial break here. But on the other side, we'll have Ramdev Agarwal, chairman of Motilal Oswal Financial Services, with us. You know, a couple of years back, he told us that the Sensex will be at 1 lakh. Yesterday, we hit 80,000, so he's going to up his targets. So that's a conversation coming up after a quick break. Stay with us.
TV18.com.
The general assumption is that the government will continue with its infrastructure thrust, its capex, the government capex that's going on, and there will be an increase in the outlays over there, but not like what we've seen in the last few years, which was at the expense of boosting consumption. It's more like a muted expectations from the budget that this will be more of the same, no major dramatic change. So therefore, if in the budget we do indeed get some dramatic announcements, some really visionary statements, although then obviously there'll be question marks on the execution, implementation, etc. But as of now, it's not seen as a very big game-changing event for the earnings outlook in the next 1 or 2 years.
It appears to be some 382% jump in sanction and some 67% jump in disbursement. But disbursement and sanctions by and large used to be in the range of 50% plus percentage. So, and if you see the sector, in general, sector growth is there, but yes, we are always a little higher than the sectoral growth because of our strength in our core competency.
CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every
Welcome back. 100 points higher on the Nifty, and you know, we are basically making new milestones. So let's talk to somebody who's seen many milestones. I mean, you know, yesterday I was saying that when I started reporting on markets, the Sensex was at 5,000 levels. You know, we are 16x from that point on. But I think we have somebody who's seen, I think, markets since pretty much inception in the current modern format. We have Ramdev Agarwal, Chairman and Co-founder at Motilal Oswal Financial Services, right here in our studios. Ramdev, great to have you with us here. Thank you very much for your time.
Very good morning.
It is a very good morning, right? Yes. Every day is a good morning nowadays.
80,300.
Last, a couple of years back, you told us Sensex 1 lakh. We are at 80,000. We bridged the gap.
Yeah.
So we need a bigger target. When you come up closer, you need a bigger number.
So you give me longer way. I mean, what is happened after 10 years? I'll give you a much bigger number. So it's just a compounding. See, I started my career when it was 100.
Yeah.
So in 1980 only I bought my first stock, and that time Sensex got started 100. Today is 80,000. Do you know what is the rate of compounding in 44 years? Guess.
20%.
No. This is what is all about compounding. It's 16.4%.
Yeah.
Year after year, for 44 years, I have seen this market growing at.
Compound.
I didn't know that it is 16%. I thought it is 15%. This is a 15% country. India is a 15% country. So I have seen, I mean, like every 5 years it doubles, like from 40,000 to 80,000 it has become in 5 years, exact. So it's about 15%, and longer term is also 15-16%. So there is no reason to believe that going forward it will be anything significantly different. It might become 14, it might become 16. So if you go at 15, I mean, let's keep the base at 15, in 5 years flat, 2029 you will be 1,60,000. You know, is that a big number, or we should double it again?
I want to just, so you take a slightly longer sweep of time, and that's the way to do it. You even out and iron out a lot of the fluctuation and volatility. And I think you put that out beautifully with that sort of example. But slightly near term, this is also the fastest 10,000 point move.
Yeah.
Now, of course, I mean, from going from 70 to 80 in percentage terms is very different from going to 10 to 20. I mean, so having said that, this has come in about 130, 140 days. This last 10,000 points. So is it just your thoughts?
But you can have a deep correction up to 2,000 points, and then it will get nullified in the sense that, see, what happens is the base effect comes. See, first 10,000 to from 10,000 to 20,000 is a doubler.
Correct.
Obviously, it will take 5 years. But 70 to 80,000 is just about 14%.
14-15%, yes.
So 14% and 100%, it is going to take different times.
No, but the other aspect, we've been discussing this, is this whole liquidity gush, right? This massive tap of domestic liquidity, which is why this is a very different market from where we were maybe 10 years ago or 15 years ago. Does this worry you? That there's so much money chasing stocks. Is that in itself maybe a risk that people don't want to look at?
No, why worry you? It's the happiest situation in my 40 years of career.
Okay.
Yeah, it is the happiest situation. When actually retail, which is, see, in 1.4 billion people, at least we should have 500 million people in the market. We still have only 160 billion or 100 billion. So this journey of inclusive development of the markets, because the risk capital is going to come from, not from the top end of the population. Risk capital will come in a truly distributed way from across the country. And that is the revolution which is on. Say 3,000 rupees SIP, 5,000 rupees SIP. So the guy who is giving, say, my household servant or somebody, he or she doesn't realize, I mean, for her also it is very small. Say she is contributing, say, something like 35,000 rupees a year. If that goes down by 20-30%, I don't think she is aware of it. And it really matters to her. But that 30,000 rupees all collected in the SIP becoming 22,000 crores per month means about 240,000 crores, 2.5 lakh crores per year. This entire thing is available to our entrepreneurs.
Actually, the average SIP size, I think, is about under 3,000 rupees.
Yeah,
so it is very, very small.
Yeah. So what I'm saying is, risk is distributed. The best thing to happen in any equity market is when the risk is distributed. The whole concept of joint stock company came as to distribute the risk. So this is the ultimate form of distribution of risk, and that's how our quality of equity capital, which is available to my entrepreneurs, finally, the corporates, is very high quality.
No, but that's at a much broader sort of thematic level, and I couldn't agree with you more. It is a revolution that we're witnessing right here in our lifetimes. But just in the near term, in the short term, given the pace of money coming in mutual funds and the fact that the spectrum of stocks, and also there are definitions and regulations, right? So the spectrum of stocks, your basket is pretty much the same. So is that a challenge?
No, you are seeing a lot of supplies coming in. from existing promoters and FIs. FIs have been supplying for last 1.5, 2 years. Now they also seem to be tired. Now it is all for the new companies which are not listed. So 100% owned unlisted company, they are coming with the IPO. Almost every day there is 1 or 2 IPOs. I think it will be a record year of maybe 200 IPOs or at least 160, 170 IPOs. Almost every other day you will close 1 IPO. And there is no season in the sense that entire 365 days it is open, which is a very different change. So supply line is building up. The good thing about the market, India, is that there are 3,000-4,000 companies listed already, and they all can use a lot of money as the demand builds up for their respective products and services. So I think there is a lot of demand, and then on top of it, the owners are there who are sitting on 50-52% of the ownership. So they wouldn't mind shelling out 10% of their holding to the retail public. Now 10% means, see, today market cap of the market is about 440 lakh crores. 10% means 44 lakhs. My flow is just about 6 lakh crores. So if entire thing has to come from existing, if you raise the prices too much, the existing owners of the companies, they will supply you 10%, which is good enough for next 5 years. So there is no dearth of supply. Samsung will come, government of Singapore will come, Jio will come.
Hyundai is coming.
Hyundai is coming. Everybody will come. There is, see, if you sell a rupee stuff for 1 rupee 20 paisa, 125 or 150, supply will come. You should have that faith that somewhere it will come. In what form it will come? Existing, new, old, and it has a tremendous impact on the private equity, venture capital, the appetite for unlisted. Appetite for unlisted is so high, and that is where the money is going into the startup of new companies, you know. Unheard of cities, you know, you go to tier 3, tier 4, there's so much of excitement about becoming corporate, getting organized, wanting to do private equity, wanting to do, kind of public issue, which is what is the revolution. I am not so much about the 80,000 and all. That is what is the reflection and fun for us. But actually, what is the second order effect of really, it's like a water, Ganges water coming to desert of Rajasthan. See, immediately it might create flood, but eventually 10 years henceforth, entire Rajasthan would become green.
Wow.
That's the effect which this will have.
Hi Ramdev, good to see you. And I'm just doing the back of the envelope calculation, 80,000, 1,50,000 in the next 10 years. When my kids go to high school, it will be at around 3 lakhs. I'm quite pleased with that thought. But I wanted to ask you this, given the kind of participation you're seeing and the revolution that we're seeing, do you think it's time that we see some kind of participation in either house of the parliament, from either the brokerage community, the stock market community, because the participation is there, we're going through a revolution. Do you think that's the time has come?
I think we should have at least one state cabinet minister for capital markets. Reporting to the main FM, there should be one dedicated, and he should have office in Mumbai rather than Delhi. It is very important that his office is open. I think SEBI is doing that job, more or less. But still, I mean, at a political level, because SEBI also reports into, I think, president or something like that. But at political base also, there should be somebody who is fully dedicated, listening to the voice and concerns, ideas, opportunities. Because, see, capital market, the capital market opportunities is amazing. Only US has this very vibrant capital market. Okay. And that's why US is what US is. So India today with $5 trillion plus kind of market cap, we can be in 5 years flat. See, your market cap index grows at 15%, but market cap grows at about 17-18%.
Yeah,
because of the new issuance and all.
Yes.
So 18% means in 4 years flat you'll be $10 trillion. Just think of $10 trillion market, and the entire market, fortunately and unfortunately, is just in South Bombay, south of Bombay, south of Bandra. So you imagine what kind of intensive activity you're going to see in this city.
And I'll tell you, I mean, I was talking to a gentleman who heads a large sort of SME portfolio at a large bank. And he travels and meets companies in tier 2, tier 3 cities, etc. Everyone wants to raise money.
Yeah.
Everyone is thinking of doing an equity issuance. And it's an incredible pipe. Companies we've never heard of.
Yes, yes.
These are, small size, 100, 200, 300, 500 crores, up to 1,000 crores essentially. But it's a big pipeline of companies which we will see over the next couple of years. Although, Ramdev, sometimes, having seen markets a long time, you sometimes wonder, is this really happening in this size and scale? And I think that is natural to wonder sometimes.
Yeah, for me also it's first time. In the sense that we have seen the markets going up and down. It doesn't go down now.
Yeah.
See, every time, like in 2000, see, I think real fun was 2003 to after 9/11 collapse in
Correct.
2001. It was kind of depressed. Motilal also incurred loss for 2-3 months. So that was a bit of cautionary time. But after that, from 2003 to 2007, it was amazing time. But this was a global boom.
Yeah.
You go to US, you go to China. I mean, when I used to go to Hong Kong and used to open the newspaper, I said, "Hamare यहाँ boom hai, यहाँ तो super boom hai." Like the headlines were so different. We were growing at 15-20%, they were going at 40-50%. Now they are growing at 5-10%, we are going at 25-30%. So this is truly India decade. We got to play it very, very cautiously, I'm telling you. Particularly the capital market card.
Yeah.
Because it is not understood properly.
And let's talk about that.
Yeah.
And I think at that time, retail investors were not, they were
Yeah.
nowhere, maybe,
We
what
should
the
do
size. It
nothing
was
to
completely
disturb this.
FII driven.
Otherwise, they'll go to gold.
With our SIPs and our first funds, I remember back then.
They will go to gold, I'm telling you. Or they'll go to real estate, which is again a mess.
So
all the savings must come here.
So what do you mean by that? When you say you got to play it carefully, in terms
Yeah.
of, I think what you mean is regulations, etc.
Yeah, no, our regulators have done amazing job.
Yeah.
I'm telling you, this boom is bigger than 92 boom. Just that in 92 there was no SEBI. So today we have SEBI, we have RBI, we have digital tracking, we have everything perfect. But just that, because unless something is broken, don't fix it. My sense is that something is.
So what is your fear? Let's approach it from the other side.
My fear is that they should not do anything, which can disturb this tempo of shift of savings from, say, now it is happening from bank deposits to, say, mutual funds. This is a wonderful thing. Now they should not do anything whereby the other asset class, like gold, which is unproductive, people should not become, by mistake, they should not make gold or real estate investing or some cash-based assets buying more attractive compared to stocks.
And who's the they? Are you referring to regulators or the government?
I mean, power that be. I mean, I'm not pointing out anybody, because a lot of people have a lot of powers. RBI has its own power, SEBI has another power, government of course has a lot of lawmaking powers. I mean, all that fiscal measures like your capital gains and all those kind of stuff. Then this side monetary is there, isko paisa nahi dena, usko paisa nahi dena, ye band kar do, wo band kar do. Then SEBI saying, so मैं क्या बोल रहा हूँ कि see, they have done so far, they only have brought it here. So all the credit to them. But having got it here, don't get scared of what you designed for when they are coming.
Yeah.
See, you designed for the inclusive development of the capital market. That's truly happening. Till the complaint comes from the consumers themselves. I mean...
So before we start talking markets here and now, just to complete this point, tell us about the budget. We're talking about not fixing what isn't broken, right? That's what you're saying.
I would confine...
From a capital market perspective, because that's one big fear. There'll be some tax change, there'll be some capital gains change.
Yeah, so that's where...
So what's your wish list when you want to...
I have...
Don't spoil
no
the
change is the best thing. No change is the best thing. But actually they should make it even more attractive for the people, not for me. I don't want any tax concession, for sure. But the masses, I mean, wherever it pains, say like, say PMS people are doing. So PMS, I mean, that's not a budget issue. I mean, that is all for the maybe SEBI or somebody to reform. But wherever little points are there, in terms of fraction with the, I mean, with the development of capital market, say taxation issue. This taxation is always a big pain point, like, say pass through hota hai. First they'll say this is a pass through, this particular category is pass through, and then later on they say 10 years back it was pass through, but as per this is not pass through, and hence you get into litigation, and that litigation never gets over. So one is that of course some mistake could be committed by the intermediaries, but I think there should be an extremely good settlement system out of the court settlement system. Okay, we go and accept this happened, but looking back it is a mistake, but today, okay, let's sit across and pay some fine or something and settle it and done and dusted types, so that we can move on. Otherwise, there are 2 chartered accountants, consultants, and people are busy. You keep issuing notices. So I think it must be made very, very fraction free. The capital market should be the most friendliest capital market in the world should be India.
So completing the loop on the budget, you're saying no changes. That's
broadly,
from a taxation perspective.
It should not be changing. Yeah, I think we are in a very good equilibrium.
Yeah. So anything just to complete that thing on the budget. Anything else you are expecting? Not just capital market from a budget. Will it be a big one? Because this is the first time we will hear about them talking about.
I would expect that there should be some boost to the consumption. See, you want private capex. Government is doing all the bits of its. You see the GST number of this month. It is 7.7% growth. If this trend continues and it goes to 6% and 5%, then you have a problem in the health. Because your GDP is growing at 10-12%, your GST is growing at 7%. It means it is only first month. So let's not because it was at the middle of the election and super heat wave. It should recover hopefully next month itself. But if it doesn't recover, there is a problem with the consumption. So you have to address to the consumption. They will have all the high frequency data, not with me, and they have all the super economists. They will say how to build this up. Because the moment consumption is there, Indian enterprises are so smart. You want burgers, people will supply 1,000 types of burgers. You want cars, people will, you see, you don't have to tell anybody, all kinds of cars are coming here. So you have to just give indication where the consumption is and investment will come. Because infrastructure is something which only government can do.
So some income tax relief for something like that should you saying that should do?
There are two ways. One is that put more money in the hands of the poor guys or not poor.
The salaried people.
Non-urban.
Tax-paying people.
Tax-paying people. You put more money. The guys who are not paying tax, in any case, you have no control on them. The guys who are paying tax, you can reduce that, like I would say, up to 12 lakhs. No tax. I'm a farmer. No tax till 12 lakhs. Matlab he should not know where is the income tax office like. 12 lakhs rupees means a lakh rupees.
You know, this is a first. This is the first time I'm hearing someone who's a veteran of the capital markets saying it'll be okay if you go to that dramatic extent, saying no income tax till
5 lakh to hai na. See, 5 lakh hai.
वो तो अभी की exemption limit है. Yes.
झंझट है ना कि भी आपका वो 10,000 रुपए का आने का है, 5,000 जाने का, and full income tax department filled with all these cases. Millions of cases going on. आप 12 lakh तक साफ कर दो. So income tax officer has relationship only with the guys who are earning actually 12 lakhs plus. तो आपका पूरा population साफ है.
This is a mindset change, sir, because usually the moment something like this would happen, the market would fall saying, oh, this is a very populist measure, it's a very populist government.
Market, देखिए, you cannot build budget for market.
Yeah.
Market has its own mind.
Yeah.
Okay. जिस दिन बाजार आएगा उस दिन यदि FI ने $20 billion बेच दिया कोई कारण से, तो आप कितना भी अच्छा बाजार लाओ खराब हो जाएगा बाजार. So forget about the market. No, you can't run it for the market. You have to run it for what is good for the country.
Absolutely.
You know, Ramdev, similar time, exactly 1 month ago, we were speaking when the market was 3,000 points lower from here. Shows the kind of recovery that we've seen in the market and the power of retail as well. But since you briefly mentioned mass, I wanted your take on the mass segment. Are we coming to the end of the K-shaped recovery that we saw? And there's plenty of demand for stocks. But are we seeing demand now for shoes, for soaps? Is that coming back?
No.
Is there recovery on the cards or not yet?
No, in fact, it's slowing down. What I keep getting bits and pieces of news. But today morning, I was talking to 1 or 2 businessmen. They are saying that like one shoemaker has gone half, he has retained half of the staff because there is no demand for the good quality shoes. So maybe it is going to some foreign brand or something. But per se, there is no, 8% GDP growth for 2 years. And still there is no boom in HUL, Nestle and Marico and Britannia. People should not be able to punch enough biscuits for 8% growth economy.
Now, let's run through a few other things.
Yeah.
Capital market plays. It's been a long-standing theme of yours.
Yeah.
Does it stays absolutely rock solid?
It becomes even bigger.
Bigger.
Let's see budget what
all these transaction charges and all that what happened recently.
They are all passing. See, nobody is trying. Authorities are not touching the customers. They are making only the wrong incentive which is there for the intermediaries to expand the volumes big time so that they can get their credits. They have simply stopped the credits. So now intermediaries will respond in whatever possible way. Maybe they will increase the charges or
so it'll get through, it'll be tidied over. It's just
part of the developmental process.
Okay, private financials. What's the view now? I mean, because that's private financials, private banks. Banks actually, financials have been a big bull, and HDFC Bank, I mean, there was a bit of a trigger there as well. What's the view from here?
My sense is they're going to do very well because this is the best time for the banking. What is happening with so much of equity coming into the corporate world, the quality of credit given to the entire corporate world has significantly improved. And the prepayments and the quality of corporate cash flow is so good that banks don't have to worry about the corporate book, which is almost 50% of any bank. MSME aap jodoge to it might work out 65-70%. So that portion of the lending, which is bulk of the lending for banks, is fantastic, and the quality is improving day by day. You know, so clearly banks are in very good shape. The only problem they have is the liability issue, in the sense that if you have 15, 16, 70% credit growth, you need that much growth in the deposits also.
Yeah.
And deposit growth is very calibrated, and about 11-12%. So their cost of deposits are going up. So I don't know how. RBI is clearly on top of it, and they have a lot of tools to provide as much liquidity they want. So I'm sure
they'll another sector I wanted to, because there's a fund, the defense fund, the Motilal Oswal Defense Fund. Has it started?
Yeah, I think
deploying?
from yesterday it started trading.
Stocks are higher today.
Again higher.
No, I'm just saying.
I don't know. I mean, see, they're done. I think yesterday was the first day, so I don't know whether fully it is done, but it gets listed.
But you know, how do you view this space? Some of these stocks are up 10-15 times or so. One school of thought would be, now it's, you know, we are starting for the next 5-10 years because it's got a tremendous runway. The other school of thought would be like, these stocks already went up so much. So give us the rationale. I mean, on a space like defense, which has done so well, and now you'll come out with an NFO.
Yeah. So see, all the PSUs, they were discarded for, I would say, 10 to 12 years or maybe 15 years. They literally came to zero performance 3 years back in our wealth creation study. And so it is making up for the last 15 years of lost valuation. I mean, things came from, say, 12, 13, 15 P multiple to 2, 3, 4, I mean, low single digit P multiples. Like quality, I don't know, even now it was a single digit.
Yeah, 8.5.
Yeah, so it was, this is despite doubling, so it was 3, 4 P multiple. Your HPBP house is still at about 5, 6 P multiple or 7 P multiple. So clearly, the PSUs were depressed beyond anybody's imagination, and now under this government, I think the PSU profit performance is also very good. All the PSU banks which were in dire straits, absolutely, till COVID, post-COVID they have come back, they cleaned up the book in COVID, and now they are as profitable as private sector.
Yeah, if I got the number right, I think the entire PSU basket, you're getting 15 lakh crore, which has gone to around 70 lakh crore. But the good news is the profitability as well has gone up as much. So on a PE basis, it's not still that's not changed.
The area is power, Ramdevji. Power as a space, utilities and equipment makers and financiers. Do you like that space as a fund house, or you think it's a bit overdone now?
There is a lot of choice, but yeah, I mean, see, it all depends on the stock. See, I'm not anymore picking stocks, you know, and so I'm not at liberty to talk to you about individual stocks. But the opportunity is there for any company which has a solid business model and the desire to grow. You know, I mean, some of these PSU financing companies, all the private power sector capital expenditure which is coming up, a lot of it will go from their books.
You know, but on a related note, because of this kind of expansion, if you look at the industrial space overall, which has worked so well, right? It's become a high, it used to be a value play, now it's like the high momentum play in the market, where stocks like ABB and Siemens, they're trading at 80 times, 90 times, 100 times forward multiples. How should investors approach it? I mean, thematically, yes, we understand, but when you see these prices...
Yeah, there will always be some segment of the market which you don't understand, or I don't understand. If you don't understand, don't bother about them. Because they're enough to play some other place.
But overall, when you talk capex, industrials, what's
so
your
they are the highest quality capex companies, Siemens, ABB and all, because they have very long-term franchise. It's not, you know, one season here and there. They are the guys who have, first thing is, they're not very capital intensive. They're much more software driven, services driven. They have IPR, what they do, nobody else can do it. So second, as the India goes from say 4 trillion to 8 trillion, your size of the capex boom will be 3x, not 2x. So who are the guys? There is nobody, no substitute coming for them. So they are going to get more complex, bigger orders in their books. So, and then ROE is very high. Their margins are now from 8-9%, they are at 14-15%. So everything is going well for them. And even globally, now the parent company, if you see these companies, European companies, total setup, India is the only place from where they are getting this 25-30% growth. And now it has become significant in size. And more than the operations, market cap has become significant their size. A lot of people, they are selling here to buy back in their parent organization. So now they cannot ignore, because this is a, what do you call, India as a powerhouse. You know, this is a decade for India, and it will be on the back of a lot of this capex, which will be helping them big time.
All right, Ramdev, just one final word. You know, we have spoken about consumption, about capex. The other C is cement, and you have spoken about this in the past as well. The consolidation drive is picking up steam, and I've got my ear to the ground. I believe there's a couple of assets that will get gobbled up in the next 6-8 months or so. You've spoken about this in the past. How do you approach that theme? With the large are getting larger, the smaller ones are getting a better parentage. So how do you approach that? Because clearly this is a space that is seeing plenty of interest, a new player coming in there, and you've seen plenty of consolidation.
Yeah, so this is a very funny situation where consolidation is on and yet new players are entering. So there is no dearth of supply of the capacity. You know, so there has to be genuine shortage of cement, which is not happening. And this we are counting for last 24 years. That demand is going to go up at this pace, supply is going to be constant like this, and hence there is going to be a big bang price increase.
Yeah.
So that has not happened, and I don't see it happening in near future.
So how do you approach the theme then?
Yeah, so stay. I mean, if the stock is available at replacement cost of below $100, buy. If it is $150, $200, sell.
Right, well, that's straightforward. Ramdevji, great to have you with us here. Really appreciate it.
Nice.
So 1,60,000 Sensex by 2029. 29.
5 years, doubling in 5 years. That's the formula.
2034, we are at 3 lakh.
All right, I'm just kidding, but wonderful chat as always. Thank you very much for being with us here. So that's Ramdev Agarwal, Motilal Oswal Financial Services, with his thoughts on the market. It's a wrap on this edition of Bazaar and that special conversation. We are back with Chartbusters on the other side. Stay tuned.
With me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18. Now streaming live 24/7 on YouTube.
48% is being given by domestic contributed, 52% comes through from export. I would like the ratio by and large, will remain same, but I wish, as far as the domestic is concerned, it tilts, towards domestic. I'll be happy if domestic is 53, 54, 55, and as far as the exports are concerned, that is, 45, 50 or whatever it is. So we do around 45% in chronic and 55% in acute. Obviously, as far as chronic is concerned, the margins are better, and company will keep on, focusing on that.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI/ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 6.
Shares of Lupin surge after brokerage firm Kotak Institutional Equities double upgrades the stock to add from sell, also raises the target price to 1,800 rupees from 1,400 earlier, expecting a positive surprise from US sales. The stock is among the top gainers today, up 5%.
ITD cementation slips closer on 7% after the company's promoter shareholder, Italian Thai Development, says that it's exploring divestment of its stake in the company. The stock, however, is under pressure because it's seen a big run-up in the last 1 month or so, and also the street is cautious with regard to the valuations that the company could be acquired at.
Skincare brand Kaya surges 10% after striking a deal with Marico, which will now handle the sales and marketing of Kaya's products outside of the Kaya clinics.
Suraj Estate developer zooms more than 6% after brokerage firm Novama initiates coverage with a buy rating on the stock, citing multiple growth triggers.
Bharat Forge under pressure after North America Class 8 trucks fall in terms of orders to a 14-month low in June. The orders are down 33% month on month.
Hello and welcome to Chartbusters. I'm Nigel D'Souza. Joining me as always is Mangalam Malu, and we're up closer around 50 points. So half a century is what we've seen on the Nifty. The Nifty Bank, though, that's a bit of a drag in today's trading session. Yesterday it was an outperformer. So that's a little bit low. But otherwise, from the broader markets, we still have more number of stocks advancing than declining, though both those two lines are on the verge of converging. Hey, Mangalam.
Hi, Nigel. Slightly getting close to each other, the advanced decline lines as we speak. But what's interesting is, again, one of the tug of wars that we keep talking about, the baton that keeps being shifted between the IT space and the Nifty Bank as well. Today, the underperformer is the Nifty Bank after a big rally of, almost 4 digits that we saw in yesterday's trading session. We're a near 1,000-point rally on the Nifty Bank, but now it's coming for a wee bit of selling, down about 150 points. But if you look at the Nifty IT index, which took a bit of a backseat yesterday, is now batting for the bulls. So currently the IT index ahead of the earnings season is doing well. All the IT stocks are actually moving towards the higher end of today's trading range so far. So that is something we'll watch out for in the second half. Can the Nifty go past levels of 23,400 thereabouts? The option writers are positioned for a range between 24,200 to 24,400. So that's something that we'll keep an eye out on right now, at the middle of that range itself. So what we'll do is let's get in Sachidanand, the taker of Trade Bulls, for a quick technical check on the market. Sachi, after this heady run, maybe some people believe there could be some consolidation, but the market over the last few trading sessions has only surprised on the positive side. So what should one do?
Good morning, Mangalam. Good morning, Nigel. I think the verdict is very clear that the Nifty has not been, breaking that 5-day exponential moving average support line. This particular support line has been maintained on a closing basis for almost 19 trading sessions in a row. And every time, it dips towards that particular support line, there is a good amount of buying interest which emerges. So I think going forward, unless we don't see a closing below 24,180 levels, the trajectory still remains on the positive side. Overall, we are of the opinion that 24,560 is the level wherein the market would see some termination. But as of now, the reward to risk opportunity is not that great. Any declines towards 24,300 should be utilized to create some long positions. From an intraday perspective, the support or the stop loss can be placed at around 24,275. On the higher side, we may again see it swinging towards 24,400. When it comes to Nifty Bank, 53,000 has been a very dominating support, but we have seen some slippages here. Unless we don't see the Nifty Bank closing below that 52,770 mark, we may see some consolidation, but that consolidation would be considered healthy to create long positions. Eventually, even here, we are anticipating that the Nifty Bank could scale towards 53,550, and eventually on a positional basis, we may see the levels of 53,900.
Okay, all right, Sachi, just to reconfirm that, on the Nifty, you say buying closer to around 24,300 with a stop loss of around 20-30 points lower, right?
That's right.
Okay, all right. You want to give us some individual trading ideas as well?
Well, Nigel, the strength in ICICI Bank is something that we are expecting to continue. We have seen a bullish flag formation on the daily scale. The OI additions have been very consistent here. Yesterday, we did see a decline, and that particular decline was again, bought in. On a closing basis, we saw a bullish spike formation, and the confirmation of that particular pattern is set in today's session. So we're expecting that this particular rally should continue. From a pattern perspective, the target is placed somewhere close to around 1255, and that's why we are recommending building long positions here with a stop loss at 1217 on ICICI Bank futures. The second counter which has hit our radar is Lupin. Now, after 4 months of consolidation, this is the fourth attempt wherein the stock is trying to sustain above that 1700 mark. The call writing action has been very significant for the last two series, but even right now, the way the additions have happened, I think the momentum is quite durable, and that's why we have also recommended it to our clients. That will be a disclosure. So we are anticipating that for the day, we may see a swing towards 1755 on Lupin. From a positional perspective, the target is placed at 1830. And that's why we are recommending building long positions even at this juncture, keeping a stop loss somewhere close to around 1688.
Sachi, just before we let you go, I wanted your thoughts on something like an Asian Paints. I don't know whether you've seen the chart right now or not, but the stock is recovered from the lows. It's currently actually moved to the high point of trade. And that's interesting because one, crude is at $87 per barrel. Typically, one would see this as a weakening opportunity for paint stocks, and secondly, the stock has done absolutely nothing over the last couple of years, been one of the most underperforming periods of the company in its history so far. Just wanted your thoughts on what Asian Paints looks like right now after nearly 2 years of consolidation.
Mangalam, I think this consolidation may continue. I think the stock has a lot of resistance right up to 3030. So until unless we don't see the stock sustaining above that particular level, a possibility of a major trend reversal looks bleak. From a trading momentum perspective, yes, after 4 days of consolidation, we are seeing some uptick here. The daily ADX is improving, so we may see a swing towards 3000, 3020 levels. In case if someone is long on the counter in today's trading session, then probably he can keep a stop loss somewhere close to around 29.45 and still continue to ride on this particular momentum. But we don't see this level of 3030 getting breached immediately. So we may see Asian Paints consolidating for next few weeks within this particular range of 2880 on the lower side and 3030 on the higher side.
Okay, Sachi, thanks a lot for that. Well, for the time being, though, let's shift focus to our special segment where we get you a few ideas for profit from Money Control Pro. Sachin Pal joins us to talk about a stock that he's tracking rather closely. Sachin, take it away.
The stock in focus is Saga Cements, which is a mid-sized cement player operating primarily in the southern markets. And the company ended FY24 on a high note with an impressive volume growth of almost 19% in the final quarter of FY24. And the volume growth for the overall fiscal year FY24 was again very strong at 14% compared to last year. On the margin front, the company saw an expansion of almost 300 basis points thanks to the decline in power and fuel costs. Power and fuel costs continue to remain very stable, and that should really have an expansion on the margin going into FY25 as well. On the volumes front, the Q1 is expected to be very soft for the company, primarily due to the disruption due to the general elections as well as the intense heat wave. However, the management expects the demand to pick up post the monsoon season and is anticipating a volume growth of almost 18 to 20% for FY25. Well, there have been a couple of developments in the cement sector, primarily in the southern region, very recently, mainly being the acquisition of Penna Cements by Ambuja, as well as the acquisition of 23% stake by Ultratech in India Cement. So that these deals could have an impact in terms of competitive intensity in the core geographies which Saga Cement operates in. So that really needs to be watched out for. Nevertheless, the company has a very long growth runway and around 11.8 times FY25 EV by EBITDA. Investors can look forward to accumulate the stock during corrections.
All right, Sachin, thanks a lot for that. And as we move into the short break. A couple of these FMCG stocks raising their hands once again. We have HUL, which has moved higher. ITC2 has moved to the high point of trade. Take a short break, come back, getting more stock-specific action on the other side.
Of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high. We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines. 25 years of excellence and unparalleled growth.
CNBC-TV18 embarking on a quarter century of excellence.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Welcome back. You're watching us here on Chartbusters. Apollo Hospitals has moved higher right now, even as the Nifty Bank actually has now increased its losses down about 200 odd points. Alongside that, we have a couple of other stocks which are actually seeing some bit of profit taking as well. A few cement names. We have ACC, which is at the low point of trade, giving it company at the lower level is Ambuja Cement as well as JK Cement. So these are a couple of stocks which are seeing some bit of profit taking. Alongside that, we have Dixon Tech 2, which has come off the highs. Remember, it's been a big mover on the way up. But one of the stocks which is among the top gainers today is Lupin, after brokerage house Kotak Institutional Equities has double upgraded the stock from sell to an add. Sudarshan joins in with the rationale behind this upgrade and what they're saying. Sudarshan.
That's correct. So Lupin is buzzing in trade and it's up more than 5% after it has got double upgrade from Kotak Institutional Equities. It has upgraded the stock to add from sell and target is raised to 1805 from 1400 per share. It says company is well poised to surprise positively on street estimates in the US in FY25-26, and the reason it has given it says despite baking a sharp decline in albuterol sales over next 2 years, it might surprise positively in the US because it believes company has a bunch of products lined up to ensure limited earnings dip in FY27 after a strong FY26. And considering all these, it has raised even FY25-27 EPS estimates by 3 to 16%.
Okay, all right. Thanks a lot for that, Sudarshan. Well, Mangalam, you want to tell us about a couple of those FMCG names as well that are moving around?
Yes, one of them is Kaya right now. So basically yesterday in the exchanges, there was an announcement that came in from the end of both Marico and Kaya. What Marico's done with Kaya is they've collaborated on a way where Kaya's products can be sold, marketed and sold by Marico itself. Marico will handle the sales and marketing of Kaya's 75 plus products outside of Kaya's own clinics. Remember, Kaya is a wellness business and they have some of their products which they sell in some of their 70 outlets which are there. And because it's a wellness business and the products are selling just there, over the last 10 years or so, the sales of Kaya products have been pretty limited. Close to around 350 to 400 crores is where the top line has been flitting between over the last 10 odd years. With Marico having access to a direct reach of over 1 million stores and access to obviously the best of marketing and sales, etc., can they grow and unlock the untapped potential of Kaya brand is something that the street is betting on. And as a result of which, while it will be a mild positive for Marico because it does well for their premium personal care things, we need to understand the commercial terms of this arrangement itself. How much will be sold by Marico? What is the margin that they will get for this? And what would be the incremental sales of Kaya itself for it? Kaya, if you just take a look at the stock price over the last month or so, you'd see that including today's 10% gain, there's been a near 60-70% rise in an otherwise absolutely flat or consolidatory stock. So some part of the street was expecting some sort of arrangement to come by for Kaya, maybe in this manner or another, which would lead the business in a different direction. And that's eventually come about. What it'll be remaining to seen is what kind of growth potential does happen out here. As you can see, the stock up 67%. And you look at a longer term chart, nothing. So obviously some part of it was, being penciled in, and now that has come about.
All right, Mangalam, thanks for that. Well, for the time being, let's slip into a short break. Up next, the newly crowned T20 World Champions, Team India, has landed in Delhi and will meet our Prime Minister very shortly. Stay tuned for all the updates on that front.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high. We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18 embarking on a quarter century of excellence.
It's coming on the back of a period of hikes which was unprecedented, facing shocks that I tried to describe yesterday over dinner, and followed by a period during which we held rates untouched, and during which we were restrictive enough to actually see our medium-term target reach that 2%, which is our objective. And most recently, we have seen in our round of projections, which are really important, September, December, March and June, we've seen that 2% target with an oscillation of 0.1 about it at the last quarter of 2025.
Dr. Saleen, you know, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness? Or do you think it's also a cultural issue where, you know, one of the statistics that or reports that I was reading indicated that we just don't feel the need to brush more than once a day?
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and
Well, the party is getting underway for the newly crowned T20 World Champions. Team India has landed in Delhi and will meet the Prime Minister very shortly. Well, they're also scheduled to hold an open bus parade here in Mumbai later this evening. However, Abhimanyu, he's in Delhi and he's getting us the latest on that front. Abhimanyu, tell us, what's the atmosphere like? You're a lucky man. Hopefully later this evening we'll be as lucky.
No, actually, I would say that the residents of Mumbai would be even luckier than Delhi, because several fans who had congregated outside the hotel, they were complaining of the fact that there's no open road show which is being conducted by the Indian team, by the victorious Indian team rather, in Delhi, the same which is going to be conducted this evening in Mumbai. The team had left sometime back for the PM residence and has reached PM's residence. It's going to meet Prime Minister Narendra Modi shortly. Also, it's notable that less than a year back, when the same cricket team had lost in the finals to Australia in the 50-over World Cup, PM Modi had met the team, had consoled them and had encouraged them to work harder in future. And of course, less than a year later, this time it's a victorious Indian team along with the trophy, the World Cup trophy. And also, 3 of the senior players have retired on a high note: Rohit Sharma, Virat Kohli and Ravindra Jadeja. So the fans we spoke to till now in course of the day, many of them, of course, would miss the presence of these senior players in the team, but are also hopeful of the fact that many youngsters, many promising youngsters and young players will get opportunities due to the vacancies which will be created by the exit of these players. Also, these players will continue to represent India in ODIs and Test matches, even as there are several other milestones which the team is going to achieve. But for now, of course, it's going to be a revelry all the way for the victorious team, which is going to come back to the hotel in some time and thereafter will leave for the airport to go to Mumbai.
Revelry indeed, Abhimanyu. Thank you so much for bringing us up to speed with all that's taking place in Delhi. Though what we are seeing are the visuals of Rohit Sharma dancing. How cute is that, Nigel? You know, you don't associate Rohit Sharma with any sort of serious dance, and that's exactly what he's doing. A classic Mumbai dance that is. And you know, one thing I have to say to you, that I was very, very lucky, one of the fortunate ones who actually happened to see the open bus parade in 2007 as well, with MS Dhoni and team taking the first T20 trophy down Marine Drive. And I will be hopefully lucky to watch the same thing today as well, 14 years later. What a wonderful moment that was. It's remained as a core memory for me as a child. And you were lucky to watch the 2011 World Cup win as well.
I was just going to say that, Mangalam, we took turns, because you saw that in 2007. 2011 was my turn. I was at the ground when Dhoni hit that final 6 and it came towards us, and you know, getting those goosebumps as we speak as well. And Captain Rohit Sharma, I love him, you know, and I've had the privilege of meeting him a few times as well. So down to earth. I love the steps. I'm going to ask him the next time around about those steps, because that was quite something. And take a look at Sky. You know, Sky is not leaving anything undone. I think he's got the dole in the hand, and I think he's going for it.
I think Sky will have everything in his hand. After the catch that he took, I think there is nothing that is leaving Sky's hand as well. So what we'll do is we'll, quickly leave you on the show of Chartbusters.
I think Mangala wants to do that.
No, I think you should also do that.
Yeah.
But both of us will do that. And, suddenly, magically, I think the cup will appear here and we'll have Rohit Sharma as well. But more on all of that later. Both of us are extremely excited for this evening. Congratulations once again to Team India. And actually, if we may just get in cut in from visuals coming in from the Prime Minister and the team meeting. What do you want to do?
But I think
we perhaps are not. So what we'll do is we'll leave you. We'll just leave you on a dance-off, both Nigel and me. Thank you so much for watching this edition of Chartbusters.
Be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth, and the biofilm contains bacteria, especially bacteria like strep mutans, which is what causes cavities. So, and of course, gum disease has different bacteria, but there is a whole bacterial biofilm that happens in the teeth. So if you don't remove that biofilm, then the bacteria will remain there and they will act on the gums and of course on the teeth. And so the gum disease and the dental caries both will be a factor if you don't remove the biofilm. So it's extremely important, especially at night, because when you've just eaten and then you go to sleep and it has time to act.
Is it more of a rural problem? Is it also as prevalent in the urban population?
So I would assume, looking at the stats, that the rural problem would be slightly more because also availability of toothbrushes, toothpastes, and other oral health aids is much less than in the urban areas. But awareness, and as Sunil said, awareness and knowledge has to be imparted so that people will be more, able to do what they have to do.
Offences against Rafah since the 6th of May, over 1 million people have been displaced once again, desperately seeking shelter and safety.
Good morning. Welcome to Trading Hour. I'm Reema Tendulkar. With me is Surbhi Upadhyay, and some momentum has faded for the markets at 11 o'clock. We started off with a high, the Nifty crossing 24,400, the Sensex climbing above 80,300. We're holding up in the green, but we've come off from the highs in the last 30 minutes. ICICI Bank and Infosys have nearly contributed about 50 points to that Nifty up move. Pull up that contribution plate and you will see it's ICICI Bank, Reliance Industries, ITC, Infosys. These are some of the stocks pulling us up higher, but we're weighed down by HDFC Bank. HDFC Bank is the big culprit today. It's down 2% today, but week to date, it still has a gain of close to about 3%. And to me, I can't take my eyes off these defense stocks, right? Day after day, eye-popping rally. So today, Mazgaon Dock Shipbuilders is up 5%, and the stock has crossed 1 lakh crore in terms of market capitalization. Garden Reach Shipbuilders is 100% up in the last 1 month. So they anyway rallied in the first 6 months in anticipation of the election verdict. And even after that's come through in the last 1 month, it's a 97% up move. Cochin Shipyard is up 45% in the last one move. And just last 1 month, I'm sorry. And just as an important update, US markets, remember, are shut today. So perhaps even Europe could trade a bit subdued in terms of volumes.
Well, as I say, hindsight is perfect 50-50, right? 6 on 6. I mean, the election verdict day, these stocks were collapsing and one was wondering whether this is the end of the whole PSU party, the end of, defense as a theme. But in hindsight, that ended up being a great buying opportunity. But anyway, for the market, it's there is a cool-off, but that's not before the Nifty reached another milestone, 24,400. The cool-off is happening largely because of banks, and it's not only HDFC Bank. That one started the day negative, giving off some of the momentum from yesterday. But now a lot of the other banks, look at Axis, IndusInd, State Bank of India, barring ICICI Bank, the short point is that all other frontline banks are not doing well. Pull up the bank Nifty, and that will kind of complete the picture. There's ICICI on one side and everybody else on the other, and that explains the kind of sell-off that we're getting on the screen as of now. Aside of that, a couple of other stocks like Bajaj Finance, that's interesting. The update was great in terms of the AUM growth, which is 31%. But again, not much momentum on some of these high flyers from the financial space today. So let's keep our eye out on it. But then, as Rima pointed out, it's IT that's really fighting for the bulls. And let's see if that can stay intact. Also, Reliance, by the way, Reliance was an underperformer yesterday. Right now, for what it's worth, it's on the upside with about a 0.5% gain. So IT and Reliance are the big fighters for the bulls. Now, let's get you some more perspective on the market. Just a month back, the market saw a massive crash. That was exactly the 4th of June. That was the counting day, remember? And we've come a long way since then. Hormaz is standing by with a quick snapshot of what we've seen in the last 1 month. Hormaz, 1 month can be a very long time and a time that the bulls have celebrated.
The bulls have celebrated, and how? And it was this day, the 4th of June, when the day the Lok Sabha election results were declared. And who would have thought that from almost slipping below the 21,000 mark that day, the Nifty would be making record highs every single day a month later. Now, here's how the market has looked a month from that day, which is the 4th of June. Now, the Nifty made a low of 21,281 that day. Now, it is up 3,000 points from those levels as of closing of yesterday. Now, the bigger performer, though, has been the Nifty Bank. Now, with a 7,000 point rally, as you can see here, from levels of almost sub 46,000, making highs of around 53,000. Now, let's take a look at this in a more broader context, now in percentage terms. Now, the Nifty is up 11% in the last 1 month. The Nifty Bank is up 13%. Now, this I'm talking about closing levels of the 4th of June to closing levels on Wednesday, which is the 3rd of July. Now, remember, the broader markets had a bigger fall that day, and with both the mid-cap and the small-cap indices declining 8% and more, but the rebound has been equally fast. The mid-cap index is up 14%, the small-cap index even better, now over 19% from the lows of June the 4th. Now, let's focus on the indices individually. The Nifty up 11% in the last month, 49 out of the 50 stocks gaining, 24 stocks gaining over 10%, and 4 stocks gaining even between 20 to 25% during this period. Now, Shriram Finance, the latest Nifty entrant, is the top performer here. Now, Wipro here comes second, and the recovery in IT stocks is evident, as 5 out of the top 10 gainers on the Nifty in the last 1 month are IT stocks. Now, but which is the one stock that has given negative returns in the last month on the Nifty? And that is India's largest passenger car maker, Maruti Suzuki. Well, the losses aren't significant, but are losses nonetheless. Now, HUL, Britannia, Bajaj Auto are some of the other underperformers, and by that I mean they have not seen significant gains like the 20-30% kinds during this period. Now, on to the mid-cap index then. 95 out of the 100 stocks gaining, 25 gaining over 20%, and 63 stocks seeing at least double-digit returns. Now, at least 10% or higher. Now, the top performers here, well, unsurprisingly, it's Masgao Dock. You just spoke about that, and what a move the stock has had. 75% in the last 1 month, crossing a 1 lakh crore in market cap, and multiple news points here. Now, fact, moving in line with the fertilizer theme in general. Dixon Technologies also making one new high after another, and Oracle Financial, which has moved higher after some positive news flow for its parent company in the US. Now, the underperformers here in the broader markets, BSC, now after a dream run that the stock has seen, the stock is seeing some bit of sideways move, some negative news flow coming in there as well, and HPCL too, after the run that it has had, seems to be taking a bit of a pause. Now, on to the small caps. Now, here too, it's a 99 out of 100. The stocks that have returned positively, 44 have gained over 20%, and 77 of them have seen at least double-digit returns. Now, Amara Raja is the top performer here. Now, is that even a surprise considering the moves that we have seen in these battery names? Titagar too has been a multi-bagger in recent times. Now, in fact, among mid-caps, it was fact among the mid-cap stocks and Chambal among the small caps within the fertilizer theme have emerged as the top performers. Now, the only negative small cap stock here, it's Ujjivan Small Finance Bank, which is down around 2.5%, and IRB, Blue Star are some of the other performers. But there is a pocket of the market which is yet to recover their losses, and there are select PSUs. Now, the PSE index made a high of 11,353 on the 3rd of June, which was the exit polls reaction day, and is still ended around 500 points away from those levels on Wednesday. Now, take a look at these. The stocks that will come up on your screen, these are the top 5 movers on the PSE index since the 4th of June, and barring Oil India and HAL, the others are yet to recover their losses. REC and PFC, the high-flying PSUs which fell over 25% that day, are still below the highs of the 3rd of June, and that has been the market in the last 1 month so far. The color is overwhelmingly green, and investors continue to hope for monsoon clouds to hit the city, but they would surely hope for the sun to keep shining in their portfolios for sure.
Very well put. Thank you very much for that. All those data points. Earlier today, we had a chat with Ramdev Agrawal, Chairman, co-founder of Motilal Oswal Financial Services. Listen in to what he had to say about the Indian markets.
Year after year, for 44 years, I have seen this market growing at, I didn't know that it is 16%, I thought it is 15%. This is a 15% country. India is a 15% country. So, I have seen, I mean, like every 5 years it doubles, like from 40,000 to 80,000 it has become in 5 years, exact. So, it's about 15%, and longer term is also 15-16%. So, there is no reason to believe that going forward it will be anything significantly different. It might become 14, it might become 16. So if you go at 15, I mean, let's keep the base at 15. In 5 years flat, 2029, you will be 1,60,000. Retail, which is, see, in 1.4 billion people, at least we should have 500 million people in the market. We still have only 160 billion or 100 billion. So this journey of inclusive development of the markets, because the risk capital is going to come from not from the top end of the population. Risk capital will come in a truly distributed way from across the country, and that is the revolution which is on. We are seeing a lot of supplies coming in from existing promoters and FIs. FIs have been supplying for last 1.5 to 2 years. Now they also seem to be tired. Now it is all for the new companies which are not listed. So 100% owned unlisted company, they are coming with the IPO. Almost every day there is 1 or 2 IPOs. I think it will be a record year of maybe 200 IPOs or at least 160, 170 IPOs. Almost every other day you will close 1 IPO, and there is no season in the sense that entire 365 days it is open.
All right, that was Ramdev Agrawal. You'll catch more snippets from that really interesting conversation all through the day. But for now, we do have to take a break. Coming back with the latest buzz from the commodity universe.
18.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community.
Welcome back. You're with us on Trading Hour. And before we talk commodities, let's talk cricket. The excitement is really palpable. And right now it is Delhi greeting the boys in blue. Those are some visuals. The team left the hotel just a little while earlier. They were staying at ITC Moria. And they have been on their way to meet the Prime Minister. And of course, you can see the excitement on the streets as well. Those are, of course, the champions returning home. The schedule obviously is that they go ahead and meet and greet with the Prime Minister, and then they are to fly to Mumbai with that big event lined up in the evening, the Open Bus Champions Parade. So there you see a lot of excitement, of course, around the grand reception and the welcome back. Okay, obviously the cheers and the excitement really out there to see. Well, we'll keep getting you snippets as and when we get more footage, more coverage, and of course we're live here in Mumbai as well when the boys arrive. And of course we'll keep you updated. For now, commodities as promised, and apart from Team India, what else is shining bright? I think it's the metal space. So let's ask Manisha more about it. Manisha.
Well, yes, cricket is one part of it, but in commodities as well, we have seen excitement come back in case of metal prices. The month of June was not so great, but July definitely has brought cheer around, and that is because there is decline in the US dollar index and the treasury yields, and that in turn definitely seems to be supporting many of those commodities. On your screens is the overnight gains that we've seen for many of them. So silver prices have gained up by 3%. Today actually is the 6th straight day that we have seen gains come in for the prices. And if you look at the month of July until now, I mean, we had four days alive there, and we have seen prices gain up by almost 4.5%. Copper as one is trading at 1-month highs. It's 2.5% of gains onto that one overnight. The Chinese inventories have declined to nearly 1-month lows, and that clearly has been supportive. Third week of decline, by the way, coming in for the decline in copper inventories. Iron ore prices also are trading at a 1-month highs. The markets are anticipating better demand going forward. We also are looking at steel prices. I mean, these have been major laggards really when it comes to ferrous metals. The first quarter actually saw steel prices also decline to a 7-year low at one point in time. But we are looking at strong gains come back for this one as well. And gold on your screens is back above $2,350 an ounce. It is a 1-month highs. It's trading at a 3-week highs in the Indian markets as well. And we have seen more than a percentage point of a gain coming in the overnight markets for that one as well. Well, you have seen strength come back because it is a high probability right now that you could be looking at the first rate cut coming in the month of September and a second one in December. That seems to be supportive. It also has to do with the kind of data that we have seen from US. So whether it has been about ISM services that has been contracting the most since 4 years. Also, when you look at the manufacturing numbers, those have declined. The US jobless claims have gained for a 9th straight week. And the kind of testimony or speech that we saw coming from Powell has been dovish at best and suggesting that there could be a rate hike. Inflation seems to be declining, and we are looking at improvement in outlook from Chinese demand as well. The Chinese plenary meeting happens in the month of July, which will set policy for the years to come. And the expectation is that there will be support for infrastructure, housing, property as a sector, and that would mean more demand coming in for metals there. Well, apart from all of that, and before that, you have the US non-farm payroll data that comes in on Friday. So data heavy week and month, and there is support in the meanwhile for metals.
Thank you very much for that. That's the big story. Get into a break. On the other side, we'll talk corporates. We'll be joined by Debanjan Kumar, CEO of IDTC, the digital commerce division of Intellect Design, about a new platform that they've launched, and they're targeting government's public procurement space. So we'll discuss this in greater detail on the other side.
Young Turks at 21. Only on CNBC TV18 and CNBCTV18.com.
The general assumption is that the government will continue with its infrastructure thrust, its capex, the government capex that's going on, and there will be an increase in the outlays over there, but not like what we've seen in the last few years, which was at the expense of boosting consumption. It's more like a muted expectations from the budget that this will be more of the same, no major dramatic change. So therefore, if in the budget we do indeed get some dramatic announcements, some really visionary statements, although then obviously there'll be question marks on the execution, implementation, etc. But as of now, it's not seen as a very big game-changing event for the earnings outlook in the next 1 or 2 years.
It appears to be some 382% jump in sanction and some 67% jump in disbursement. But disbursement and sanctions by and large used to be in the range of 50% plus percentage. So, and if you see the sector, in general, sector growth is there, but yes, we are always a little higher than the sectoral growth because of our strength in our core competency.
CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube.
Welcome back. We're weighed down by the financial space. So the Nifty banking index is down 200 points. The culprit there is HDFC Bank. But even something like a Bajaj Finance, where the numbers look good, their AUM growth was 31%. The new loan growth was 10% on a year-on-year basis. Eye-popping numbers. And for the first time, the new loans had crossed that 1 crore mark. Remember, RBI had also lifted the restrictions in the month of May, 2nd of May, so issuance of EMI cards was allowed. So that aided the business momentum. But look at the way the stock is reacting. In the last 1 month, it's already rallied 10%. But despite a seemingly good Q1 update, today you are seeing pressure on the stock. Bandhan Bank is another one, which is down close to about 1.5%. It was about a 22% kind of an advances and deposits growth. But Nomura has come out with a note and they have a reduced call on Bandhan Bank. Their target price is 170. They acknowledge that loan growth has picked up and it's fine, but the CASA has declined for Bandhan Bank. So that's one of the reasons why they are a bit, subdued. Other than that, it's, Gujarat Gas, where there is an update coming through in terms of brokerage notes. Remember, yesterday there was news about the price hike taken. They've hiked the industrial gas prices that came in the second half of yesterday's trading session. But Citi has a sell call on the stock. they're saying that volumes may get impacted because of the price hike. So they're a bit concerned on the margin front. So that's about Gujarat Gas. But other than that, the Nifty is holding on. Markets are holding on to all their gains. And once again, it's IT fighting for the bulls. It was all about IT in the first half of the trading week. Yesterday, IT took a bit of a pause. But once again, the Nifty IT index today is up 1.6%, holding the markets up. In fact, that gives me my cue to invite Intellect Design Arena. So their new line of business is called Intellect Digital Technology, IDTC, which is particularly for commerce. And this IDTC has launched a new product called IGPX, which is a public procurement platform. This platform that they've launched aims to transform public procurement globally. To talk more about it, we are joined by Debanjan Kumar, CEO of IDTC, which is the digital commerce division of Intellect Design Arena on this new platform. Debanjan, thank you very much for joining in. First, if you could just briefly explain this new product that you've launched. What exactly is public procurement for the government? How big is the market? And what is the role that your platform is going to be playing?
Thank you very much. Thanks for having me here. So as you understand, Intellect, our bedrock is innovation through first principle thinking. So what we did is last year we launched eMAG.ai, our open finance platform, which is the most comprehensive and large financial platform, open finance platform. So what we did this year is that we studied the commerce landscape, and we saw a lot of similarities between the finance and the commerce landscape. So we decided to expand, our eMAG.ai platform to the commerce landscape. So that was the first inspiration we took while launching this GPX product. The second inspiration we took from is our experience of running GEM, which is one of the largest public marketplaces in the world for the last 6 years. So when we took over GEM in 2017, the procurement through the platform was around 4,000 crores. And when we left, the contract ended, in December of last year, we surpassed 4 lakh crores. So we completely transformed public procurement in India through the GEM platform. So what we decided is to take this, both the domain and technology skills, to the global countries. And what we did for GEM is what we want to replicate for the other countries. So the market, as you asked me, is pretty huge. As per World Bank estimates, public procurement today varies anywhere between 12 to 20% of the world GDP. And current estimates are around $13 trillion US dollars. Now, if you look at the wastage, which also the estimate is that the wastage in public procurement is as high as 25%. So we are looking at, a 1 trillion to a 4 trillion kind of number out here. So we feel the headroom is pretty high to go and kind of transform this space. So that's how we have launched IGPX with this inspiration of transforming public procurement in the globe.
Any early estimates of what this might mean in terms of a revenue potential for you? You've given us the market size, about $13 trillion, which includes a significant wastage. But for Intellect Design Arena, what is the revenue number we're looking at?
So, ma'am, right now, we are in the silent period. Our results are due to be published very soon. But I think we are very bullish about this product, and we are already started discussing with certain clients. So once I think our silent period is over, I can share more with you on the number side.
And this is, you'll be only catering to the governments, right? There is no private client of yours, private customer, for whom you'll be working. Debanjan, can you hear me? Okay, I think, okay, there seems to be a bit of a connection issue, but that's Intellect Design Arena. Hard to give numbers ahead of, given the company is in a silent period. But according to the company, this public procurement platform has immense potential given how large the market itself is. And they will be largely catering to the governments in India, governments in the APAC region, is what, Intellect Design Arena is looking. But remember, this is going to be a part of one of their 4 verticals. The company has 4 verticals. In one of the verticals, which is the digital commerce vertical, the company has launched a new product. Other than that, here's what we'll do. We'll slip into a very short break. We'll come back and try and reconnect with Intellect Design Arena.
48% is being given by domestic contributor, 52% comes through from export. I would like the ratio by and large, will remain same, but I wish, as far as the domestic is concerned, it tilts, towards domestic. I'll be happy if domestic is 53, 54, 55, and as far as the exports are concerned, that is, 45, 50 or whatever it is. So we do around 45% in chronic and 55% in acute. Obviously, as far as chronic is concerned, the margins are better, and company will keep on, focusing on that.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Hello and welcome to this very special edition of Newsmaker. There can't be a bigger newsmaker than Nandan Nilekani. It was he who made digitalization a public good in India with the father of Aadhaar, can I call you, without making you feel too old? Well, the reason why it is very important to hear out Nandan Nilekani now is that there is a new phenomenon in artificial intelligence, and a lot of people out there are looking out to you to check out, is it a constructive force? Is it a difficult force? Disruptive force? So that's really the first question. And I'm going to quote your previous speech where you said India wants artificial intelligence applications that benefit all citizens. It is not competing for large language models, but the Indian path is that we want to we are here to make a difference, and our aim is to give this technology in the hands of people. You seem to be a man with a plan. What's in your mind?
Yeah, so I think India has benefited hugely from digital public infrastructure, or DPI, and Aadhaar, UPI, and all these things have transformed the way we live. We believe AI has similar transformation possibilities. AI is a very powerful technology, but it's a technology like anything else. And we have to use it appropriately, safely, with the appropriate guardrails. And if we do that and apply it at population scale, then we can make even bigger impact on people. So we call this DPI to the power of AI. We sort of take DPI to the next level with AI. And we have a number of things on that front which are happening. So yes, there is a plan, and our view is that technology is only as good as its use. And we also believe that large language models will be commodities. There are going to be many of them. Every day there's a new announcement. There are many people spending money building these models. It's not the models, it's how do we apply them to make a difference. And that's where India's focus, I believe, should be.
Yeah, I mean, absolutely. After UPI and the big splash it has made, around the corner, everyone is looking to you, whether it'll be ONDC, account aggregators, and now AI. But before I come to that, you need to clarify the fear that people have of AI as well. Yeah. Do you fear that before it becomes a constructive force, it may take away some jobs?
Well, I think there are many fears about AI, founded or unfounded. One is, of course, that AI will hugely automate and reduce jobs. Now, that's a fear we should take into account, because anytime a new technology comes, some jobs will go, but new jobs will come. And there'll be a period when maybe the job loss will be more than the job gain. But fundamentally, I think in India, we have to think of it differently. If we can use AI to amplify services to people, if people can get better education, better healthcare, better farming knowledge, then actually it has a very positive impact. So if farmers know more about how to farm, they'll do a better job and so on. So I think if we think of AI as amplifying human potential and applied that way, I don't think we should be that worried about AI.
I'll tell you where the worry got a little substance. For the first time in my coverage of IT companies, if you just took the top 5 companies in the Nifty, the aggregate numbers they hired was negative 62,000. Until now, we have seen slower growth, but it was always growth. A reduction in the workforce of the top 5 by 62,000 is a bit of a scare.
Yeah, but I think we have to also look at what are the factors. I don't think it's AI so much as you know that in general over the last couple of years there has been a reduction in discretionary spending of client companies.
Is that not related to AI?
No. I don't think so at all. I think AI's impact on the enterprise is very low at this stage. It's still many years away from penetrating. So, I think
to explain the 62,000?
It's a cyclical thing, not a secular thing of AI.
It's because of uncertainty in the...
In general, companies are spending less on discretionary things and stuff like that.
But is there a worry that, this is a little away from AI, that Indian IT is losing to the GCCs? Because we are seeing global captive centers not let up at all.
No, I think there's going to be a market for everyone.
Okay, so that's not the big fear. And do you see the end of this uncertainty? Do you see people, are you just getting a sense of...
No, I think everybody is waiting, and as we have seen in many conferences, there's so many things in play that we can't really know we can't exactly predict what's going to happen.
Okay, to come back to AI, you said many applications. Are you already onboarded on anything by the government or by yourself?
Yeah, so I'll give you a couple of examples. One is in the area of Indian language. I think India particularly will benefit from AI in language because we have 22 official languages and several hundred languages that we use, some only dialects and so on. So there's a lot of work going on. There's a government program called Bhashini, which is there. And from my side, I've supported a group at IIT Madras. My family has supported a group at IIT Madras called AI for Bharat, which is building open source tools under the Bhashini framework in 22 Indian languages and making that available as a public good. So that is an example of AI as a digital public good. So idea being that if you have the data and models for Indian languages, then anyone can use that in their applications, be it a government application or even a private application. So one way of thinking of AI is, can there be a digital public good of AI? And Indian language, because it's non-competitive, everybody can use it. Yes. So that's one example of AI as a digital public good.
Can you give more examples? That's exactly the conversation I want.
So that is one category, which is building open source, open data models for different users and people can use. The second example is applying these things in education. So there are many experiments going on right now on applying AI to improve learning capabilities. Many states are looking at using AI on top of, again, existing digital infrastructure we have to improve children's ability to read or write or learn basic maths. So basic learning can also, we believe, be enhanced by AI, because its ability to figure out a reason, what are the gaps in what you know or don't know, and then address those gaps through practice can make a difference. So we think there's a role for AI in education. Third example is, the government is using AI very well. I mean, in the PM Kisan project, there's a bot which actually helps farmers to figure out whether, what are they eligible for and so on. That's actually live as this moment. You can talk to the government agriculture ministry on that. And they have actually using AI in Indian languages to help farmers answer questions, whether they receive the money, what are the eligibility rules, and they're getting thousands of queries. So we're actually seeing live examples of AI being used.
Will all this mean more work for infotech companies?
Well, many of these things are being done either by the government or by philanthropists. So it's not clear whether it's a business opportunity so much. I mean, they will be, but I'm saying in this case.
But at the moment, it's a public good.
Yeah.
That you're referring.
So I think, AI, there are three things. One is AI as a digital public good, which is Bhashini AI for Bharat. AI usage, using DPI infrastructure, which is in education and even in agriculture. And third is infrastructure to collect data at scale. Because ultimately in AI, it's the data that matters, not the models. The models, there'll be a dime a dozen. Now, most of the data which is used in the internet is internet scraped data in English.
Yes.
Now, what we need is our data to our situation. So one of the things that, for example, the AI for Bharat has built, they have built tools to collect Indian data or any local data.
Yeah.
So then we need tools to collect data at scale. So that's the third part. So you can have AI as a digital public good. You can have AI infrastructure to create data for AI. And you can apply AI along with existing DPIs to amplify education or health and so on.
Fair point. But what about the big fear that we hear in the West about biases? For instance, loans are not given to, for instance, blacks because you use AI on existing data. Generative AI is learning the bias.
Yeah,
Is
so
that also a problem?
No. It's all about training it properly, training it with the right data, using curated data for training the models, using different techniques for ensuring the answers are correct. It's really about creating boundary conditions. If you go and scrape data off the internet and build your models, then the biases of the internet will come in the thing. So you have to do a bit of work to reduce bias and hallucinations and so on. So these are not open-ended kind of AI. They have bounded data which is on a specific, for example, if it's about farmers, they'll process thousands of questions which have been vetted by somebody, so that the answers remain within that boundary.
Okay. Do you see it coming into finance in any way?
Oh, yeah.
Insurance, loan giving,
No,
credit?
I think
Generative AI?
credit assessment and all that, there'll be a big role for AI, whether generative or general AI. And AI will also come, for example, in NPCI and UPI, in that, they have the UPI for feature phones, Hello UPI.
Yes.
There they're using Indian language spoken command. So you can give a command and ask someone to transfer money to somebody else in Hindi or Tamil or whatever. So that's an example of extending the reach of payments into Indian languages spoken to the computer.
Okay. We have arrived on the global economic stage.
And what a great way to celebrate our own 25th year, with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today. Sensex and Nifty hit a record high.
The Nifty rallying to a record high. We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we're looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly,
Welcome back. It's celebration time out here in India because the world champion team India is celebrating. They're celebrating, they're dancing, surrounded by hundreds of supporters who've come. They've had a rousing welcome in Delhi, and soon they will make their way to India also, make their way to Mumbai also, where we can't wait. But that's the captain of the winning team, Rohit Sharma, dancing. The excitement is in the air. Remember, the Indian team touched down in New Delhi early this morning. They were given a rousing reception in Delhi. They will soon meet, the Prime Minister Narendra Modi for felicitation. Then they make their way to Mumbai, where there will be an open bus victory parade that will go through Marine Drive and conclude at Wankhede Stadium 5 to 7. And those are visuals of the entire team. Excitement in the air. All right, let's move on and get back to the markets. Urmesh Sharma of HDFC Securities is now with us on the show now. Thank you very much, Urmesh, for joining in. Wanted to get your thoughts in on, banks first. Bajaj Finance, for instance. The Q1 updates look very good, but the stock is sulking today. It's down 1.5%. And on HDFC Bank too, we had a 3-4 day kind of rally, but it's fizzled out. Do you think that's it now, momentarily, at least in the near term? What have you made of the kind of price action post the news?
Yeah, so look, HDFC Bank is my parent bank, so I can't talk much about it. Stock-specific discussions, a little bit of compliance issues around that. But what I can tell is the fact that I think the key items which are being watched out by the market on the large financials is one is that there is definitely a valuation gap which is there, which makes them quite compelling. At the same point in time, what's happening is that this larger theme is playing out, which is that there is really price discovery happening only in the large caps because the FPIs can actually sell and leave the market, right? So while on the small and mid cap, I think there is a lot of domestic participation with that liquidity trapped within India. So that's the other thing. And then within that, there are individual factors which are technical. For example, foreign ownership, as a result of which there is speculation on whether something gets included in indices, global indices or not. So if you leave all that out, so technical matters out, fundamentally, I think people are looking at one, growth. The second is, and this is speaking from 2 or 3 cumulatively together, including Bajaj Finances, what is the quality of that growth? because how much of it is coming from cross-sell to existing credit people whom they've given loans to, and how much of it is new. On top of that is the mix, because there is definitely concern that there could be, if there is any credit event, then that is likely to be at the unsecured end. So if you put all this together at this point in time, I think what's happened is that apart from the technical factors of inclusion indices and whatnot, I think, and what FPIs are doing, I think the general point is to look out for the, what is the trend in cost of funds and actually where the growth is coming from, and what is the quality of that growth.
Okay, so let's expand on that. Unmesh, hi, good to have you on the show as always. I guess the technical factor is just one part of it, right? And that'll play out.
Yeah.
But the bigger issue is that will earnings finally start firing up? Are most of the merger shenanigans behind us now? And let me expand the question. I mean, not just HDFC Bank, and we're running into the next quarter numbers as well. Where do you expect pleasant surprises when it comes to banking?
Look, I think at this moment in time, while there are some concerns about what's happening on the credit cycle on the unsecured side, as well as, if you look out, if you look at the growth in some of the NBFCs as well as the small banks, there is this concern which has started to come about. But what's happening is that if you look at the commentary which we are expecting from this quarter, see, backward looking numbers not going to impact that much because a lot of operating updates are out there. Plus, these the financial companies are also very well understood as far as the data is concerned. I think what will happen is that the market is not going to, given the flows in the market, it's not going to react till the bad news actually hits. And what I mean to say by that is that at this point in time, while it's good to keep a close eye on the credit cycle, I think what will happen is that the high quality banks which have what I would say is the outside the top tier of the banks, as well as the NBFCs, will not report any of these numbers and will not be reporting those to come in the next one or two quarters. As a result of which, we expect that there should be some buoyancy as far as the market chasing growth is concerned. So, if you look at banks like Federal Bank, for example, which is there in our model portfolio, or some of these, maybe a little bit of the rural theme playing out, or the housing finance names coming through. I think that's what we are expecting to see in this.
Has IT bottomed out, at least in terms of earnings? Do you think this quarter marks the end of any kind of earnings downgrades and things only pick up? And what's your own expectation? Are we likely to see some pickup in growth in the second half of the year, or realistically it's an FY26 growth story?
Yeah, so the answer to all three questions is a resounding yes. Our analysts Apuv and Amit have written a note which came out last night, where they are talking about this. Now, honestly, I'm slightly old school, so I was quite skeptical and kind of questioning whether, this is going to, whether this is actually going to happen. Now, what we are saying in the note is that if you look at amongst the large caps, for example, TCS, and amongst the mid caps, Persistent, for example, which are our top picks in the note as well, what we are saying is three things, and all three of them are positive. One is the fact that the market is now trying to discount stories even if they are 1 or 2 quarters out. So, while yes, we will see the turnaround happen in the second half of the year, maybe even in the fourth quarter, what will start happening is that the market will start discounting that, and to some extent that discounting has started. Within that, some will move faster than others, and clearly in a cycle of upgrade on earnings, you always see the upgrade as a percentage, and hence the impact being larger on the tier 2 names as compared to the tier 1's names. So, and that's how they are positioning as well. And I think that the answer is that Street is moving in the direction of assuming that what happened last quarter, which is the fourth quarter of last financial year, and what will happen in this first quarter will basically mark the end of the downgrade cycle, as a result of which, earnings multiples have started to move up, but we expect that this theme could continue through the rest of the year.
Okay, all right, got it. Unmesh, we'll have to leave it on that note for today, out of time, but we look forward to a longer chat next time around. Thanks for joining in. That's a view from HDFC Securities coming through. We do have to take a very quick break. On that note, we'll come back with more on the markets.
On the global economic stage.
And what a great way to celebrate our own 25th year, with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today. Sensex and Nifty hit a record high.
The Nifty rallying to a record high. We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter-century of excellence.
It's coming on the back of a period of hikes which was unprecedented, facing shocks that I tried to describe yesterday over dinner, and followed by a period during which we held rates untouched, and during which we were restrictive enough to actually see our medium-term target reach that 2%, which is our objective. And most recently, we have seen in our round of projections, which are really important, September, December, March, and June, we've seen that 2% target with an oscillation of 0.1 about it at the last quarter of 2025.
Dr. Sanin, you know, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness? Or do you think it's also a cultural issue where, you know, one of the statistics that or reports that I was reading indicated that we just don't feel the need to brush more than once a day?
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning, to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth, and the biofilm contains bacteria.
Welcome back. Well, before we sign out, just a quick update on the screen. Still about 40 points higher on the Nifty. So it's not too bad. And it's actually IT and ICICI Bank. These are the two big pillars on which this gain is right now resting. Let's see. Bank Nifty trying to, I think, recover from the lows, but we'll have to wait and watch.
Well, State Bank of India is also trying, right? Yeah. It's back in the green now. So that's one of the few, banking stocks where at least there is some green in recovery. Well, folks, but we're out of time completely on the show. Thank you very much for watching.
Especially bacteria like strep mutans, which is what causes cavities. So, and of course, gum disease has different bacteria, but there is a whole bacterial biofilm that happens in the teeth. So if you don't remove that biofilm, then the bacteria will remain there and they will act on the gums and of course on the teeth. And so the gum disease and the dental caries both will be a factor if you don't remove the biofilm. So it's extremely important, especially at night, because when you've just eaten and then you go to sleep and it has time to act.
Is it more of a rural problem? Is it also as prevalent in the urban population?
So I would assume, looking at the stats, that the rural problem would be slightly more because also availability of toothbrushes, toothpastes, and other oral health aids is much less than in the urban areas. But awareness, and as Sunil said, awareness and knowledge has to be imparted so that people will be more, able to do what they have to do.
Israeli offences against Rafah since the 6th of May, over 1 million people have been displaced once again, desperately seeking shelter and safety.
Stocks continue to grind higher. IT and auto are the key drivers, even as financials and consumer durables drag.
Bajaj Finance closed 1 crore new loans in the first quarter, its highest quarterly run rate ever. The feat comes on the back of its highest first quarter ever over quarter in 8 years. Deposits too see a strong show.
ITD cementation slumps after its foreign promoter says it is exploring divestment of its stake, but Kaya rallies on inking an exclusive sales and marketing deal with group company Marico.
Veteran investor Ramdev Agarwal says India should have a minister of capital markets to ensure we don't have any regulations that make equity investing unattractive in India's decade. He also calls for raising the taxable income limit to boost consumption.
And the party continues for the T20 Cricket World Champions as Team India lands in Delhi and will meet the Prime Minister shortly. They are also scheduled to hold an open bus parade in Mumbai later this evening.
You're watching us here on Halftime Report. It's a good-looking screen. The Nifty has hit yet another record high. In absence of the Nifty Bank today, the tug-of-war between the IT Index and the Nifty Bank continues. Today, IT Index takes a baton. I'm Mangalam Malu, with me Sonal Bhutra. Hi Sonal, the frontline indices muted. The broader markets is where all the action is.
There is a lot of action in the broader markets. You know, even though the advanced decline is, the gap is not so much, but still we are seeing those big moves come in some of these stocks. You spoke about Nifty IT definitely doing really well. But from the broader market, some of these names, Inox Wind, for instance, is up 14% on the back of that news update that they will be infusing some funds in the company, which will make it debt-free very soon. Greaves Cotton is making an up move, up 8% right now. Cochin Shipyard, it's crossed that 1 lakh crore market cap. That's Mazagon Dock, but Cochin Shipyard is the other company or a peer which is doing really well. That's up 7.5%. So across the board, we are seeing big gains come by. and some of them is without any fundamental backing for now. There's no news flow, but the uptick continues, and that is something we'll be discussing. And Inox Wind, something we'll be discussing in greater detail with the management today.
Absolutely. We'll take a lot of these stocks which will be on our radar this afternoon. Actually, as we speak, First Source has moved higher. A lot of these mid-cap IT names are moving a little higher than the frontline end, which is actually picked up ahead of the result season. AB Fashion and Retail is another stock which I'm looking at, and Tata Chemicals from the broader markets has spiked to the high point of trade. These are the F&O stocks, but a lot of these cash stocks also seeing a lot of action. So we have NIIT Limited, which has moved with a gain of almost 8%. Shalimar Paints is the other one, which is up 9% this week, up 11%. Remember, over the weekend we got the news that the managing director of Shalimar Paints has tendered his resignation. So change of guard, change of management is something that the street is looking at in this counter. Lupin is the stock which is among the bigger gainers today after brokerage Kotak double upgraded the stock to add from sell. Sudarshan joins in with the rationale and details. Sudarshan.
Yes, so Lupin is one of the top mid-cap gainers. It's up almost 5% after Kotak Institutional Equities has double upgraded the stock to add from sell, and target is raised to 1805 from rupees 1400 per share. And this is on the back of its expectations of Lupin surprising positively in US sales in FY 25-26. It expects 12% growth in US sales in FY 25 and 11% in FY 26. And the reasons for strong US sales growth are Spiriva and Albuterol will remain critical with a combined US sales contribution of $216 and $188 million in FY 25 and 26 respectively. It does not expect any generic competition for company in Spiriva at least till H1 FY 27. And two products that will be key to driving US sales are Mirvetrek and Tolvaptan. It believes potential upside for Tolvaptan is being underappreciated in estimates, and with $1.2 billion US sales reported by Otsuka as of CY23, Lupin's 180 days sole exclusivity from April 2025 from Tolvaptan in FY26 will be much above street's estimates. And even post the exclusivity, it expects Tolvaptan to remain a relatively low competitive product. Factoring all this, it has raised FY 26-27 EPS estimates by 3 to 16% and see EBITDA margin expanding by 370 bips over FY 24-26.
Okay, all right. Thank you so much, Sudarshan, for joining us with all those details. So Lupin is up by 5% on the back of that upgrade. Let's now focus on Bajaj Finance. They've clocked 1 crore new loans in Q1, its highest quarterly run rate ever. Abhishek Kothari is here with more details.
Well, the pre-quarter numbers that Bajaj Finance has given, it shows that it's a strong quarter for them with respect to business that they have clocked in Q1. They have given the highest new loans ever in a quarter, that is above the 1 crore level. So new loans are at about 1.1 crore, which is up 10.4% YOY and about 39.4% sequentially. So the sequential growth of 39.4% in Q1 or any Q1 is the highest in last 8 years that they have clocked. Cross-sell rate has improved to 7.38 versus 5.55% in the previous quarter. However, cross-sell rate has declined on a YOY basis. Last year in the same quarter, it was about 8.4%. Customer base growth has remained strong. It is now at 8.8 crore, which is up 20.7% YOY and about 5.3% sequentially. Now, they had given an estimate of loan growth being at 26 to 28% for FY25. However, this time around, the loan growth has been pretty healthy at 31% YOY and about 7% sequentially. Deposit momentum has remained healthy, growing at 25.5% YOY and about 4.3% sequentially. Liquidity in the balance sheet remains healthy. Overall liquidity in the balance sheet is about 16,200 crore, which is up 27.5% YOY and about 3.2% sequentially. And this liquidity forms about 4.6% of the overall AUM. Back to you.
Okay, all right. Thank you, Abhishek, for that. So that's Bajaj Finance. But the other stock on our radar is Kaya. It is buzzing in trade today after it signed a deal with Marico to market its products outside its store. Mangalam, tell us more about this.
Well, so Kaya and Marico usually are, they're the same group companies belonging to the Mariwalas itself. So they thought maybe why not, get the synergies of both of them to each other. And that's where the collaboration has come in. Marico has decided to market and sell some of Kaya's FMCG products or personal care products, 75 plus products outside of Kaya's clinics. So Kaya's wellness business also sells some of their consumer products in their 70 clinics. But Marico has now, under this arrangement, decided to sell it beyond that as well. Marico's reach is over 1 million stores on a direct basis. So this deal will unlock untapped growth potential of the Kaya brand. It is a bigger positive for Marico, for Kaya than Marico, because for Marico it will aid their premium personal care business. What we need to understand is what the commercial arrangements of this deal would be. Importantly, Kaya as a stock has seen a big rally, almost 70%, including today's gain over the last 1 month. So maybe the street was anticipating some sort of change in business strategy coming by, and this is something that has been announced. While Kaya is doing well, a lot of the other FMCG stocks also are actually spiking as we speak. So we have Honasa, which is Mamaearth, which has moved to the high point of trade with a gain of almost 7% Also, some of these paint names are doing better in today's trading session. So earlier in the day, Asian Paints was trading well in the green at the higher end of the range. And, now giving it company is Berger Paints as well. That too has moved higher. And Colgate as well was in the red at some point in today's trading session, has moved higher and currently at the higher end of today's trading range. So a lot of these consumer stocks anticipating good demand as we move into the monsoons. Yes, that's what's happening. And, that's been the general trend for a while now, that consumer names, they have been doing well. Look at that, Colgate, it's at the day's high. The Nifty is up around 47 points. But Bank Nifty, which was an outperformer yesterday, has come in for some profit booking. But I think that's par for the cause because it was a stellar rally, almost 1,000 point there. It is below that 53,000 mark now. But yesterday was the day for Bank Nifty. Yesterday was the day for Bank Nifty. Today so far is the day for IT, but this evening will definitely be the Team India evening, and that's because there would be an open bus parade here in Mumbai. I was lucky to be a part of one 17 years ago in 2007 when, Dhoni and his boys that time got the 2007 World Cup when they won it in South Africa. And now we have all of them being welcomed in Delhi. As you can see, footage. Very cool footage. Surya Kumar
I think even
Yadav
you feel like dancing with them.
Yeah, everyone feels like dancing with them. Obviously, the victory that they had made the country dance. We were waiting for one, parched for an ICC trophy for over 13 years and parched for a World Cup for, as much as well. So, a very important moment for the history of this nation, more so for these boys. Their entire career has been dedicated to this craft, and to reach the zenith, that too, before retiring, calling it a day. What an emotional moment. So all of this coming together. And that's you always say that's how sport combines the nation, that how it unifies the nation, and the celebration that night. And I'm sure it continues today as well. And you're going to be a part of that parade today. Most definitely. There is no way I won't be a part of it. Traffic aside, everything aside, I'll probably walk to that place. But, just to experience this moment is something that I wouldn't want to miss, especially because I've experienced it once. And these are core memories, right? Once you watch it, it remains with you through your lifetime. It does for sure. And it's a great moment for the country. So we'll all be there to celebrate it. And of course, you'll tune into CNBC-TV18 for all those updates. It's going to be a blast here and party on the channel as well. But on that note, we will have to take a short break. When we come back, we'll be joined by Arvind Nandan, MD Research and Consulting at Savills India, and Gaurav Karnik, Real Estate National Leader at EVA India, to discuss PE investments in real estate and the trends there. Stay tuned for that.
Has been installed in Asia. It's located at the Seeps facility in Mumbai, which is a plug-and-play facility for manufacturers and exporters of gems and jewelry who can significantly save time, cut costs, and add to their cost competitiveness as far as manufacture and export of gems and jewelry is concerned. The facility has an atomizer which can be fed with any metal ranging from titanium to gold. Subsequently, the feed passes through a sieve machine which standardizes the amount as well as the portions of the metals which have been atomized. Subsequently, they are kept in this 3D printer in which the desired shape and size of the jewelry is manufactured in a time much lesser than it is used in physical labor. Also, the government is advertising this as a plug-and-play facility to ensure that manufacturers and exporters not only save time but also can get a better finish by ensuring that machines which otherwise would involve capital cost for several manufacturers and exporters would be saved, since this is a plug-and-play facility which is provided by the Government of India. In Mumbai with video journalist Ajay Dabholkar, this is Abhimanyu Sharma for CNBC TV18.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBCTV18.com.
The general assumption is that the government will continue with its infrastructure thrust, its capex, the government capex that's going on, and there will be an increase in the outlays over there, but not like what we've seen in the last few years, which was at the expense of boosting consumption. It's more like a muted expectations from the budget that this will be more of the same, no major dramatic change. So therefore, if in the budget we do indeed get some dramatic announcements, some really visionary statements, although then obviously there'll be question marks on the execution, implementation, etc. But as of now, it's not seen as a very big game-changing event for the...
Welcome back. You're still tuned into Halftime Report, and the Indian real estate market is on a roll with private equity investments reaching a record $1.7 billion. This is in the first half of 2024. This is a 42% increase on a YOY basis as per a report by Savills. To discuss this and more, we have Arvind Nandan, the MD Research and Consulting, Savills India, and Gaurav Karnik, the real estate national leader at EY India. Gentlemen, thank you so much for joining us today, and we've been seeing great numbers come by in the real estate space. Arvind, let me come to you first up. What explains this trend that we are seeing in the real estate space, this big investment that's come by? Which segment are you seeing it mostly in right now?
That's very interesting. Actually, there is a sort of recovery taking place in investments in real estate. We had seen a peak in 2019, then it dropped, it became half in 2021, 22, recovered a little, and this year it's been going up. The main thing is that the interest has gotten a revival in the traditional core assets, office assets mainly, but also notably in the residential segment, which had nearly died down, 2 years ago. So there is a very smart recovery in residential assets as well as in office. There are a few other sectors as well, which are doing well, not as big. So for example, there is interest in warehousing, data centers, and few other sunrise sectors. But that sums it up actually.
So if you could give us a sense then, what are the differences in the spreads between the rental yields that you get on commercial versus residential versus warehouses, etc. What explains this, reinvigorated interest in the residential asset, and what one can expect in the second half of this year?
So look, office has gotten established. So it's been doing well. It's it used to be about 9.5. It's still doing about 7.5, 8.5 or so, which is practically in an accepted range. Residential traditionally has been low.
Yes.
But there are newer things like structured debt which is taking place, which is also creating interest. I don't know if there was a very major transaction by Mapletree in Bangalore, which became a news. Yet another event. So it is those things which are creating interest in residential, not purely the annual yield, which would still be very low if you look at other segments. Warehousing, on the other hand, is delivering some very good yields at the moment. There are not many examples, but the interest is high because it's a new segment. It's something which comes at a much lower cost, and is a growing segment. So that again is expected to give you about 7.5 or so kind of a return. Ballpark, these are the numbers and these are the reasons where, the interest is getting evoked from.
That's very interesting. New segments that investors are looking at as well. Let's get Gaurav Karnik as well in the discussion. Gaurav, thank you so much for joining us. Well, can you explain what's happening here? And also in terms of numbers, the May 2024 number, according to the report, is $2.5 billion. Where is it going, and is it the highest that we are seeing in the real estate space? And is it investments only by P plus VCs, or there are more parties that are investing here?
Yeah, so I think like Arvind already mentioned, the real estate sector is really seeing a real revival of the last 3-4 years. If I look at residential, from the time of COVID, we have seen a real boom in the residential market because people really want to buy houses and have at least one home with them. And people who have houses, let's say 1 bedroom or 2 bedroom, they're going to 3 and 4. And so that is really boomed. There's really an end user segment which is taking investments in the residential space. And if you see Gurgaon or you see Mumbai or Bangalore, the prices are really going up because there is a significant demand. And if you see any of the launches by the developers, they are being picked up in 2-3 days. So I think some of the demand on the residential side is clearly on the end use. People are looking to buy houses and to get that into their portfolio. The other part which we are seeing is on the commercial office space is that, unlike the rest of the world, a lot of the people here in India are gone back to work. If you look at America or Europe, they are still working on a very hybrid model where, people go to work twice or thrice a week. And whereas in India, there's a lot more people coming to work in the week. So there is a lot more confidence in the commercial assets. So, the Wave Rock asset in Hyderabad, which was bought by GIC and Xander, which is the second time it's been purchased. So that shows confidence in the commercial market. There is also the purchase by Brookfield of, Bharti's interest in their joint venture and basically making it 100% JV. And I think one of the points which is driving commercial or even warehousing, and I'll come to warehousing later, is that there is an exit in the form of the REIT, which is there. So that is giving a lot of confidence to foreign investors or investors to put money into such income yielding assets, because now clearly there is a way for them to get an exit other than just pushing it on to the next private equity player. And if I look at warehousing, the largest transaction was in the Reliance the warehousing assets, where RDI and KKR have put in money. So if I look at the type of people who are investing in India, which is not just private equity, is also the sovereign wealth funds and pension funds. And along with that, there's a large domestic pool of capital, which if you see the AIF space, there is a lot of domestic money which is being raised in the AIF space, and that is being deployed in the real estate market.
You preempted my question on the exit with the REIT one. That was rather insightful, Gaurav. I just wanted your thoughts on going back to the returns bit. I was asking him about the yield, the rental yield differences between the various kinds of assets, but that's not the only one. There is capital gains as well. And you said that house prices have increased. So on a total returns basis, what is the typical sort of number that one can look at across all forms of real estate? And, is there any exit apart from looking for another PE? One tries to figure, because liquidity risk has often been associated with real estate investing.
Right. So if I look at, the various yields is different. So if you look at residential, the residential yield on rental is very low. Whereas if you look at commercial, it's much higher. So if you look at residential, it'll be after post-tax is something, 2-3% or sub 3%. Whereas if you look at commercial, it'll be in excess of 10%. If you look at the way you're exiting, it is obviously for people who are developers, they have an option if on the commercial, on the warehousing side, to either do a REIT or InvIT. And that can be, REIT is a public issue, which brings in a lot of investors. The InvIT can be privately placed and then publicly listed. So the InvIT and REIT definitely gives you a clear exit. And the other type of investors, I guess, is the, the HNIs who have put money into the domestic AIFs. And that clearly gives another pool of capital, which is there to purchase certain assets. So there are, a bunch of set of buyers, whether it's the InvITs, REITs, or it is the, private equity and sovereign wealth funds who are there along with the pension funds from a foreign perspective, who are, investing in this market. And even the large private equity players, their LPs are typically the sovereigns and pensions as well.
Okay. Arvind, now what next? You said 2019 is when the numbers peaked. We have seen $6 billion as well in terms of PE investments. Do you think it'll take a lot of time before we get back to that number? What is the sustainable rate that the industry is expecting now?
Yeah, so not a lot of time. But, in this year, we've already seen a significant jump first half to first half on an annual basis. end of this year should again give us a substantial jump over the last year. So I am looking at something like 5 or 5+ billion in this year. So we're not yet getting up to 6 or 6.5. But if things do not change in an unprecedented manner next year is when we should be able to get back to that peak, is my guess. But you know, there are so many other conditions that you need to fulfill in order to for these things to happen. So if things do not change as they are today, I think next year is when we should be able to get back to that peak. As of now, you know, it looks like a good environment. We are climbing in a steady manner, but not yet hitting that peak.
All right, let's let Gaurav have the final word here as well. Gaurav, what are you hearing? The second half of this year, what's your guess?
I guess it should pick up in the second half and early next year. I think that's clearly the way the markets are looking. I think one of the drivers, or one of the things which are impacting investments in India or in the emerging markets, is the interest rates overseas. So if there is a some downward trend in the interest rates, say in the US or in Europe, that will clearly free up more capital for investments. And so hopefully by the end of the year, there would be less inflation in the US, or there would be better numbers which would allow them to reduce the interest rates. And that would clearly be an indicator or way to getting money back into the emerging markets, including India.
Okay, all right. Gentlemen, it was a pleasure speaking with the two of you. Thank you so much for joining us today and throwing the spotlight on what's happening with PE investments in the realty space. It's been doing really well in stock markets in terms of stock market investments, and a lot of interest coming in from private equity and venture capital as well. Time for a break now. Jay Thakkar of ICICI Securities will join in with some trading strategies on the other side. Stay tuned.
Next 1 or 2 years.
It appears to be some 382% jump in sanction and some 67% jump in disbursement. But disbursement and sanctions by and large used to be in the range of 50% plus percentage. So, and if you see the sector, in general, sector growth is there, but yes, we are always a little higher than the sectoral growth because of our strength in our core competency.
CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube.
48% is being given by domestic contributor, 52% comes through from export. I would like the ratio by and large, will remain same, but I wish, as far as the domestic is concerned, it tilts, towards domestic. I'll be happy if domestic is 53, 54, 55, and as far as the exports are concerned, that is, 45, 50 or whatever it is. So we do around 45% in chronic and 55% in acute. Obviously, as far as chronic is concerned, the margins are better and company will keep on, focusing on that.
Welcome back. You're still tuned into Halftime Report. We've been talking about a lot of broader market movers. ITD Cementation, that stock is under pressure today. The promoter, Italian Thai Development Public Company, is exploring potential divestment of its stake. Nigel is here with the details and analysis as well. Nigel, what's happening here?
Well, that's right. Late last evening, we got news that the promoter entity, as you mentioned, Italian Thai Development, they're exploring a potential sale in this Indian listed company. To run you through a couple of details, the promoter entity has around 46% stake in the company, which is valued at around 4,500, 4,600 crores. But why is the stock down? There seems to be a big pre-run in the stock. So to call it, even after today's 10% drop, the stock is still up close to around 80% in this year. That's the, that's the stock price today. You pull up a year-to-date chart, you'll see that it's still up close to around 80%. So that's one factor. The other factor is the promoter entity. It seems they're under some debt pressure. I was looking at a couple of articles. They've been making losses and they have a mountain of debt. So the promoter's bargaining power may not be as much. And point number 3, the management had given us a very, very good guidance. Big growth on the top line, margins expansion as well. And if you look at an Equirus note, well, they are factoring in that the PAT can go up from around 270 crores to around 470 crores odd. So which means at 9,000 crores market cap, it's trading at close to around 20 times. So not particularly cheap. Maybe that's the reason the stock is under pressure.
Right, take that point, Nigel. Thank you so much for explaining why ITD Cementation is down 10%. But let's look at the market. This morning, we hit a fresh record high on the Nifty. That's been routine for us. And the biggest reason for that is the smart shifting on bet-on that we have between the Nifty IT index and the Nifty Bank. So if you pull up both the Nifty IT index and the Nifty Bank side by side, you would see that yesterday it was the banks which were doing extremely well. Today they've taken a bit of a backseat. The Nifty Bank is down about 114 points. We have the IT index, which is higher in today's trading session, led higher, of course, by both Infosys and TCS. It's a Thursday today, which means it is Nifty Bank weekly options expiry. Ahead of that, we have the HDFC Bank stock, which is under a wee bit of pressure today after a big move that we saw yesterday already. We pointed out that the 1800 call on the HDFC Bank stock has been extremely active, so 1800 would be a bit of a resistance. Nifty Bank weekly options expiry, which means that the active options where we are right now is the most active, 24,350 call for a premium of close to 25 rupees, telling you there would be congestion around 24,375 to 24,400. Both those calls come up for you on the screen, 24,350 call, and we have the 24,400 call. At the lower level though, support comes in a lot earlier than what we were anticipating. So we have the 22,300 put, which is all but premium eroded. So 24,300 would be an extremely crucial support to watch out for. A lot of long positions added on Lupin, some short positions added in a couple of names as well. But today I'll be watching out for the ban list very, very closely, and that's because there are 3 stocks which are likely to come into FNO ban. So you have, you have a bunch of stocks like Bandhan Bank, AB Fashion and Retail, Piramal Enterprises, all of these stocks where the market-wide position limit has crossed 95%, and as a result of which these may enter FNO ban.
AB Fashion, a big move since the demerger announcement, almost 50% there. But thank you so much for making sense of the FNO setup, Mangalam. But let's move on. Jay Thakkar of ICICI Securities is joining us now. Jay, what are the important levels on the Nifty to watch out for and in your individual technical bets?
Sure. Very good afternoon to you, Sonal and Mangalam. Well, see, as far as Nifty is concerned, today we have this weekly expiry. So I think that 24,500 is definitely going to be a clear resistance. So I don't think that we would have a weekly settlement beyond the levels of 24,500. In fact, 400 to 500 is a very crucial resistance range. However, Sonal, I think that 24,300 is a very crucial support as well. So within this 100-150 points range is where Nifty is likely to expire today. And as far as the individual stock names are concerned, I mean, I agree with what Mangalam was trying to highlight, the negative correlation between Bank Nifty and Nifty. So today is Nifty IT. So Nifty IT is positive today. I have a bullish or buy recommendation on Emphasis, which is trading around the levels of 2,600 right now. One can place the stop loss below 2,540, target 2,700 to 2,750 in the short term. And other 2 buy recommendations are from the PSU segment. One is on BHEL, which is trading around the levels of 314. One can place the stop loss at 308. target 325 to 335 positionally, and SAIL, that's a final recommendation. SAIL is trading around the levels of 152.75, 153. Sonal, one can buy this, placing a stop loss at 149 in the short term, targeting 157.5 to 160.
All right. Thank you, Jay, for giving us your calls. We'll take a short break. On the other side, we'll connect with the management of Inox Wind as the company aims to achieve net debt-free status with the infusion of 900 crore rupees.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high. We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18 embarking on a quarter century of
Welcome back. The stock on our radar is Inox Wind. It's buzzing in trade. Company eyes to be net debt free with infusion of 900 crore rupees by promoter. Company expects substantial savings in interest expenses going ahead, aiding profitability further. To discuss this and more, we have Devansh Jain, ED, Inox GFL Group joining us now. Devansh, good afternoon. Thank you so much for joining us. Well, you'll be infusing around 900 crore rupees. The debt as on March stands at 650 crore rupees. So what will the remaining fund be used for, and what kind of interest savings will you see, and what will flow to the bottom line because of that saving?
Hi, good afternoon. Pleasure to be back. Yes, this is a very important milestone for us. We've been working hard on this over the last 2 years. Happy to see that we finally become net debt free. I think in terms of interest cost savings for FY24, our interest costs were about 250 crores. So for this financial year, barring Q1, where obviously we have certain interest costs, we should have overall saving of at least 175 to 200 crores, which will directly go to our bottom line. In terms of term debt, all of these, of course, there are certain timelines within which these need to be paid. We can't prepay some of them, so we are net debt free. But all term debt will be repaid in due course of time. And now what we require is primarily non-fund-based facilities, LCs and BGs for our working capital requirements. Even in these, I think we should see a significant reduction in costs and charges, given that our credit ratings have been continuously being upgraded over the past few quarters. And obviously, we believe going forward as well, given all the levers are in place, which is not just a strong balance sheet now. We have a very large order book and very, very strong order inflow visibility. The technological upgrades moving to a 3.3 megawatt turbine, our 4X platform, and actually the very large development pipeline and common infrastructure which we own should lead to us scaling up very, very rapid.
Right, that's interesting because just a few days ago there was a brokerage that initiated coverage on your stock, and they factored in close to 600 crores in terms of net profits next year. And I'm not sure whether they are factoring in any sort of debt repayment out here. So if that were to happen, then in due course of business itself, your net profit would increase over and above the expectations of the analysts by about 150 crores that you've spoken about. Let's talk about your capacity and your orders. You have about 2.7 gigawatts of orders. What's the kind of inflow that you expect, or what's the kind of signings that you expect over the course of this year? And how do you ramp up your capacity? What's your production target for this year and the next couple of years?
Look, so we have a very strong order book of about 2.7 gigawatts already, which is spread across PSUs, IPPs, CNI players. And we see a very, very strong pipeline of orders, which are continuously coming through. I mean, we are participating in many PSU tenders. We are currently negotiating with multiple new customers as well as a couple of existing customers for increasing the already orders placed on us. It's hard to give out specifics at this point in time, but I think given the targets, we publicly guided for 800 megawatts this year, 1,200 megawatts for the next financial year. And typically in the wind industry, your firm order book is about 2 years. So if you look at that, we're already at about 2.7 gigawatts. We're covered for about 2.5 years. Without getting into too many specifics, all I can say is we will look to further upscale our next year's guidance, given the strong order inflows which are expected over the next couple of months.
Okay.
In terms of our manufacturing capacity, it's at about, all in all, with our 3.3 megawatt platform, we can produce about 2.2, 2.5 gigawatts per annum across the nacelles, blades, and towers. So effectively, I think we have a very large manufacturing capacity at this point in time. We may debottleneck, a couple of our blade or tower capacities, looking at some of the demand for equipment supply which may be coming in the south, but no real capex which we would like to guide, given that there are multiple sheds available for rent and lease at fairly competitive prices.
Okay. Devansh, if you can quickly tell us, what will the remaining fund be used for? I believe 650 is the debt. You'll still have some funds left to be used for some other capacity addition or other plans. Inox Green also, there is a preferential issue that you have planned of around 1,000 crore rupees. Will you look at inorganic growth? What are the plans here?
Look, I mean, at Inox Wind, clearly we'll be carrying, now that we've become net debt free or say net cash, we will be carrying some amount of cash at all points in time. From a management perspective, we would like to carry at least 2 months of mandatory payments as net cash at all points in time, post which I'm sure the board in its own wisdom will put out a dividend policy, given we have that in many of our listed companies. In terms of Inox Green, yes, that is a net cash entity, and there has been a fairly large fundraise which has been announced over there. While we've mentioned the primary purpose of raising those funds in the objects, but we've really done that to create a war chest, if I may be blunt and short. We've really done that to create a war chest since we're looking at multiple acquisitions. We've had a very strong set of investors who've participated in the preferential issue, besides the promoters themselves pumping in a substantial amount, given the fairly strong order book that, the fairly strong growth outlook we see for that company as well. And yes, we are working on a couple of acquisition targets at this point in time. These are fairly large O&M plays. Obviously, there's no guarantee that these will go through, but if these were to go through, we would substantially add to our existing fleet and profitability.
All right, we take that point. We'll leave it at that, Devansh, this time around, but we'll leave it with a promise for you to join us back after your first quarter numbers so that we can talk in detail about growth plans going forward as well, holding his cards close to the chest, but reiterating their guidance that they've made about production as well as sales, and saying that there could be perhaps a bit of an upside to the guidance that they've given itself. Before we slip into a short break, let's get you some visuals coming in from our boys in blue, Team India actually. The bus has left the 7 Lok Kalyan Marg, that is the Prime Minister's residence. So that's where they met after landing in Delhi shortly. Take a short break, come back, focus on the markets and more stock-specific action.
Markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we're looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
Welcome back. Bank of America's International President Bernard Mensah, in an exclusive conversation with CNBC-TV18's Nisha Poddar, says the bank sees a dramatic change in India's economic growth trajectory, especially with policy continuity post-elections. Also points out that the US Fed's stance on rate cuts is critical but not time sensitive. Listen in.
What was on my mind and a lot of what people outside are looking to India with is, since the elections, have things changed and is there a different direction? The results were a little bit of a surprise to casual watchers. Maybe for those of you on the ground, it was completely expected, although elections are you never know exactly how they'll go. And the sense is that there's actually quite a bit of continuity. I think there's a real consensus as to the economic path that India is on and the policies broadly that they're on. So it doesn't feel, definitely from the last 2-3 days that I've been here, that there's going to be a dramatic change.
A dramatic change, all right, and you still have to see how this really pans out, but policy continuity largely is one thing that global investors and global companies like yourself really like about India. That's what I'm picking up.
And can I say very quickly, sorry to interrupt,
no, sure.
that not just the policy continuity, but I think we have all been really impressed with India's democracy as well. It's quite a thing of wonder, the scale of it, the size of it, the timing of it, and there's a sense that through that process it reinforced the institutions that you have. It was able to deliver a message to all who want to watch and see it that was reasonably clear, and I think that is also a positive for market participants.
Bernie, you are a banker, and the biggest question which is going to impact the world market and businesses in India also to a large extent, and liquidity flow, is going to be also the US Fed Reserve really cutting the interest rates. Now, in the most recent commentary coming in from the Fed, they've said that they need more data to see that inflation is tackled, while the market, after tapering their expectations, has come to a September kind of a cut and maybe one cut this year. As a banker, what do you think? What is the thinking at Bank of America, and what is the right estimate when it comes to this interest rate cut?
If I knew what the right estimate was, I'd be running a very successful hedge fund somewhere.
All right, what is the opinion which is building now after these recent comments and the recent data?
Yeah, no, I know exactly what you mean. And look, who knows? There was a large disconnect at the start of the year between what the market's expectations was and what the central bankers were saying. I had the privilege of joining some of them in Switzerland in March at the Basel Committee, and there was a sense of in a lot of academic papers and a lot of discussions as to why there was that disconnect.
Yes.
And as you rightly point out, there's been less of that. So our research team have a view, and I think at the moment they're thinking perhaps one cut before the end of the year, and you can see what a lot of others are thinking. And of course we can see what the markets are pricing in. My sense has always been that that the looking at the underlying strength of the U.S. economy and the health of the U.S. consumer, we have 60, 70 million customers in the U.S. We have a sense of what they're spending on, what their bank balances are like, how they're feeling from our interactions with them, and how well we service them. I always had a sense that the U.S. economy was stronger than perhaps would be shown. And then we saw, again, through places like India and Korea and Japan and others, we saw a lot of foreign direct investment going into the U.S. as well, with things like the Inflation Reduction Act and some of the large policies like that going on in the U.S. and elsewhere. So it always seemed to me that it would be a little bit tougher to come down as aggressively as the markets were pricing in. But if I were the Fed chairman, I would also look for the data to see, where we are. And it's not a bad situation to be in if the economy is doing as it is, and there's a sense of, okay, is it 1 or 2 this year or a little bit next year? I don't think it makes a huge amount of difference, and I think they're doing a good job in.
It's coming on the back of a period of hikes which was unprecedented, facing shocks that I tried to describe yesterday over dinner, and followed by a period during which we held rates untouched, and during which we were restrictive enough to actually see our medium-term target reach that 2%, which is our objective. And most recently, we have seen in our round of projections, which are really important, September, December, March, and June, we've seen that 2% target with an oscillation of 0.1 about it at the last quarter of 2025.
Dr. Saneen, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness, or do you think it's also a cultural issue where, one of the statistics or reports that I was reading indicated that we just don't feel the need to brush more than once a day.
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning, to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth, and the biofilm contains bacteria, especially bacteria like strep mutans, which is what causes cavities. So, and of course, gum disease has different bacteria, but there is a whole bacterial biofilm that happens in the teeth. So if you don't remove that biofilm, then the bacteria will remain there and they will act on the gums and of course on the teeth. And so the gum disease and the dental caries both will be a factor if you don't remove the biofilm. So it's extremely important, especially at night, because when you've just eaten and then you go to sleep and it has time to act.
Welcome back. We're joined now by Sumit Gupta. He's CEO CoinDCX. Sumit, hi. Welcome to the show. And it's after a very long time that we're talking about Web3 or crypto for that matter. But we do understand that there is development. And first of all, congratulations on your recent acquisition with BitOasis. Tell us what it means for you and your overall portfolio and for the Indian participants also.
CoinDCX started in the year 2018 and now is the most reputed and the safest exchange in India. We are the largest player in the Indian market, and global expansion has always been a part of our growth strategy. Of course, MENA becomes one very exciting market, one of the fastest growing market. And we've been talking to BitOasis from a couple of years now. In fact, we have made a strategic investment in BitOasis in 2023. And since then, we have been, looking at the progress, the growth the company has made. The company has also turned profitable, very similar thinking, compliance first thinking, building in the right way. Regulations are there in the market. So it becomes a natural choice for us to acquire BitOasis to expand into our, global plans. We announced this acquisition very recently, and I'm very proud to share that this is one of its kind deal where an Indian young startup grew on to become a largest company in a sector and then acquired a company in MENA region. I think it's a great moment for CoinDCX as well as for the Indian Web3 ecosystem.
Let's take a step back then and talk about on how many members are there on the exchange in CoinDCX in India? How many crypto assets are you supporting on the platform? What is the kind of volumes also that you're looking at?
All of these numbers are also out there in the open. We are very transparent as an organization. Just to share some more stats, so we have roughly 15 million customers, which is roughly 1.5 crore verified users. We have processed a cumulative trading volume of around $80 billion. Quarterly, between $7 to $8 billion. We have assets under custody of roughly $500 million. And largest exchange in India, last round that we've raised, we were valued at around $2.15 billion. India is a huge market, very, very bullish on the Web3 opportunity in India. And we continue to go deeper there, continue to go deeper into crypto and Web3. And BitOasis is again a significant milestone in the journey of CoinDCX.
It sure is. So when it comes to BitOasis, it does support 60 crypto assets, but there are various fiat currencies that you now open up to. I mean, in India, we do it in Indian rupees, but you have access now to dirham and SAR and US dollar for that instance.
Yeah, a lot of fiat currencies are supported in BitOasis, and the great thing is it's all regulated, by VARA, and there's recently one more license received in Bahrain. So whatever fiat currencies that the regulations allow us, the BitOasis team will continue to open those fiat options, which will of course contribute to adoption of crypto asset, not just investing, but also usage of crypto, overall. So I think all of these are very progressive science, because some of the countries are very progressive and are ahead of its time. So we also at Coindeces will have a lot to learn from how regulations are, how regulations are coming and how regulators are thinking about it, which can also be applied to India. And I believe in the long term, globally regulations are going to be pretty much similar.
So, the final question to you, and this is the time that we're asking everybody about their pre-budget recommendations. What is this sector now anticipating or looking forward to?
See, at Coindeces, we are building for the long term, and for us, it's been 6 years. It still feels like day one, and we'll continue to build for the category for many, many more years to come. Of course, the industry has taken a lot of steps forward in terms of increasing clarity. There is taxation, but yeah, I mean, in terms of recommendations, I believe that the taxation that has been imposed on the industry can be further relaxed down. That is a representation we have made very recently, and hopefully the government will consider the request of the industry. We have done it both from Coindeces as well as from the association, where all members are there. So the tax needs to be lowered down at par with what other countries have. Otherwise, my worry is that the innovation will shift offshore, the talent will shift offshore. And the second recommendation is that the industry has shown a lot of progress and resilience over many, many years. And I see a lot of developed nations, lot of big economies working towards regulating the sector. I really wish that India also comes up with a clear regulatory framework. I think that is good for industry, that is good for the government, and that is also good for the customers who are participating in the sector. It is also, I think it will also position India as a global leader, or at least a great contributor to the overall Web3 sector, and it is also going to have a direct impact on the country's GDP, employment opportunities. So net making the tax framework a little more lenient and in line with what other asset classes have, I think that is very, very important to preserve the talent that we already have in the country. And number two, making sure that we come up with a progressive regulatory framework so that the industry continues to prosper, grow, and keeping customer protection at the core and center of everything.
All right, we hear that. Sumit, thank you so much for joining us here at CNBC TV18. But with that, it's completely out of time on Halftime Report. Business Lunch will take all the action ahead.
Rural problem, is it also as prevalent in the urban population?
So I would assume, looking at the stats, that the rural problem would be slightly more, because also availability of toothbrushes, toothpastes, and other oral health aids is much less than in the urban areas. But awareness, and as Sunil said, awareness and knowledge has to be imparted so that people will be more, able to do what they have to do.
Offences against Rafah since the 6th of May, over 1 million people have been displaced once again, desperately seeking shelter and safety.
This is the first of its kind of a 3D printer machine for gems and jewelry, which has been installed in Asia. It's located at
Stocks continue to trend higher. IT as well as auto are the key drivers, even as financials and consumer durables drag today.
Clocks 1 crore new loans in the first quarter, its highest quarterly run rate ever. The feat comes on the back of its highest first quarter-over-quarter growth in 8 years. In the first quarter itself, deposits too see a strong show.
ITT cementation slumps after its foreign promoter says it is exploring divestment of its stake. But Kaya rallies on inking an exclusive sales and marketing deal with group company Marico.
And veteran investor Ramdev Agrawal says that India should have a Minister of Capital Markets to ensure we don't have any regulations that make equity investing unattractive in India's decade. He also calls for raising the taxable income limit to boost consumption.
It's a homecoming of the victorious Indian team, which we all are so proud of. So Hormaz and I really cheering along with our entire editorial crew right here in CNBC TV18. What a joyous moment it has been. And the party is really getting underway for the newly crowned T20 World Cup champions. Team India has met with the Prime Minister, and they are also scheduled to hold an open bus parade in Mumbai later this evening. Hormaz, you plan to go for that, right?
I'll be holding fort here, but I hope a lot of our colleagues would be going for that.
What a joyous moment it will be. But
absolutely.
Let's take it to Delhi first for the latest news. And our colleague Abhimanyu is right there with the latest on this development. Abhimanyu.
After meeting Prime Minister Narendra Modi at his residence in Delhi, the Indian cricket team is going to proceed to Mumbai, where their flight is going to land around 4 p.m. and the revelry is going to continue there. All action is going to shift to Mumbai as the Indian team is going to arrive out there. And there is a roadshow which has been planned in the city. The financial capital is gearing up to welcome the victorious Indian team, which has already met the Prime Minister of India. Now, notably, earlier too in 2023, when India had lost out to Australia in the finals of the 50-over World Cup, the Prime Minister had met the players, he had encouraged them, he had consoled them, and less than a year later, now the Prime Minister has met the victorious team, which is now going to go to Mumbai, where the revelry is going to continue.
All right. Thanks so much, Abhimanyu, and enjoy the celebrations along with the Indian cricket team. So more on that later in the show, but let's get back to the markets and life highs for our markets. But remember, when we talk about a month ago, well, the market saw a big crash on 4th of June, you'll remember, on the counting day post the election for the election results. Now, we have come a long way since then, and Hormaz has jumped across to the big wall with all the data crunching and is here with the outperformers and also underperformers. And there you can see visuals. The celebrations really continue, and those visuals coming in for the Indian team leaving for Mumbai, coming right here for the parade on the road, on the streets of Mumbai for the big celebrations here in Mumbai, leaving Delhi. So those are the visuals really coming in of the joyous, victorious Indian cricket team after winning the International T20 World Cup, which was a big celebration and a proud moment for all of us Indians. And I would say it was a bittersweet moment moment as well, because after coming so close to the finals in 50-50 format, World Cup finals, we lost to Australia, and it was the time for redemption, not just for the cricket team, the BCCI, but for all the Indians. And that's what we got it right. And that's why these celebrations are so special. And also because South Africa was really coming out strong. It really went to the last over when we really captured that particular cup. So that's why these celebrations are just so special. And those are the celebrations on the street right in front of the Indian cricket team right there leaving for Mumbai right now in Delhi. Remember, they have had a meeting with Prime Minister Narendra Modi, who, remember, has had even spoken to them on the phone right after their victorious win in the Barbados. And right now, the Indian celebrations and homecoming is the big event for the day today, starting from Delhi and is going to end in Mumbai very soon. On the streets of Mumbai, there'll be huge celebrations. And there you see the victorious Indian team being really celebrated as well as invited back into the country. There you can see the coach Rahul Dravid cutting that celebratory cake as well. So everybody is just joining in with the Indian team in what a big victory that we have really got in the T20 International World Cup. So some joyous moments there. And Hormaz has been waiting by with more news on the markets and all the number crunching of the last 1 month of stupendous growth that we saw in the market momentum post the election results. So over to you, Hormaz, for that.
Well, I guess celebrations take precedence over all of this. But then, yes, today is exactly a month to the 4th of June, the day the Lok Sabha election results were declared. And who would have thought that from almost slipping below the 21,000 mark that day, the Nifty would be making record highs every single day a month later. Now, here's how the market has looked like a month from that day. The Nifty made a low of 21,281 on the 4th of June. It's up 3,000 points from those levels. The bigger performer, though, has been the Nifty Bank, which has seen a rally of 7,000 points from the lows that it made on the 4th of June. Now, let's take a look at this in a more broader context in percentage terms. The Nifty is up 11% in the last 1 month. Now, this I'm talking about closing levels from the 4th of June to closing levels on Wednesday, that is the 3rd of July. The Nifty Bank is up 13%. Now, remember, the broader markets had a bigger fall that day, with both the mid-cap and the small-cap indices declining more than 8%. But the rebound has been equally swift. The mid-cap index is up 14%, and the small-cap index even better, up 19% from the closing levels of June the 4th. Now, let's focus on the indices individually. The Nifty up 11% in the last month. 49 out of the 50 index constituents have gained during this period. Now, Shriram Finance, the latest Nifty entrant here, is the top performer. And Wipro comes second in this list. And the recovery in IT stocks is evident from the fact that 5 out of the top 10 Nifty gainers over the last 1 month are IT stocks. But which is the one stock that has given negative returns in the last month on the Nifty? And that is India's largest passenger car maker, Maruti Suzuki. The losses aren't significant, but they are losses nonetheless. Then HUL, Britannia, Bajaj Auto are some of the other underperformers, and by that I mean they have not seen significant gains, the 20-30% kinds, during this period. Now, onto the mid-cap index then. 95 out of the 100 stocks have delivered positive returns in the last 1 month. 25 stocks have gained more than 20%, and 63 of them have seen gains of at least 10% and higher. The top performers here, well, unsurprisingly, it's Mazgaon Dock, and what a move the stock has had. 75% in the last 1 month, crossing over 1 lakh crore market cap today. Multiple news points here as well. And fact, with moving in line with the fertilizer theme in itself. And Dixon Technology is also making new highs almost every single day. And Oracle Financial as well, which has given some positive returns, and for its parent company in the US as well. The underperformers here, though, is BSE. And after a dream run that the stock had seen, it is seeing some bits of sideways movement and negative news flow as well. And HPCL too, after a dream run, seems to be taking a bit of a pause. Now onto the small cap index, where 99 out of 100 stocks have gained in that last 1 month, and 44 of them have gained over 20%, and 77 of them have seen at least double-digit returns. The top performer here is Amara Raja, and now is that even a surprise considering the move that we have seen in battery names? Titagar too has been a multi-bagger in recent times, and the fact among the mid caps and Chambal among the small caps have emerged as the top performers within the sector. Not only the only negative stock here is Ujjivan Small Finance Bank, IRB, Blue Star are some of the other performers, and PSUs have been underperformers as well. But this is how the market has looked over the last 1 month. Back to you, Nisha.
So, Hormaz, clearly markets are also celebrating with the Indian cricket team, and those are the visuals coming in. And the Indian cricket team meeting with Prime Minister Narendra Modi, such sweet moments captured in those pictures there. And the skipper talking about the experiences, and Narendra Modi really engaging with the entire team. Look at those performers, Jasprit Bumrah, what a spell he had, and Virat Kohli, the standing, support for the entire Indian cricket team. And on the finals, his slow, momentum on clocking more runs really played a very important role. And on the other hand, remember Hardik Pandya, he too had shed a few tears after this joyous victory. So that is the joyous and the victorious Indian cricket team. Everybody has really participated in the glory that has come to India with the finals of T20 World Cup. We are the winners, and those are the special pictures with Narendra Modi holding that trophy along with the Indian cricket team, Rahul Dravid and Indian skipper Rohit Sharma on both the sides. So those are the important and very, very sweet moments being captured in these pictures. Hormaz, it makes all of us really so proud about the victory that our men in blue have really got for us.
What makes it even more special is the fact that we've had to wait so long for an ICC title, right? We've had to wait about 11 years for an ICC title, 13 years for a World Cup, 17 years for another World T20 title. So yes, the wait, it's worth the wait, right? And the Prime Minister, rightfully so, welcoming the heroes of that victory in Barbados. And Jasprit Bumrah, of course, the fulcrum of the Indian bowling attack there. He was the one who actually turned the game around with that spell of his. Yes. And of course, the contributions as well from the entire other bowling lineup as well. Hardik Pandya, Arshdeep Singh, all chipped in
and
that final.
And Surya Kumar Yadav's that famous, catch, that I think tipped the entire match in our favor, no matter how controversial it may be. But in the end, we are the winners. But Hormaz, you'll also know that Mumbai will be celebrating, and all of us there could be on the streets really rejoicing with the Indian cricket team. There you see Prime Minister Narendra Modi holding that trophy. And here, I would like to recount the finals of the World Cup late last year in Ahmedabad, where Prime Minister had gone and consoled the entire cricket team. So this particular celebration is long waiting and long due for the Indians, and those are the pictures really coming in. And of course, the coach, all kudos going to the coach also to keep together that team, and each of the participants really performed so beautifully on that.
It's not very wrong when they say catches win matches. So of course, it was that catch that turned the game around as well. But yes, a fitting farewell for the outgoing coach of the Indian team, Rahul Dravid. It was his last match as coach as well. And also for Rohit Sharma, for Virat Kohli, for Ravindra Jadeja,
many retirements from international T20.
From the international T20s. So yes, a fitting farewell indeed. A fitting farewell for them, and a lot of and a moment of joy for 140 crore Indians.
All right, all good things have to come to an end. We'll need to slip into a short breather and back with more business and market update on the other side. Stay tuned to Business Lunch.
Back with us here on Business Lunch, and from sports we move to politics, and Britain goes to polls today to decide who between the Conservative Party's Prime Minister Rishi Sunak and opposing Labour Party's leader Keir Starmer will take on the reins of the country. Now polls are suggesting that the Labour Party is likely to come into power with a huge majority if successful. Now my colleague Sanjay Suri reports on the battle for Westminster.
So polling is underway now. 650 constituencies will elect their members of parliament through the course of their choices made today. About 46 million registered voters, not of course all will vote, but there is expected to be a substantial turnout in this election. The trend appears rather clear. It is almost certain now that Rishi Sunak's Conservative government will be voted out. There are in fact questions whether Rishi Sunak will be able to save his own seat in Richmond North. The poll group Savannah has said that that seat is too close to call. Were Rishi Sunak to lose his position not just as PM but as MP, that of course would be a devastating blow for him. But really a lot of Conservative heavyweights are very likely to fall in this election. A number of people who have been cabinet ministers, Jeremy Hunt, for example, who was the Chancellor of the Exchequer, and several others are expected to lose their seats. Starmer, leading the Labour Party, is on a high, and he has stayed steadily on a high from the time the elections were called or even earlier. The opinion polls have put Labour distinctly ahead, and that has not changed, which suggests that most voters had made up their minds even before the election was called. Since the election was called, Rishi Sunak has taken a number of missteps. He left the D-Day celebrations too early. There have been scandals around bets placed by senior members of the cabinet on the election dates. There have been a number of issues where he's really been on the back foot, and clearly he has not done himself a favor even by way of organizing the party to field candidates convincingly. The party itself has not been in place, in a good enough place certainly, to contest the election on a firm footing. It is looking a bleak day for Rishi Sunak and for the Conservatives.
All right, Sanjay Suri there reporting straight from London on the big UK elections today. Now moving on to France, as France goes into the second round of voting for its parliamentary elections. Well, far-right party National Rally finds it difficult to touch absolute majority after candidates from the leftist and the centrist parties drop out of the race and also join hands to form a united front. CNBC's Charlotte Reid gets us up to speed about the French elections and what's expected ahead of the Sunday's voting round. Take a look.
But certainly, it looks like the scenario that is considered the least bad scenario, as we heard from many guests. The hung parliament seems to be confirmed after, as you were saying in the introduction there, you had out of the 306, 3 were runoffs. We're down to just 90 after so many candidates stood down. And that has changed the needles in the polls. And you have it on your screen there. The far right, much further away from an absolute majority, that old magic number of 289 seats. Their chances of reaching a number has gone down quite dramatically after we have this change of seats. So it'll be very interesting to see. Of course, as we said before, the carryover of votes is not going to be automatic. So the voters will have the final word on Sunday. But certainly it looks like things might look more difficult. And the element of unknown here, as we've said before, is like looking at the polls. When you have a Rassemblement National candidate against a Green, a Socialist, or a member of Macron's party, it looks like the Rassemblement National would lose. The question mark, the big question mark, is when it's an l'Infrance Insoumise candidate against the Rassemblement National. There will be a lot of the matches happening on Sunday. There, it looks like a lot of voters are more hesitant in carrying their vote over. So that's one of the unknowns that we have there. So we have to wait and see.
And from France, moving to the United States now, where elections are set to take place later this year, and a group of Democratic state governors are vowing support to President Joe Biden now, following last Thursday's shaky debate performance. Now, Biden met with over 20 of his state party governors in a bid to calm fears, following calls from 2 lawmakers for him to step down from standing for presidency. Now, NBC's Alice Barr filed this report.
Facing mounting pressure over his future in the race, President Biden and Vice President Harris meeting tonight with Democratic governors.
We know we have work to do. We know that as we're standing right here, we're behind.
And all of us said we pledged our support to him because the stakes could not be higher.
That after the president rallied campaign staff in an all-hands call telling them, quote, "I am running and nobody is pushing me out." The White House press secretary reaffirming that.
The president is moving forward. He's moving forward as being president. He's moving forward with his campaign.
Following criticism, he was slow to reassure lawmakers. The president speaking today with several top Democrats, all part of an effort to ease anxieties and tamp down calls for the president to end his re-election bid after that disastrous debate. Even close allies frustrated the public hasn't seen him since in more off-the-cuff appearances.
He's got to show the American people that he can do this job. And he can't be wrapped in bubble right now.
The number of Democratic lawmakers publicly calling to replace Mr. Biden on the ticket is now growing. Texas Representative Lloyd Doggett was the first.
That process, while it's messy, if it's done in a fair and open way, may do a great deal to restore confidence in the democratic process.
A new CNN poll shows Vice President Harris faring slightly better against Trump than Biden, though the difference is within the margin of error, and she is underscoring her support.
Joe Biden is our nominee. We beat Trump once, and we're going to beat him again, period.
An embattled nominee seeking to steady the ship. A new New York Times Siena College poll is adding fuel to the fire, finding President Biden trailing former President Trump by 9 percentage points among registered voters and by 6 points among likely voters. The poll was conducted after the debate and shows Mr. Trump widening his lead compared to a Times poll from before the debate. In Washington, Alice Barr, NBC News.
All right, so all the latest coming in from the U.S. elections, which is later this year, and the momentum is really building. And the it's going to be a tough fight, Hormaz, over there in the U.S. So looking forward to that. With that, it's a wrap on this edition of Business Lunch. Midcap Radar comes up next. Stay tuned for that.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBCTV18.com.
the general assumption is that the government will continue with its infrastructure thrust, its capex, the government capex that's going on, and there will be an increase in the outlays over there, but not like what we've seen in the last few years, which was at the expense of boosting consumption. It's more like a muted expectations from the budget that this will be more of the same, no major dramatic change. So therefore, if in the budget we do indeed get some dramatic announcements, some really visionary statements, although then obviously there'll be question marks on the execution, implementation, etc. But as of now, it's not seen as a very big game-changing event for the earnings outlook in the next 1 or 2 years.
It appears to be some 382% jump in sanction and some 67% jump in disbursement. But disbursement and sanctions by and large used to be in the range of 50% plus percentage. So, and if you see the sector, in general sector growth is there, but yes, we are always a little higher than the sectoral growth because of our strength in our core competency.
CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda.
Good afternoon. Welcome to Midcap Radar. I'm Sonam Putra. With me is Hurmaz Patakia. Well, for the markets, it's a 54-point uptick on the Nifty. Broader markets are doing well, Hurmaz, but Bank Nifty, after that stellar rally yesterday, is quite muted today. In fact, some profit booking and below that 53,000 mark as well.
HDFC Bank leading the charge on the upside yesterday, leading it on the downside today. So yeah, we keep an eye out. Today is also the weekly expiry of the Nifty as well. So some action expected in the last couple of hours. But let's start Midcap Radar with the headlines this afternoon. And record highs continue on Dalal Street. IT and healthcare are the key drivers, even as financials and banks drag. Midcaps are relatively outperforming.
ITD cementation slips more than 7% after the company's promoter shareholders, Italian Thai Development, says it is exploring divestment of its stake in the company.
Skincare brand Kaya surges 10% after striking a deal with Marico, which will now handle the sales and marketing of the Kaya's products outside of Kaya's clinics.
Inox Wind's gains over 12% after the company eyes a net debt-free status with infusion of 900 crore rupees by the promoter. Management tells CNBC-TV18 they should see interest cost savings of 175 to 200 crore rupees for FY25.
And Masgardok Shipbuilders, it's a record high as the company crosses 1 lakh crore rupees in market capitalization. The stock has more than doubled in 2024 already.
Okay, all right, those are the top headlines for the Nifty. The support today is coming in from Nifty IT. That index is up about 1.4%. And it's been rotating, right? The supporters of the Nifty so far. It's been very sectoral. Yesterday was Bank Nifty. A few days back it was Reliance. Today we are seeing Nifty IT make a comeback. So that's been the mood of the market so far. Bank Nifty seeing some profit booking as we've been talking about. The CPSE index is doing really well today. So a lot of these PSU names are surging in trade. There's no real press news release that has come by, but most of them are seeing a surge. What is not doing so well is the financial space again, and media space, which has been surging off late, has also seen some profit booking. So it's really very sectoral today, very stock-specific moves.
It's a tag team match.
Yeah.
It's one index is leading the charge, the other one taking a bit of a break. But I would pull up the Nifty PSE index, not the CPSE, but the Nifty PSE index, and that is the one that you need to keep an eye out for, because 11,353 was the level, that the high that it made made on the 3rd of June, and it has still not managed to retest those levels. It's still getting there slowly but steadily. We'll keep an eye out on the PSE index. But there are plenty of movers in the broader markets, and Nigel is joining in to take us through all of these. Nigel, good afternoon.
Well, good afternoon. Plenty of action actually from the broader markets. IFB Agro, that's one of the stocks that's locked up with gain of close to around 20%. So big move is what we're seeing out there. And from the pharma space, AstraZeneca has moved, on high on very, very large volumes. And that move has particularly come in the last 1 hour or so. The other management that joined in here on CNBC-TV18 was Inox Wind, and they're sounding quite optimistic about things going ahead. That stock is up close to around 10%. AGI Greenpack, well, we had a note coming in from a brokerage firm earlier this week, and that's clearly reacting to that. That's up close to around 11% as we speak. So those are some of the top gainers, up anything between 10 to around 20% odd. Few more names. Prime Focus, one of those underperformers. Second day running, the stock is doing well. I think for this week itself, the stock is up more than 25%. Sunflag Iron as well, they're going to be putting more amount of money into Lloyd's metal. Well, for the time being, that stock, that Street has taken that positively. That's up close to around 9.5%. Monte Carlo as well is up close to around 8% as we speak. Goldium is another stock that's moving on very, very large volumes, up close to around 9%. And Nelco, it's seeing a bit of an up move, and that move has started at around 11 a.m. today. So that one currently is at the high point of the day. There are a few losers, though. The biggest one is ITD Cementation. We'll try to get you further analysis later on in the show. But that one's down close to around 10%. Stock ran a little bit ahead of itself, and now it's coming for some profit taking. JP Associates, that resolution with regard to their debt is not coming about as per plan. So that's down another 5% odd. And Zen Technology is one of those beautiful stocks that have seen a big, big run in the last 4 years or so. I think the stock is up close to around 10 or 15 times. Well, that one, in fact, is seen some mild profit taking. But for this week itself, I think it's up more than 15%. Back to you.
Oh, wow. After that 10 to 15 times rally, it's just down 3.5% now. But yes, those are some notable movers from the broader markets. Thank you so much, Nigel, for joining us with that list. It's time to welcome Soni Patnaik of JM Financial Services for a technical check on the markets. Soni, good afternoon. Thank you so much for joining us. Well, what's happening with the markets now? What do you suggest? We have the weekly expiry today. Do you think we could consolidate at these levels, or the rally would continue?
Good afternoon, Sonal and Hormaz. Thank you for having me on the show. I think, of course, Nifty was, it was expected to test 24,400 odd levels. It's almost right there. It's wise just to take some profits from current levels and wait. There could be a minor correction towards 24,200, 24,100 odd range. So I think that is the level one where one can reinitiate the longs. From current levels, of course, it's in a bit of an overbought zone. So it makes sense to, just book some profits out of Nifty and just wait for the certain sizable dip to come in to reinitiate the longs. Support for this series continues to be very strong at 24,000. So as long as 24,000 does not break, I guess there's no reason to panic as of now. It continues to be a buy and dip sort of a strategy.
Well, I guess the concept of profit booking does not exist for the broader markets. The mid-cap index continues to do well. It's 0.6% higher today as well, as is the small-cap index. But Soni, what are the specific stocks that you're recommending this afternoon?
So Hormaz, the first would be from the auto space, Eicher Motors. One can buy at current level in futures, keeping a stop loss of 46.60. And a target of 4,800 to 4,820 can be seen. The stock has seen a good bounce back from 4,600 odd support levels, looking quite strong. So there's a short covering expected up to 4,800 plus levels from current level that can be seen. The second stock pick would be from the metal space, Vedanta, which is looking good at a good fresh breakout above 465 in option chain today. So Vedanta futures, one can buy at current level, keeping a stop loss of 465 and a target of 490.
Okay, Soni, these are some individual names. There's a lot happening in the broader markets when it comes to the PSE space as well. Mazagon Dock, Cochin Shipyard, all of these stocks have made a comeback, and how? They were the first ones to see that impact when the final election results went the other way, actually. What do you suggest? How can one go about these stocks?
I think the entire space is looking quite strong. In fact, they have repicked those momentum and, individual stocks in that particular space, such as Cochin Shipyard, Mazagon, they have given out fresh breakouts for today. So talking specifically about Cochin Shipyard, one can see that the breakout is very strong. It's backed by volumes. It has come today itself above 2460 odd levels. So one can continue to hold the stock, trail the stop loss, of course, to 2460 from where the breakout has come, and a higher target of 2800 can be seen. Apart from these stocks, you can also see from the defense space, HAL, BEL, these stocks have also given significant breakouts today. And, the entire sector, the entire space looks quite positive. Continue to hold. There's a lot of momentum left.
Okay, all right, Soni, thank you so much for joining us. So those are some technical bets and outlook on the market. We'll slip into a break. When we come back, we'll talk to you more on the markets and we'll put focus on ITD cementation as well. It's trading under pressure. We'll get you the analysis on that one. Stay tuned.
Award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
48% is being given by domestic contributor, 52% comes through from export. I would like the ratio by and large, will remain same, but I wish, as far as the domestic is concerned, it tilts, towards domestic. I'll be happy if domestic is 53, 54, 55, and as far as the exports are concerned, that is, 45, 50 or whatever it is. So we do around 45% in chronic and 55% in acute. Obviously, as far as chronic is concerned, the margins are better and company will keep on, focusing on that.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Back with us here on Midcap Radar and continuing with this plenty of movers in the broader markets. ITD Cementation is one of them. The stock is under pressure today, and as promoter, Italian Thai Development Public Company is exploring a potential divestment of its stake. Nigel is here with more details. Nigel.
Well, that's right. The stock is getting clobbered in today's trading session. The news that came yesterday was a bit of a surprise to some because they have announced on the exchanges that the promoter entity, Italian Thai Development Public Company, they're exploring a potential stake of this investment that they have in the Indian listed company ITD Cementation. Give you a few details. They have 46.6% stake. At current market price, after the 10% drop as well, it's valued at around 4,500 crores. But why is the stock down? There seems to be a lot of pre-positioning that's taken place. In the last 1 month, the stock is up close to around 30%. If you look at it year to date, the stock is up close to around 80%. If you look at it in the last 1 year or so, even after this drop, well, the stock is up close to around 200% or thereabouts. So there's a lot of pre-positioning. So some selling on news is what it is. That's point number one. Point number 2, the stake that they have in the Indian listed company is 4,500 crores. Brilliant, right? But their listed entity, which is in Thailand, well, that's market capitalization is only around 800 crores odd. So it seems that they're being a little bit opportunistic out here and going and trying to take some money off the table. And point number 3 is valuations. The stock has already seen a big run, and in fact, the promoter entity that's in Thailand, they have a huge debt in their books. A couple of $1 billion is what I understand, and they've missed some payments as well. So the bargaining ability of the promoter to go ahead and get a suitable buyer could be a little bit limited. But out here in India, they've guided for very, very good times. They're talking about 20% revenue growth. They're saying legacy issues are behind, so the margins can go to around 11% approximately. Give and take everything. Last year, they did 270 crores of net profit. Equerris believes they can do 470 crores odd. The market capitalization, those around 9,000 crores. So even after this decline, at 9,000 crores market capitalization, keeping in mind that you're looking at the PAT going up by 80%, still it trades at around 20 times, which is not very, very cheap. So all these 3 factors, a run up in the stock price, limited power of the promoter entity to bargain for a good deal, and the third factor, valuation is not cheap. It seems it's a bit of seller news on this counter.
Okay, all right. Thank you so much, Nigel, for explaining what's really happening here and why the stock is seeing that big knock after the announcement as well. The other stock which is buzzing but on the upside is Inox Wind. The company eyes to be net debt free with infusion of 900 crore rupee by the promoter. Earlier today, we spoke to Devansh Jain, the executive director of the company. He expects interest cost savings to be around 175 to 200 crore rupees in FY25. Remember, they were around 250 crore rupees in FY24. They add that Inox Green Energy will be, the fundraise will be used for multiple acquisitions. Listen in.
I think in terms of interest cost savings for FY24, our interest costs were about 250 crores. So for this financial year, barring Q1, where obviously we have certain interest costs, we should have overall saving of at least 175 to 200 crores, which will directly go to our bottom line. In terms of term debt, all of these, of course, there are certain timelines within which these need to be paid. We can't prepay some of them, so we are net debt free. Inox Wind clearly will be carrying, now that we become net debt free or say net cash, we will be carrying some amount of cash at all points in time. From a management perspective, we would like to carry at least 2 months of mandatory payments as net cash at all points in time, post which I'm sure the board in its own wisdom will put out a dividend policy, given we have that in many of our listed companies. In terms of Inox Green, yes, that is a net cash entity, and there has been a fairly large fundraise which has been announced over there. While we've mentioned the primary purpose of raising those funds in the objects, but we've really done that to create a war chest, if I may be blunt and short. We've really done that to create a war chest since we're looking at multiple acquisitions.
Inox Wind, one of the outperformers in the broader markets. But shifting focus now to Brigade Enterprises, as the company is planning to develop an 8-acre residential project in Bengaluru. Sonal, tell us more on that.
Well, first up, it is going ahead, expanding in its home market itself. And it is an 8-acre land, which they'll be doing via joint development agreement. Here, the development potential will be around 1.2 million square feet. The company says that the gross development value of the project is around 1,100 crore rupees. And they've been adding on a lot of projects of late as well, and Bengaluru continues to be their focus market. They've said that South continues to be their focus. They will not come to Mumbai like other players, and this is the reason that their focus and their launch pipeline continues to be very strong. The stock, though, has come off from the highs of the day, still doing well. It's up around 1% in trade.
Very interesting, the stock doing well, but it's done very well for itself over the last 12 months as well, been an outperformer there as well. But time for a short break here on Midcap Radar. We'll get you more on the markets, and we put the spotlight on Mazgaon Dock, which is buzzing and how in today's trading session. Stay tuned, back on the other side.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high. We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Welcome back. You're still tuned into Midcap Radar, and if we're talking about broader markets, we have to talk about Mazagon Dock. What a stellar rally on that stock, not only today, not only in past 1 year, but since the time it has listed. It's crossed 1 lakh crore rupees in market cap as well. And in just last couple of minutes, look at that surge, Hormaz. What's happening here?
It's very difficult to fathom what's happening when you have moves like these. But indeed, and at the start of the session today, the high for Mazagon Dock was somewhere around 49.90. It has comfortably crossed that and has gone way beyond now. Almost 55 was the high that it made today. Now 1 lakh crore crossing market cap. It's now well above 1.1 lakh crore as well. So it's plenty of market cap addition. In fact, earlier last month, we put out a story that the shipbuilders, all three of them put together, have added 1 lakh crore in market cap cumulatively in 2024. This is the kind of moves that you've seen. And Mazagon Dock, the multi-bagger that it has been, it had an IPO in October of 2020. The IPO price was 145. So 145 to 55, almost 3,300% and counting for Mazagon Dock. That's the kind of moves that we have seen. And the stock, it's not just this year that the stock has moved. It's been a steady mover all through and through. In 2022, it was up 185%, 23 up a similar quantum. And this year already 120% and counting. That number would change certainly as the stock continues to move higher. But on a valuation basis as well. Now, if you take a look at the valuation at current prices, now Mazagon Dock trades at around 41 times FY26 PE. And it's still lower compared to its peers. Now, Cochin Shipyard is already up 250% this year and counting. So it's trading at 60 times PE. Garden Reach has also doubled in the last 1 month or so. And that stock is trading at 46 times. So in comparison, Mazagon Dock is still cheaper compared to peers, but by no means is cheap in absolute terms for sure. And when you take a look at the only concern here for Mazagon Dock is that there is no float. It's very little float in the market because the government still holds an 84.8% stake. Now, it needs to sell an additional 9.8% to be compliant with the minimum public shareholding norms. And there have been reports doing the rounds for the last few months that there is an OFS in the works. It's been going around for a while now, these kind of reports. Now, in case this happens, they manage to sell that extra 9.8% stake at today's high, they'll fetch a cool 11,000 crore rupees, the government. So the stock continues to move higher. Shareholders are happy, the government happy for sure. And there is an OFS in the works, as the reports are suggesting. They are certainly bound to make a lot of money in that.
Yes, and it's very important for investors to be careful with this stock as well after the stellar rally. And no fundamentals for now backing it, the valuations being so expensive. So it's just that caution we would put forth because that stock has already seen stellar rally, as Hormaz pointed out, 5,500%, 3,300% from its IPO price. So that's a Mazagon doc. Let's now talk about the chemical space. Now, we've been talking about how global shipping rates have started rising again. And this is something which has been hurting exporters, mostly because of the Red Sea crisis. It has inflated expenses for both exporters and importers, but the IFL says that import substitution will now play an important role because the inflationary trend in product prices which are imported will make domestic manufacturers more viable, more attractive in terms of pricing as well. Companies that are engaged in import substitution in the chemical space, they will benefit from rising freight costs. Now, we've seen a lot of prices rising in terms of chemical prices. So, they have done a scenario analysis that if there is a 10% increase in PVC spreads, Chemplast would benefit 23% in terms of earnings. If there is a 10% increase in ammonia prices, Deepak Fertilizers will see a gain of 18% in earnings. For Archean Chemicals, it's bromine, which is the main product. If that price increases by 10%, it will be an impact of 9%. And if phenol spreads increase by 10%, Deepak Nitrite would benefit by around 10%. They say pricing of a lot of these bulk chemicals, it has increased. So while bulk chemical prices increase, some of these commodity names will do really well, the ones that I just mentioned. And there will also be good import substitution opportunities because the domestic manufacturers tend to benefit. So while exporters will see some pain, there could be some benefit for domestic manufacturers, and that is what IFL is highlighting now.
Chemical stocks been in focus over the last month or so, and they continue to be as the recovery starts to come in. And a lot of these names who've been underperformers for a while now. But moving back to the markets, then earlier we spoke to Ramdev Agrawal, the chairman and co-founder of Motilal Oswal Financial Services, who believes that the market could possibly double from current levels in the next 5 years. Listen into excerpts of that conversation.
Year after year, for 44 years, I have seen this market growing at, I didn't know that